Welcome to India Global Forum, where India meets the world and the world meets India. Hear from the most dynamic business leaders and technology disruptors as they share their insights and secrets of success. Meet and network with the most influential, most innovative, and the most enterprising. India Global Forum is the agenda-setting platform. Visit www.indiaglobalforum.com.
Morning, everyone. Welcome to the Founders and Funders Forum. How are you all feeling? Bit of energy, bit of energy. How are we feeling? Good. That's the sort of audience we like.
Good spirit, right?
Good spirit. I'm Mark Barton.
I'm Edie Lush. Great to be here with you. Second year in the UAE.
First year in Dubai since 2015.
For you.
For me, 7 years. It's changed a little bit, but it's looking fantastic. Lovely to be here. Lovely to be at the India Global Forum, where India meets the world and the world meets India. First big global event for India since taking over the G20 presidency. By the way, we want you to get on social media, hashtag IGF-UAE, and do join the conversation at IGF Updates. Somebody has already been here more than 24 hours. How was yesterday in Abu Dhabi?
It was fantastic. That's right. We were in Abu Dhabi yesterday looking a lot at climate, technology, and here we are in Dubai, the world's gateway. Fantastic to be with you. I was never here with you at Bloomberg when we were at Bloomberg TV.
But you were here a long time
ago. I think it might have been about 20 years ago.
Right.
Can't stand it. We, by the way, are the charm offensive. He's charming. That makes me offensive.
Not true. So not true. I have to disagree with that.
But it's fantastic to be with you here with our live audience here in Dubai. And of course, streaming live around the world due to our media partners. A massive thank you to them as well. NDTV, BQ Prime, Daily Hunt, and Gulf News. So Mark, I'll let you get on with it.
Should we get the show on the road? You're supposed to say yes. Let's get the show on the road. Let's start this up. Tech Winter 2022, end of the good times. We'll see ED in just a few seconds' time. Right, let's bring up Sanjay Nair, who is founder and chairman of Sorin. Big round of applause for Sanjay. Founder and chairman of Sorin. Former chief executive KKR India. Sanjay told me that he has 40 years experience in the financial services industry. I've got about 26. 40 means he's just that sort of level above me, but he's going to share the experience with us for about 5 or 7 minutes, and we're going to introduce the panel. Sanjay, great to see you. It's called Tech Winter 2020. I mean, it's cold in London, where I flew from yesterday. Are you feeling the chill? Are we in a tech winter?
Well, I think we are. Literally speaking, we are. But as they say, there's always a spring after the winter. So I think we are on the corner. I think there's a winter, no doubt. But I think look at what's going on. I mean, the pandemic is behind us, and there are lots and lots of positives. The world is open, travel is up, hospitality is booming, people are traveling, and I think to that extent, it's a pretty positive time. But at the same time, there's quite a bit of uncertainty. I don't think I've seen a world that's that uncertain, with inflation, with recession, with the war. So it's a pretty interesting time, and a lot of businesses are getting disrupted.
Yeah.
In a way, it's a winter waiting for the spring. It's going to be a pretty interesting spring.
When do we get a feel that the spring will be here? What are the signs, Sanjay, we need that are going to give us a sense, oh, spring's around the corner?
Well, I think the traditional answer would be, look at the capital markets. I don't think that's what my answer is going to be. I think we got to look at some very interesting entrepreneurs who are solving real world problems, and they get funded very responsibly and very sensibly. And you see some great business models emerge, and some of the existing ones get refunded and funded all the way to the home run. I think that's when you say that the spring is around the corner. And I can tell you the innovation, just talking to a few of the folks sitting here who are going to join us, the most creative business models solving real problems for the mankind. And in these times, I think you're going to find some very interesting business models. So let's see, responsible funders, responsible founders, good successes in a very quick succession. I think that's when you declare that the markets are back.
What are responsible founders and what are responsible funders? Let's start with the founders and we'll talk about the funders.
I think we start with the funders first.
Start with the funders.
They were the ones who were slightly irresponsible. No, I think, look, from a funder's point of view, I think the experience the investors have globally is immense. So I would say the most important thing is to learn from the mistakes and to have an atmosphere with the founders of shared learnings, lots of communication, and lots of collaboration going forward. I think if they play that role, I think you're talking of a really responsible behavior by the funders vis-a-vis the founders. I think as the founders are concerned, I would say not to get carried away with the swagger of money that's egging you along all the time to just grow. I would say sustainability of the business model, cutting out hobbies, having a path to profitability, but yet keeping an eye on innovation. I think that's key. I don't think they should become traditional models. The real business models that are innovative in these days, but not to get egged along by investors, to have a sustainable business model. I think that's the responsibility the founders need to play. But look, together, I think if you have a climate of shared learnings and responsibility and responsible behavior, which is not that difficult, by the way, I think this is a recipe for the spring.
Yeah. And India, how are things? How's the macro backdrop? How's the entrepreneurial backdrop right now?
I think India is going to be the hub of innovation. Frankly, just look at what's happening. This government has done in the past 7-8 years in terms of the impetus towards digitization, democratizing consumption. I mean, some of the things that we have in India are probably par excellent and probably the flag bearers of the world. I would say the 1.4 billion, 1.3 billion population, even if 20% is consuming the way you think they should be consuming, the new trends, I think it is the place as a hub of innovation. Lots of capital available. I think this theme that there is no dry powder is totally wrong. There's a lot of dry powder. You have new pools of capital emerging in India, the local institutions, local family offices, besides global investors. There's no dearth of capital, right? I think it's just about finding the right opportunities and backing them. And I think it's at this point in time when the winners will emerge. I think that is the key. And there is no better ecosystem, I think, than India, which is positioned to encourage smart founders, capture a massive market. Only two things. I think the founders in India have to look at business models that are real and really solve Indian problems in the Indian market, Indian size, Indian pricing, okay? India's a bit different. And I think that's key. And second thing is that a lot of global models will come out of India. And I think we're going to see more of those. And again, we have a few of the colleagues here who will talk of that. But I think India can be a hub of innovation, not only for the Indian market, but also for the global.
Yeah, we're going to be discussing lots of that throughout the day here today. Tell us about Sorin. You're an early stage tech fund. What problems are those companies you're investing in solving? What are the types of company that you're looking at right now?
We just started, guys, there's no plug for Sorin here. We just started. It's an early stage tech fund, Series A to C. I've just done one investment. I think right now my bigger problem is I'm competing with other VC funds to put money to work, so. But trying to be responsible.
Yeah, trying to be responsible. Let's get our other panelists up. Great first section of this conversation with Sanjay. Abhimanyu Munjal, CEO of Hero FinCorp. Please come up. Saurabh Garg from No Broker, the co-founder and CBO. And Gaurav Biswas, founder and CEO of Trucker as well. To elaborate on everything that Sanjay says. Maybe they disagree, maybe. Let's get an argument going. Let's get a bit of a real feisty conversation going. Abhimanyu, great to see you. When I met you outside, you said tech winter. What is a tech winter? So tell us, what is a tech winter? Are we in one? Are you feeling the chill?
I think a tech winter is a massive road bump, right? It's just a massive road bump, and there is spring, like Sanjay says, after the road bump. Businesses are built over decades. You can't really say it's the end of all tech companies in 2 years. 2 years is a very, very short span. So This is just a road bump, and I'm sure the entrepreneurial spirit in most of the founders and of the tech founders will take us through this. But that animal spirit has to be there to say, I'm going to build a sustainable business. I'm going to build a business which has got right unit economics, right? If there is the right unit economics, there's lots and lots of pools of capital. Like Sanjay said, you'll be surprised that within India, the domestic pools of capital that are now investing, which were never available earlier. Family offices. In fact, some of the tech founders' offices, which are sitting there, which is smart money, is there to be actually captured. And so I think it's just a massive road bump. We shouldn't get disheartened. It's a part of building a business. It's a life cycle of a business. It's like a child falling down, will get up, learn, and I think be stronger in the future.
Yeah. Saurabh, are you sensing that as well? This is a roadblock, but those with you've got animal spirits, I can feel it. Those with animal spirits are going to thrive in this sort of environment.
Actually, I have a slightly contrary view. I think this is a great opportunity. This is what I would say is like a detox. So when I was a kid, and if I used to overeat and I used to have a upset stomach, my mother used to make me fast for a day. Have only fruits or have only simple food. I think this is that. We had a lot of excesses which we have seen in the last couple of years, and this right now is a great opportunity to correct that. And if you just look at what happened during the last year, because there was so much capital available, the capital was free, the talent becomes so expensive. If you have to advertise, it was extremely expensive. The impression cost went up. Even when you're speaking to the customer, if you're, for example, watching a match and there are 3 companies saying that, why don't you buy cryptocurrency? 4 companies saying, why don't you buy, stocks? 2 companies saying, we are running a sale, don't invest, splurge. So I think it was so difficult to get customers' attention. So I really think this is a great opportunity for us, for the entire ecosystem, to build responsible, sustainable, profitable companies. Because it's weird that companies which are 12-year-old, 15-year-old, are not profitable, don't have a path to profitability. It's something which is clearly very, very weird. So I really think that this tech winter is that detox. It will help us purge or cleanse what was excess and bring out better and stronger companies.
We need to purge, Gaurav. We need to detox to relaunch ourselves. Is that how you look at it?
I think some great points came on so far. I think I want to start with one point that Sanjay made, that you have to continue to be innovative. You don't want to become traditional, but there needs to be some unit economics was brought up. So I think there was that toxicity that was coming both from young founders, first-time entrepreneurs, or maybe they had a stint with a tech company and they got into developing a product, but then they were educated by the ecosystem that, hey, it's okay to not know when you will be profitable. It's okay as long as you're acquiring customers, but then at what price? I think so if there is a traditional element, I think there needs to be a lot of education in the entrepreneurial ecosystem. I think VCs should also invest into seeing that some of the younger founders, or somebody's an engineer, but probably doesn't know what is EBITDA and how is that different and what is depreciation. So some of these things, I think if there was traditional management, that at the end of the day, your fundamental objective is to create shareholder value. And even if you're burning at a certain price to acquire growth, is that really adding to some data and future scale up unit economics that's making money? A lot of founders did not do these kind of analysis that, okay, I'm going to lose money, but then if I stop losing money with this segment of client which has been with me for so long, does he still stay with me? Does he still give me the margin? If the answer is yes, then okay, then what is making sense is working. And this is different for every different business, but I think unit economics and fundamental of creating shareholder value, I think that's the detoxed technology startup kind of thing.
Sanjay, what's your advice? You're a startup, you're sitting in the audience, you're looking to you four gentlemen for advice. You want to set up in these turbulent times, as you say, opportunities during difficult times. That seems to be the buzzword that you four are saying. But what's your advice? You're a startup. We're in a recession. We're in a tech winter. We're approaching recessions right across the world. What would you say startups need to do to thrive in this environment?
I think there's got to be firstly a little bit of sense of humility. What at least I'm finding in my early experience in this world is that when we speak to founders, they seem to feel, because of the earlier rounds, that they know it all. And I think that's number one. They don't know it all, and there's no harm in sitting with experienced investors who are global in nature. Some are very big local investors, like Abhimanyu said. Sit and discuss the business plan and the reality, okay? What can go wrong rather than only what can go right. Secondly, I think, talking of India specifically, people misunderstand the big target market in India that is immense, okay? To really, what is the real target market at the price point at which you think you can make money? And frankly, that is much smaller, although it's still larger than an average country in Europe, but it's still smaller than $1.3 billion or $1.4 billion. So I think that I find is a very common footfall that these people make. Third, I think, is that they seem to be in a kind of a attitude that, look, I've got lots of guys chasing me, and it doesn't really matter, is it VC1, VC2, VC3. I think the quality of your partner choice that you have to make as a founder now becomes equally critical. And I'm sure there are 6 VCs ready to fund, but who do you really jive with? Where are the culture and values going to really resonate? And who can I look to as a startup founder to go and have a chat where I'm going wrong or going right and I need more support or more help? I think asking for help, not knowing everything, and getting the target market cynically right, I think are the 3 things I would advise them.
Yeah. Humility, quality of partner choice. Abhimanyu, what would you add to that? What advice would you give startups looking to raise funds in this very tricky environment?
So I would say, don't go out if you don't need the funds right now, right? But try and bootstrap, cut your expenses. And one of the things Sanjay said earlier is very important. Quit your hobbies, right? Be focused on your core business and don't get distracted. And your business model, this reminds me of something what one of my mentors has always told me and ingrained in my mind. Top line is vanity, bottom line is sanity, cash at bank is reality. So really focus on cash at bank.
Say that again. I love that. Say that again.
Top line is vanity, bottom line is sanity, cash at bank is reality. Right?
Big round of applause.
As they say, it doesn't count till it jingles.
Cut that, shove that out on social media, boom.
Yes. So I think it is very critical that you focus on the cash at bank. It's very easy to get distracted, to get seduced, to say, hey, let's do this, let's do that. But just keep your hobbies out of the way today. Focus on what the vision is, what your target market is, what your unit economics is. And I think you are home. I'm very confident of all founders. Me being an entrepreneur myself, I started my business 10 years back. These are road bumps. We are adaptive. We have to really learn and get up and use that experience to put in play for the next spring to come. So I'm pretty confident that the founders will learn. It's a good thing to go through pressure points, and this is one of those. And a lot of good models will emerge from this.
Yeah. Before I go to Saurabh, by the way, ladies and gentlemen, in a couple of minutes, I'm going to say to you, time for you to ask questions. We want to get you involved. We want you to be engaged throughout today, throughout tomorrow. So I'll ask whoever wants to ask a question, tell us who you are, where you're from, microphone will come to you, and be brave. We want to get you involved today, so please do ask us questions. Saurabh, your company, first prop tech unicorn in November 2021. You've got some great advice to share and partake for those of us who are thinking of launching in this difficult environment. What are the 3 bits of key advice you give to those who are looking for funding right now?
Sure. So I think that look for good companies who are solving a real problem and trying to make profits at some point of time, because that's what the company exists for. I think the capital is available. There are a lot of large funds in India who have raised money, whether it's Sequoia, Elevation, Accel, everybody has money. There are new funds coming in. Sanjay, there's a fund, Morphosis in Dubai, which is there. So I think capital is clearly available. Anyone I speak to across the world, they believe that India is the place to invest. Clearly that thing is there. But I think what is important is it's going to be challenging, and actually it should not be easy. It should never be easy. The challenge which you go through, that molds the company's DNA. So I mean, I'll also give you my example. When we started No Broker, we had a really tough time. For almost a year, we were not able to raise money because everybody said a real estate transaction without a broker, never heard of. It can never happen. A lot of people said that a model like this doesn't exist in US, doesn't exist in China. Why should this work in India? But look, the important thing is that it's a very India-specific problem. It's a made-for-India solution. And the markets are very, very different. So clearly, there was a big gap, and I think we went through a lot of tough time to finally raise money, but we just needed one person. Secondly, I think this being highly optimistic to the point of irrationality, I think that is very important for an entrepreneur. Because look, if all the data is available, if all the data shows that something like this should have been solved, it would have already been solved. A lot of this has to come because you have that belief, you have that optimism, you have that perseverance. So I think that becomes extremely important. And thirdly, I think once you've raised money, you have to create viable solutions. I've seen multiple times that companies start something, they're trying to find a solution, put a couple of people doing it manually. The answer should be that once you find some kind of solution, you make a product or tech solution to that. But I've seen that 2 or 3 people become 20 people, revenue keeps coming, they make it 200, the next answer is actually 2,000 people. They'll never be able to do it with the help of technology. And that kind of a solution is very, very difficult to make profitable. And the entire reason you're a tech company is because you're saying, I'll make a product solution, not throw people on the problem. So I would say these are the things which people should be very clear about. And I think one thing which I found many founders not looking at, that apart from building products, one of a very important part of founders' responsibility is capital allocation. And I think that is highly missing. So where should you be allocating your resources and capital? That they should be very clear of. Of course, there'll be experiments that they'll do which will fail, which will not give results. That's okay. But you can't keep throwing capital behind something which you know is not going to give returns.
Brilliant. I love that. Be optimistic to the point of irrationality. We're going to put that on a T-shirt. We're going to sell them for $20 each. I get half the profits. You get half. There you go. Gaurav, 3 nuggets.
I think most importantly, I think cash is king right now from a tech winter perspective. I think that's most important, that any startup, whether you're at early stage, in a good stage, late stage, you all have different kind of burn rates or capital requirements. Just be prepared for not being able to raise money. And I think that's a test of all of those things, unit economics and all of those things. So if you can remain small and surviving, if the idea deserves to really put your energy behind. Second, I think traditionally, but do not lose the innovation part of it. You need to have scalability. You need to be able to do cheaper than what the current process is. At the same time, do not over-engineer, because you don't have the money right now to over-engineer. Solve the money. Create as much tech that you can afford as a startup. Again, based on different stage. And the last, I think, important thing is, prepare constantly to hustle. I think as startups, this is tech winter, you're not raising money, but that doesn't stop you from meeting your clients. That doesn't stop you from meeting your suppliers. That doesn't stop you in drafting multiple partnership agreements, which can all get funded, maybe in 2 years' time. So don't waste this time and be in depression of I can't raise money, so I can't grow. Continue the hustle. I think the hustle is what, separates a lot of the execution from lack of execution.
Yeah. Very true. Right, I promised. Hands up. Come on, who's brave? Otherwise, I'm going to... Yes, gentleman at the front. He was first. And then lady behind. Lady there, gentleman. Too many questions. There can never be too many questions. Gentleman at the front first, then the lady behind in the blue, and then we'll try and do the others as well. So please be
Yeah.
Go for it.
My name is Kamal Puri. I run a group called Skyline International Group. Thanks for the lovely knowledge about startups. See, there are a few factors which I have observed through my experience of 20 years of private equity, etc. Especially in technology, people are very good in their technical mindset. But when it comes to marketing, operation, other aspect of the business, they lack that. If I look to the model of SoftBank, always two things I tell all youngsters. First, when you are raising a capital, see to it the capital from where you are raising, what type of business they are. Are they operating only in India or all around the world? If your product can fit into that, make it sure that you spread very fast. As the gentleman said, the market is getting crowded in every field. Today, whether we talk fintech, we talk medtech, we talk agri-tech, because every third person is doing. But the future is in three areas only. One is AI, deep learning, quantum computing. Future lies in only these three technologies which will change the world.
And let's have the question.
My question is, do you agree that when any startup is starting, that he should also take expertise of a different professional like finance, marketing, and others, etc.?
I think let me take that question as a startup. You're absolutely right. This is what I also was saying, that sometimes because technology does not require tons of years of experience to create a product, a very young guy, a young coder can create a product which can solve problem for masses. But then he is not the right guy to really structure his company and put financial prudence and checks, or So absolutely, I think, and that's where funding enables that. I think that's the whole idea. A seed round should enable you to get access to certain kind of people, advisors, and all of that, and then you graduate to a Series A and a B and C, and you add different caliber of people who then scale the business. But absolutely, I think that's where VCs also play a strong role. So I think be selective about the VCs. A lot of times there are funds who will give you the money, but they don't give you the time or advice. So value things much more than money that comes with certain VCs.
I want to get to another question. Lady in the blue. Yeah. We'll just do one to one really quickly. We've got about 2.5 minutes. Sure. And keep the questions shortish so we can get as many as we can. Thank you.
Hi, my name is Shraddha. I'm a market entry specialist. I help companies navigate new markets. So just quickly, this build in India model, the pricing, the way it works in India, do you think it's becoming a hindrance for Indian companies to go global? What would you tell Indian companies who have plans of sort of global transitions? What do they need to know to move from India to the global market? What are the segments that these global leaders from India are going to come from? And what are the companies right now that you can name you think can become global leaders, like the likes of Facebook, Google, obviously the politically sort of controversial, but Alibaba, Tencent, like that?
I think we should have people who have built business models in India and taking it overseas, yeah.
Right. So I really think that there'll be multiple areas in which these companies can expand. Look, Indian market, of course, it's a very different market, but there are a lot of other markets which are very similar. There is Latin America, Middle East probably has some similarity. Southeast Asia is a similar kind of a market. So I think a lot of these companies which are building for India over a period of time will also go to these markets which have kind of similar idiosyncrasies. And that's what we at No Broker also believe, that some of the things which we're doing at No Broker, we should be able to take it to these kind of markets and build a global company.
I think one area where Indians can do really well, having cracked the Indian market, is someone like Abhimanyu's business on consumer finance for financial inclusion. India is a market where financial inclusion is an absolute must just for the progress of the country. Maybe,
Yeah, so I think if you see the Western world's technology when it comes to fintech, banks, they're very, very archaic. Yeah. But you see the stuff that Indian banks, Indian financial services companies are doing is best in class. Yeah. Hence you see a company like Policy Bazaar here. Hence you see Nika. You see a lot of these Indian companies built in India coming out. So earlier today we were at a breakfast roundtable and the discussion was it's not about a cost arbitrage. India is not about a cost arbitrage anymore, but it's about better quality skills, better quality product which is being made. So the narrative is changing, right? India will build better quality businesses and better quality skills will be available rather than a cost arbitrage. So I think we have to move away to say to do business in India is cheap. But we say to do business in India and products which come out of India and services are better and are best in the world. I think that's the narrative, and fintech would be one of the leading technologies, and we are already seeing it.
I think we've got time for one more question.
Saindev, trucker. So we have seen the tech summer and winter play out multiple times over the last 25 years. So this time around, would we envisage a paradigm shift in how VCs look at startup valuations?
Well, I hope so. Guys,
yeah, I think
please.
it is already happening. The way that the VCs are now evaluating the companies, they are talking about what is the business model, when will you start making money, when the cash flow starts coming. So I think that change is already visible.
And I think as founders, this is the time that you should not be too worried about valuations and terms. If you're getting the money, take it, because you're going to build exponential value. A little bit of dilution today is not going to be effective, it's not going to hurt you, but the amount of time, like he said, it took 1 year to raise money. My last round took me 6 months. Today, I'm sure you go in the market, it might take 6 to 12 to 18 months. The amount of time that you'll waste in doing that, rather than spending time on building something and creating value. So I would say just leave value on the table for VCs and any other pools of capital available.
Although having said that, I think we are seeing a few funds still do more and more internal rounds, trying to make sure the companies have a longer runway, and maybe the valuations are still a bit sticky and not correcting. But look, who are we to opine whether they're right or wrong valuations? I think the next panel should be the right one to ask this question to. So Shalendra is waiting to answer that question. So
let's introduce the next panel. I want a big sorry, Jen. We will have more questions throughout the day. Please keep being eager and keen. We love when you engage. Big round of applause for the first panel of the day. Sanjay, Abhimanyu, Saurabh, and Gaurav. Absolutely fantastic, gentlemen. You can go off stage. Next up, Edie's back, navigating turbulent times. You may come to the stage, Edie, and your panelists.
I'm back. It's fantastic to be here. Welcome to this next session. It's going so well here at India Global Forum. I think you have to sit in that one. That it's hard to imagine what a turbulent world it is out there. So buckle up for our next session. Masterclass on navigating turbulent times. It is a challenging time for many people, including entrepreneurs. And to help us understand, we've got 5 fantastic founders, 6 in fact, who are going to come up and share their experiences of growing businesses. But to set the scene, we have one of South Asia's top venture capitalists, managing director. I'm beefing you up here. You've got a lot to live up to, Shailendra. Managing director of Sequoia India, Southwest Asia, and Singapore, Shailendra Singh. Welcome.
Thank you. Thank you. I'm very honored to be here.
So, turbulent times, most parts of the world. But I think you've got a slightly different view on this. What are the founders that you've invested in, that you've been speaking to, say about what life is like at the moment?
Yeah, and first, thank you. I'm very honored to be here. Thank you for having me on stage. The word masterclass is scary, by the way. Nobody knows, okay? on building a great business, an enduring company. There's no masterclass possible for it, but I will try to thank you for pointing in that direction. My view is, and maybe I'll start with an anecdote. We recently went through what we call a portfolio review inside the building at Sequoia. In our portfolio review, our finance team has normally assembled financials of hundreds of our portfolio companies in the region, in India, Southeast Asia, and then we go through it with about a couple of dozen of us, and it's a 2-day exercise where we review every single company, and the sponsor will say, hey, how are things going, and let me give an update. And I went in a little worried, thinking like, hey, I'm going to hear a lot of bad news this cycle, and discover that a lot of companies are missing plan and so on. And then when the 2 days finished, we were like, hey, where's the downturn memo? Like, looks like founders didn't get any memo that there's any downturn here. Now, so I think the demand side.
That's interesting.
Yeah, well, they did get the memo that they should cut costs and so on, but the demand side is very strong in India and Southeast Asia. So, I think what we realized is, there is a slowdown in the funding environment, but there's no slowdown in the business, the pace of company building. And most companies are actually executing pretty strongly. And then if you step back, our view of the world is, in bull markets, the whole world tends to focus on proxy metrics. So raising a round of financing can be seen as a sign of success, or raising a lot of money can be seen as a sign of success. If not a sign of success, it is at least considered progress, because sometimes I'll ask founders and say, hey, why are you raising more money? You just raised 3 months ago or 4 months ago. And they'll say something like, and if I may use a Hindi phrase and I'll translate it, they'll be like, sir, acha lagta hai. Or my team feels happy about it. It's a nice feeling. And so a lot of the rounds that people raise are not that they really need the money, or that they really badly, because if a company just raised 6 months ago, how come they need capital again in 6 months, or 3 times in a year? So a lot of what we saw was people getting drawn to these proxy metrics of success or progress. And such markets make the conversations with founders and boards super refreshing. So every founder now is focused on growing their revenue. They're doing fewer things. Inside the building, they're more focused. They're focused on margins, on unit economics. Many are trying to get profitable. Many want to do IPOs. We were fortunate. We had 10 IPOs between last year and a couple, 8 last year, a couple this year. And so when companies are getting ready to be public, then clearly they have a plan to be an enduring company. They're planning for decades, and it's not a short-term decision. So I think the best founders are looking beyond a few quarters of financing pain and looking far out and trying to build a solid business. And so that's really what I see is going on. And we ask ourselves, why is this a bad thing? This is terrific.
So does that mean you'd prefer to be in this particular kind of economic climate, Shailendra?
Well, I think there'll be market cycles. I do think such cycles, founders and VCs alike, they learn more, they apply themselves more, they make more real progress. That progress often results in valuation bumps in bull markets. But the real progress gets made now in such times. And so, we don't mind, tough cycles, and we think founders and companies will become way more resilient and solid because the markets force them to. And again, I think if founders have to raise their game in a tough market or economic cycle, why is that a bad thing?
So what's your advice for people who are looking to start a business at the moment, for example?
So I think it's a terrific time to start. In fact, if you think first principles, if you were not worried about a few quarters, I always ask founders the following question. The company that you're running now or planning to start, would you consider doing this for 10 or 20 years? Most say yes. Most say, yes, this is my life's work, or that I really want to do this for the very long term. And if that's the case, India will have, circa 7-8 trillion of GDP over the next decade. And we're going to have humongous companies.
Give me a prediction.
Sorry?
Give me a couple of predictions. What are we going to see over the next few years? We've seen so many unicorns being born, becoming decahedrons or whatever you call them. But give me your view of where you see India in particular going.
Oh, I think we'll have dozens of billion-dollar revenue companies. And probably in 10 years, more than a quarter of India's 100 top listed companies will be tech companies within a decade. There's a few now in the top 100. I think the current number might be 4 or 5. But I think a quarter to a third of all listed tech companies in India will probably be tech companies. And so, it's, in my opinion, and it's a crazy privilege for us to partner with the founders who are going and building these companies. But I also speak to founders and I say, look, it's a crazy privilege for people who have a chance to build in such an environment where, you have these immense tidal waves that are going to take you along. And, in these turbulent times, if you will, while one resource, which is capital, is a little constrained, other resources are actually quite abundant. So the quality of talent you can hire, employee churn goes down, teams are way more motivated and inspired and aligned with each other. And so I think a lot of founders are actually really enjoying building. And they're sort of, trying to say, hey, I'm up for the challenge.
All right, well, let's see what those founders, we've got a few waiting in the wings. So Shalinder, I'm going to put you in the front row.
Okay.
We're going to come back to you, get you to ask these guys a question. I'm also going to get the audience to ask a couple questions, but we'll see. Let's give them a round of applause. Right, let's bring up our founders. Please join me on stage. Oh, you left your phone. Shall I answer it for you if it rings? Great. Have a seat, gentlemen. Round of applause for them. Right. So we've got about 33 minutes. I definitely want to come to you in the audience, so get your questions ready for these guys. But first, I'm going to let you introduce yourselves. We'll start here. Ashish?
My name is Ashish Jina. I'm co-founder of Jumbotail. We're India's leading food and grocery wholesale and new retail platform. We're building for the future of India's food consumption. Lots of brands going to get built. We believe they will go to consumers through the Kirana ecosystem that we power. We have over 200,000 Kiranas all across India at this point. We run an e-commerce marketplace. We do logistics. We solve for fintech. And we also empower Kiranas to actually transform themselves into modern convenience omni-channel grocery stores, which is what we believe the vast majority of Kirana stores in India and actually large parts of the developing world will look like in the next decade.
Interesting. All right. Mohit, you're wearing your product today.
Yeah, so my name is Mohit. I represent a company called Ultrahuman. We make biowearable devices. Biowearable devices, we believe, are the future of health and everything about fitness. The one I'm wearing on finger essentially tells me more about my body, how my metabolism is essentially shaping my performance and my cognitive thinking and my recovery and my sleep. And I have another one on my arm. So essentially, we make these biowearable devices that can tell you more about how you can actually improve your life, improve your health, and of course, improve productivity and of course, be better humans in the end.
Fantastic. Sriram.
Thank you. Guys, we're working in this very interesting space of creator economy. So we are a MarTech platform. And so we strongly believe that anybody who has any influence, whatever social media channel or wherever it may be, should be able to monetize that. And we're building a platform that enables them to unlock that value.
Fantastic. Dr. Naveen, you've been answering a lot of questions lately about the crypto world. Might get one or two into you today.
Thank you. Hello, everyone. My name is Naveen. So I was a professional athlete. I represented India, and I was in Swiss Olympics team. And as a transition, now I'm a CEO and co-founder of a decentralized tech team, so fully in blockchain and a part in crypto too.
Fantastic. And Nick?
Hi there. So great to see so many of you after last night's events. Made it through. My name's Nick Horowitz. I'm co-founder of Founders Makers. We're a creative partner to some of today's most exciting scale-ups, challenger brands and major brands. And we work with them to both what we call scale creatively, as well as challenge kind of the incumbents out there in their industries so that they can continue to grow and scale.
Great. All right. Well, let's get a few of you to answer Shailendra's challenge. He says it's a fantastic time to be building a business. What do you say?
So I couldn't agree more than that.
Okay.
So this is my fourth rodeo. And so as part of the founding team of a company where we didn't raise any money, and we actually listed that company on the London Stock Exchange for $4.6 billion. Then I started two other companies where I never raised any money or debt, and successfully exited both those companies.
Was that in a different economic time than currently?
So this was the period from 2002 to 2022. So it's about the last
Quite
two
a few
decades.
times.
So we've seen quite a lot of cycles, ups and downs. And I strongly believe that these are the times when they say tough times create strong men, and strong men create great companies. And so I think this is a brilliant time for people to really understand that in the absence of capital, you have to really understand that there are weapons which are much more stronger than that, and you will need to really understand how to unlock value other than just using capital.
Interesting. Okay. Naveen, what about you? Blockchain, the right time to be doing it?
Well, in the market, I think is the worst time since the start of the blockchain and the crypto movement. But I think at the moment, it's a very right time to build. We should focus on building. And the projects which will now raise funds with good strategic funds or good VCs or good strategic partners, I think they're going to do very, very well.
And your personal experience at the moment, how is it? You answering mostly questions about FTX?
No, I'm in no capacity to answer those questions. But my personal experience is there are some very good VCs. So these turbulent times, at least in the blockchain market or in decentralized tech space, have kind of filtered out all the, I would say, not real projects and not real VCs. Because in crypto market, there is a lot of, sorry for my language, a lot of bullshit around. So this time, there are real guys or real VCs which are around, and the real guys who are building something. So I think it's a testing times and a very good times for a good project to raise.
Okay. Nick, what about you? Now, you're operating in the UK. It feels like winter there at the moment, and it really feels, when you read the papers, like we are in a serious economic winter. What's your experience? Are you also seeing, actually, does it feel quite positive? Less attrition, less churn, or is it a little bit tougher in the UK?
Yeah, we've definitely had some quite large landscape changes over the past few years, be that from obviously Brexit, the pandemics, Liz Truss, you name it, we've had it all. And I think, it's a challenging time for people in the UK, but I also think they relish the challenge as well. And whilst they're not kind of celebrating where we're at, there's definitely a sense that we're at an inflection point and that there are opportunities. And
what? For you, what are the opportunities do you see?
I think, so I'll just bring up an example of what we've done. So in our world, purpose has been a big buzzword for a couple of years, and everyone's been trying to have a purpose because it gives them that competitive edge, in the marketplace. And not everyone talks the talk and kind of puts that into practice. And we've seen that a lot with companies that want to be involved in the climate change space. So they want to be involved in climate change, but then themselves are not actually becoming net zero. They're not going towards it. They've got a plan, but they're maybe not delivering on it, or maybe not talking about it. So, we saw that as an opportunity to help them. And so along with Anuka, who's in the audience somewhere, who set up a company called Zeroism, we partnered with them to kind of set up this one-stop shop for helping companies deliver create policy, deliver on it, and then talk about it to allow them, to have actually that purpose at the heart of them and deliver on net zero and not be accused of greenwashing. So that was just a good example of kind of, I think the most important thing for me at this time is taking a step back and reflecting on your business and kind of reassessing it all from your priorities to your team, to your product, and then once you've done that and you've seen where kind of you truly are getting value, also not being afraid then to kind of take risks and to try new things at this time as well, and not being afraid to be uncomfortable in doing that.
Interesting. Now, Ashish, I wonder in the grocery delivery market if every day isn't actually quite a turbulent day. As somebody who uses a lot of online grocery services and more than one, and sometimes things don't always go as well as planned. Talk me through it.
I was going to say, I mean, every day is a turbulent day. We actually deliver to mom and pop retailers in India. So they're, as much as consumers are exacting customers, I mean, when it comes to delivering to somebody whose store and livelihood and, they're paying their children's fees, their rents based on these businesses, the expectation is actually even higher.
Interesting.
And I think we realized very early on that, because this is a very, very large market, $500, $600 billion projected to go to $1 trillion, it's going to attract a lot of people with a lot of capital. And so capital was never, the mechanism by which we believed we could build sustainable advantage. I don't think it is a mechanism by which most industries can build sustainable advantage. And therefore, we chose to actually optimize on service levels, convenience, reliability, trust. Those don't cost a lot of money, actually. And so we've built, at this point, the largest platform in the country in India doing this, with maybe a 10th or a 20th of the capital of other people. And I like to look at it as, these are opportunities to actually build businesses that are sort of climate proof in that sense, because you're focusing on the customer, you're focusing on what your retailers or your consumers really value. And that is actually, I mean, something that, transcends these seasons. And, if you build something that's extremely frugal and scrappy, these times are great times to be building businesses.
Interesting. Well, talk us through the wearables market at the moment. You work mostly with elite athletes, is that right? Or somebody like me who's a keen exerciser, but I'm not going to be an elite athlete anytime soon, sadly.
Well, all of us are elite athletes in our own way. We look at, when we think about our lives, we want to perform in one aspect or the other, right? So that is the aspect of the life that we want to optimize. Like for some people, it's cognitive performance. For some people, it's physical performance. And I think where all of this comes together is the fact that your health data for elite athletes or for everyone else has a lot to tell you. And obviously, the data for elite athletes is much more sensitive and they can use it differently. But for everyone else, I think this is very, very different as well.
And at the moment, are you finding that your customers still have the disposable income to purchase your devices, or are you finding the market tough?
I think health is a problem that progressively becomes a harder thing for somebody to solve for. Like literally our LTV is the lifetime value of a user, right? So, like if you think about it, say people have to live enough number of years to pay us back the CAC. But essentially what you're talking about here is that health has become a more of a complex problem for everyone else, for the industry, for individuals to manage over the years, given that there's so much happening around and it's much harder to manage health. So demand has increased. What's become harder is the people who are building for the demand. Obviously, what do you do if you have no money? That's the framework that you have to start with.
All right. I want to come to Shalindra. So can we get the microphone? Have you got the microphone? It's just being rushed to you just now. And then can I see if anyone else in the audience has a question? All right, so there's one back there. So Shalindra first. He's just here.
Maybe I'm still mic'd up.
I don't, can we turn on Shalindra's mic? Here, he's got a microphone here.
All right.
And then we've got one there and then a question here. Go ahead.
Yeah, I'd love to hear from you guys. How are the teams doing? Are you seeing, how's the culture inside the org? Are you guys liking this time from an internal building perspective? I think one thing that's a little bit underappreciated, in my opinion, is what transformation companies go through from the inside. Because when you're not focused on so much stuff outside and financing and growth and so on, and I think it'd be really nice for you to double-click, some of you to double-click on that, on what goes inside the building.
Okay, what's going on inside the building? Who wants to speak about that? Yeah, go ahead.
So, very good question, Sulan. Very good comment. I would say we started doing the introspection, that means looking into the team, and we changed a lot of structure in the team, and we got some new guys, and we just kind of get rid of the guys who were not so motivated. And when the turbulent times are there, you even see the conviction and motivation of the team inside, and you see who's there for long term and who's there just because you're riding the wave. So I think it filters out that also. Very good times for the team building part.
Anyone else? Yeah, go ahead.
So we have a team that is very, very different, right? We have people who are writing code, data, analyzing data, product managers, and then we have people who are lifting 50 kg sacks to put them into vehicles. And so I think this impacts people very, very differently in some ways and very, very similarly in other ways. I think people at different points in the spectrum, when they read a lot of news about companies laying off people, etc., there is obviously anxiety, and I think there's a lot of anxiety at times on people at the lower end of the economic spectrum, because if they were to lose their jobs, I mean it is a big problem, right? I mean, we're very fortunate in this room that there's enough disposable income, etc. So one important thing that I think we've had to consistently do is reassure people of the fact that if you're building a good business, if you're building a business with solid economics, this is actually a good time. But that message is not something that automatically transcends to them, and so communication becomes very important. We're doing this across 30, 40 cities across the country, making sure I spend a lot of my time over the last few months actually traveling to each of these locations, because this is not something you can do with people on a Zoom call. Like, you have to be there, you have to show people. This was the same thing during COVID.
And when you're there, is the feeling the same in whatever city you're in, or are there different areas of the country that have different attitudes?
I think for the most part it is a function of where in the economic ladder you are.
Okay.
But I think if you reassure people, if you actually focus them on the right things, the siege mentality is not necessarily a bad thing either, right? I mean, I think it coalesces people. They think about fewer things, and because it's existential in some ways, I obviously you want to reassure people, but at the same time you also want them to understand that companies are built to make money, and that's important. Yeah. And I think that serves us well. And then obviously there's benefits around having access to more talent at this point in time. People are, as Dr. Yu was saying, I mean, people are, you're very clear who's in it for the long term and who's not. And there's no passengers at this point. So I think that those are all good things, but you have to be very conscious around making sure we communicate very, very clearly about the goals that we're going after.
Interesting. Anything to add, Mohit?
Absolutely. I think one of the key things, and I just pick an example of a team member who just came back and said that when we do our KPI reviews, this person said that one of my KPIs should be my resting heart rate, because what this downturn has done is that it has actually lifted my resting heart rate. And that is pretty cool, because I mean, the resting heart rate is inversely correlated to the conversion rate, or in some ways, the amount of money you're making per deal. So I think the bottom line here is that it's important to pay attention to health in these times, because this is the machine that's actually going to do the hard work, right?
Yeah.
And external demand is increasing. Everything is amazing to build in this market, but then if the machine fails, everything fails.
Interesting. There was a question over here, and then we had one here, and then we've got a lady just behind. So just here, and then we'll bring the microphone around this side.
Hello everyone, my question is to both Mr. Singh, Shailendra Singh ji, and all the panelists. Yeah, and I'm Navdeep, I'm from New Delhi. So this time, is it not the time to look and ensure ethical business practices and regulatory compliance by all the startups? And my second question is to Mr. Singh, how the VCs play a role in ensuring regulatory compliance by the startups? Because we have seen a lot of run-ups to the regulatory, they are landing in troubles, be it globally, be it Indian market also. So what is your take about it?
Interesting. Okay, thank you. Go ahead, Shailendra.
Yeah, I think, look, every ecosystem, whether it's startups or large stage companies, I think for us to have a chance to build enduring companies that will last for decades, there will have to be very good governance. What happens in a young company is, normally, if they're trying to blitz scale or they're trying to scale very fast, a lot of innovators, young founders tend to be amazing innovators. They don't always like doing things which are boring, like compliance. like financial reporting. They think that's boring. They're like, hey, I'm an innovator. I'm going to build this magical world-changing product. Why do you want me to do the things that everybody knows how to do? And I think, so the way we think about this is a founder's journey is a journey from being a great innovator to eventually being a great leader, and then eventually being a leader of an enduring enterprise which has very high ethical governance standards, independent boards, internal and external auditors and so on. And that's a journey that founders have to go through. Now, transparently, some founders make that journey more willingly and more collaboratively with investors, and some don't. And I don't think that's unique to a region or it's unique to startups alone, but that's just the journey that everybody has to go through. Now, the good thing is public markets or late-stage investors, they really value well-governed companies. So companies that have good compliances or companies that do the right things are eventually rewarded for doing it. And I think when founders internalize that, we find that they actually themselves start to push to have great governance in their businesses. So at least our view is, look, this is a journey for all companies, us, all shareholders, the VC ecosystem, independent board members, folks who are in the industry who serve as independent board members in our companies, often are business leaders from the industry. Everybody has to work together to help groom founders from the great young innovator who's doing bold things to then eventually being a sustainable business leader with great governance in their company. So I think that's the journey they're on.
Okay, thank you very much. Yeah, Sriram, surely it's not boring, the light compliance.
Absolutely. No, this is a very interesting question that you asked. See, in the times of excess, right, you've seen a lot of people push the limit on a lot of stuff. So you've seen some of the advertisements that were done, right? So you can question about whether they were ethical or not ethical. And in the mad rush to grab market share, quite a lot of fundamentals went missing. And then you start getting creative to justify that marketing expenditure with some vanity metrics. And then you start going into another cycle. And I think it's times like this where it's very, very peaceful for companies who are thinking long-term and creating long-term value, because you're a lot more appreciated. And you don't have the pressure of that eccentric 21-year-old guy who just raised $100 million at $1 billion valuation, chasing you around the room with a kitchen knife.
Interesting. Dr. Naveen, anything to add?
Yeah, well, it's for decentralized space, it's kind of still wild, wild west. There are regulators all around the world who are trying to kind of figure out how to do the regulations. There are some jurisdictions which have started. There are some which have not started. But in the end, I agree with Mr. Singh. I think the VCs and good funds, they really like if there is a structure, there's a good governance, and there's a regulated aspect, even if it's a company which is into blockchain or decentralized space, and the crypto is something which is involved with it as being the native token of the chain, which will govern the chain itself. So I think in the blockchain industry, the next 3 years are going to bring a lot of regulations.
Interesting. We've got 3 questions here, so I'm going to get you guys to pass the mic back. So 1, 2, and then 3.
Sure. Good morning, everyone. My name is Dr. Harish Ahuja. I'm the founder and CEO of a company called India Go Solar, and my question is directed to Nick. Nick, I think you are solving a big problem in terms of scaling up an impact company like us. So I'll first share my problem and then expect a solution from you. The problem is India Go Solar is a solar e-commerce marketplace which offers solar and electric vehicle solutions with financing. It has 2 service products, 2 pure products, Now services, tech and finance, I'm making money. It's both EBITDA and PAT positive. In product space, which is more purpose driven, which you answer, it is EBITDA positive but PAT negative or PAT neutral, I can say. So when you assess a company like us to take them to scale up, what is your metrics to assess the purpose? What exactly you see the attributes in that purpose metrics which will help us to get a scale and funding and a global scale?
Interesting. What are the metrics? We're going to come back to you. Let's just pass the mic back. So one question for Nick.
So for all of them, a funding environment is very important for a good startup ecosystem. And
tell us your name and where you're from.
My name is Shraddha. I am a sort of advisor that helps companies navigate new markets from a non-financial risk perspective. So, it's different in different nations. In the US, for example, we work with medical companies, etc. They're funded by universities, which are less strings attached. In China, it's by the government. In India, it's a mix of both. You've got private funding and government now setting up. So we've heard a lot from investors. I want to hear from the founders. What would you want changed in the funding environment in India, for example, in the UK? What are the things that funders, investors, VC funds, etc., need to do better to help you build successful startups?
Okay, we'll get a couple people to answer that one. And then behind.
Hi, Neeraj Malkoti. I'm from Dallas, Texas. Exclamation creates communication campaigns to communicate with your employees during turbulent times. That's our key focus area. The question I had was, during this, what 2 or 3 global or market events you think will trigger the end of these turbulent times? If you could come up with.
Interesting. All right, we're going to get our crystal ball out. Okay, first of all, Nick, why don't you answer the question that was directed to you?
Sure. I think, normally I'd be paid for this advice, but I'll give it to you for free. It's not a wish-washy answer, but I think there wouldn't necessarily be a set metric for what you're talking about. I think that's be something normally we would work with you on in determining kind of what success looks like to you, but also appreciating that it's an iterative process, and what we often do is test out lots of using various tools, and depending on whether you're a business-to-business proposition or whether you're focusing on consumers, what's really triggering with them, and then testing lots of things rather than just throwing something at the wall and seeing what sticks, and then continuing to resource or building on what seems to work, and whether that's click-through or in fact people visiting your site, sales, that was something we work individually with each of our customers on. Do you have an example of something similar that you've come up with some metrics or some ways that have worked? Well, a lot of our work takes place in digital, and obviously there are so many tools through social media, through websites, through some of the companies that these guys run that allow us to track that metric and to kind of follow people's journey throughout. But I think that's the important thing. It's not just an initial metric, say an impact metric when you're getting people hitting your site. It's making sure that they follow through all the way down the line, and so it's kind of combining all those metrics. So important in the sale, because after all, we're all here to make money and to kind of to sell things. So that's the big one. But also making sure that, especially at the start, KPIs on the cost of getting a customer is a very important one for us. Making sure that we're not overspending, so that when you do make that eventual sale, it's actually been worth it at the end.
Okay, thank you. Now the next question was about what do you want different from funders? Now Mohit, I think you're raising at the moment, is that right?
Yeah, I mean, we just concluded the round, and so what do we want from the market? I think it's, on the contrary, I feel that these are exceptional times to build. There should definitely be much more capital available, because, I mean, yes, it's good to say like it's all end game and it's like everything is collapsing and it sounds fun. I think real disruption is going to happen only because companies will fail fast, and they'll teach the next generation of new entrepreneurs what not to do and what to do really well. And I think one of the learnings, potentially, the first time when I started a company, it was about like, how do I raise the next round? Always, right? So, downturn, how do I raise the next round? Whom do I meet? This time it's about, how do I save more money? Right?
All right. Anything you'd like different from funders?
Yeah, I would say more in the crypto and the blockchain space. My personal experience is I think these funding, I mean the big funding guys, they should, that's my personal opinion, no offense, they should have actually capability to technically vet a project right. You go to Mr. Singh, he's a CEO, he will send it to his technical team. There are a few guys who just look through the deck and it doesn't do the justification. For example, we build an infra project, a layer 1 blockchain, which solves a very fundamental problem of data management. You could have stored the data on the blockchain until now for the sake of security, but you cannot run queries, you cannot do the management of data. And every application, all the founders are kind of related, and all these guys will be related with the IT field. Every application you make, it's a decentralized or a centralized application, you need a database. Every database in the world at the moment is centralized. 47% hacks happen. We built a first decentralized database, which graphic user interface is so simple that a person who uses it doesn't even need to know that in behind there's a blockchain. And we are finding a hard time by the funders or the VCs just to understand what we are doing. It's very easy. A wrestler like me understands it. So I expect that the funding guys are much more smarter than me, they understand it. But maybe I'm bad in pitching. I think it could be the both sides, but I think a lot of big VCs from US to everywhere else the CEO or the CTO don't really individually look into project, they give it to the team. And in the team, there are individuals with different motives, or maybe, his girlfriend is upset and he just looks in the deck and he says.
Shailendra, got to stand up for yourself. Do you understand blockchain?
I do understand that databases are terrific businesses. And if you can come up with a new database, decentralized architecture, that would be pretty interesting to vet. Now, what we would do in such a situation is, we have multiple people in the team who are deeply technical. We also have a community of over 150 CTOs from the portfolio. And normally what we'll do is we'll call on 5, 6 of them to say, hey, can you do a call here, please? Or can you, help us vet? So I think most firms will, invoke, friendly folks who can help them vet if it's deeply technical. But we have several on our team, half a dozen actually. So let's chat offline.
Can I just?
Yeah, go ahead.
Just want to add one thing. I mean, it's not, we have not touched base with Sequoia yet, but the thing is, winning and losing, denying or approval, that's a part of the game we all have gone through. As a sportsman, you win and you lose. That's not, but if somebody tells you, oh, it's good what you're doing, but why somebody has not done it before? How do we know why? It's a fundamental thing. It's like, okay, if somebody has not done it before, I don't think you guys could do that. It's like, okay, but
Right.
So these things demotivate founders. It's okay, you do your due diligence and you can say, guys, we are not deploying any funds, which is okay.
Okay, all right. Nick.
I agree 100% with him, by the way. I think a lot of VCs are also, like I was saying earlier, they're looking for proxies. Has this been done before?
Yeah.
In another market and whatever. And I think the first principle question is not that. The first principle question should be, do I believe, is this a good solution? And it's great if it's not been done before. It's terrific. I found the first one. So I think, that would be the first principle way of thinking about it. So look, I have one piece of advice for you, which is, the good thing is you need only one believer in the world. There are thousands of VCs. So you might run into many who don't believe, but you'll also find the ones who do. And that's what you need. And the good thing is I think most founders who are building good things, they're able to find their believers.
I think I found one.
Nick, did you want to
Yeah,
come
just
in?
quickly, I think what you're both saying is support beyond just getting money, I think is really important, and having that.
Network.
Yeah, I think,
ecosystem.
we just formed a partnership with a company called Founders Forum Group, who do similar to this, and they offer founders, right through their journey support beyond just the money, because it's a turbulent journey for founders, especially young ones, and you'll need financial help at some point, but you also need legal help, recruiting help, you'll need compliance help, and so actually founders are looking for money that can support them beyond just that initial injection, so that the journey is smooth and probably as a result quicker.
Interesting. Okay, we're running out of time, so I can't take any more questions from the audience. I know that you've got your hand up, but I promise you're going to be able to ask them the question over lunch. But there was the question about searching through the crystal ball. What's going to happen that's going to turn this around? Does anybody want to have a go at that one?
Sure. See, I think we've seen these turbulent times come and go in the past, right? And
You've lived through a few building your
absolutely.
businesses.
So I think, as I said, this too shall pass.
Is there something you're looking for that might signal the end of the current turbulent time?
There are a lot of uncertainties right now, be it the war or be it the supply chain that's broken and, excess liquidity which still needs to be sucked out of the market. So I think these are pretty large problems. So it's difficult to predict what will trigger what, but the pain is still there.
Right.
I think, at least in my opinion, it's another 12 to 18 months of easing out this process that will start signaling the easing in the market.
Okay. Now, we've got, Shailendra, you can have 30 seconds, but I'm going to be strict.
I think there's a generational buying opportunity in tech right now, generational. Markets are very oversold. Yesterday, we saw a company called Coupa bought for 70% premium to their current trading price by a private equity firm. So I'm very bullish for whatever it's worth. I think we will see the markets turn faster than most people are expecting because tech is still, the demand side of tech is still very strong. It's weakened a tad bit for recessionary reasons and all that, but if you look at an absolute basis, we have outstanding tech companies in public markets compounding and trading very cheaply. So my view is the market sentiment will turn a lot faster than most people think.
Okay, we've got less than a minute. I'm going to get a couple of you. What's the piece of advice you wish you had been told when you started this business? What's your advice for somebody who may be wanting to start a company right now?
So it's not necessarily what I wish, but it's what I think I would like to pass on to people. It's an incredible privilege to be able to take an idea that you care deeply and passionately about and to make it reality. I mean, it's very few times in the history, perhaps never in the history of mankind, have so many people had that privilege because the ecosystems are there. Don't turn it into a competition on who raises more capital. Don't turn it into a competition, or don't worry so much about it. I think if you're building value that for your customers, people in our what we look at is people will continue to eat, people will continue to consume. If we create value, the money will come, right? And I think not focusing so much on that and focusing on building a good business actually liberates you a lot.
Interesting. All right. Final word from you, Mohit. What advice would you give?
I think it will probably be around focus on what's reversible and not what's irreversible. So irreversible are things like ethics, integrity, and all of these things have to sort of like be on spot and you have to be there. But I think what's reversible is essentially the fact that you could make mistakes and learn and actually move fast. You could not do things really well and you can learn fast if you have the time. So I think if you have the time, you can make mistakes and reversible ones. I think probably that's the right framework.
All right, thank you. Last word?
Well, I think, like I said, tough times create strong men and strong men create great companies. So make the best of this opportunity.
Okay, we've run out of time, and I know that the next panel, I can see them itching to get on. But let's give our panel and our venture capitalists a huge round of applause, ladies and gentlemen. Thank you so much. We'll be back in just a moment to discuss building robust healthcare platforms. Stay with us. Thank you.
You sit there. Hear me. Look at you all standing up. We're ready to rumble. We are ready to rumble. You can all sit down. The next conversation is about to begin, but I know you want to chat and get to know each other. Big part of this forum, of course, is chatting, engaging, connecting, swapping ideas. But we're going to have a great chat right now. Please, at the front, if you'd like to just move slightly to the left or sit down. Let's get started. Let's get our next session started. Trend spotting, building robust healthcare systems. I'm delighted to be joined by Dr. Rakesh Suri, who's President and Chief Medical Officer of Fountain Life in the United States of America. Rakesh, thank you very much for joining me today for a lovely one-on-one chat. It's nice having these fireside chats.
Thrilled to be here.
Thank you very much.
Looking for the fire.
It's a sort of pretend fire. Sometimes at these events you have a sort of pretend virtual fire behind us, but not today. We don't need that. Given that the panel, the discussion, Rakesh, is called Building Robust Healthcare Systems, what is robust when it comes to healthcare systems? Let's decide what it is, let's describe it, and then we'll move on from there. So what are robust healthcare systems?
Well, it's really appropriate. We're in the UAE to be speaking about this because the late Sheikh Zayed, the founder of this nation, said that the wealth of a nation is in the health of its people. And therefore, I think that's really something that's top of my mind every time I speak about healthcare, resilience and growth and integrity and robustness. And if we remember a robust healthcare system as one which keeps its people well, happy and productive, then it truly supercharges a nation's ability to thrive, as we're seeing in the UAE.
Who does it better? Clearly the UAE, because you've mentioned the UAE, and here we are in Dubai, so that's wonderful. So tick for the UAE. Who also would you put in that camp? I wonder how many there are of robust healthcare system.
Well,
let's name and shame.
So I'm gonna gently sidestep that one, but I will answer it in the following ways. I mean, I'm a student of healthcare. I was privileged to be in the UAE for 7 years, a part of the remarkable team building, growing, and then leading Cleveland Clinic Abu Dhabi, which is now on the global list of the top 150 healthcare organizations around the world, all within 7 years of opening. So as we step back from the areas that we're specifically involved with and try to look at trends globally, there are a few things that have emerged in defining the healthcare systems of the future. Number one, as in any business, there has to be a great vision. We have to set a vision for ourselves, and healthcare is no different. We have to set a vision of what we seek to achieve together. The second is that we need to rely on the latest science. And science is progressing at a light speed, quicker than it ever has before. You know, approximately 30 years ago, medical science would double every 50 years or so. Now it's doubling every 3 to 4 years. And it's being supercharged by two specific trends. One is AI. There's some people who think that businesses who are not fully leveraging AI by the end of this decade will be out of business. And the second is biotech itself. From the biologics to the technology are accelerating at an incredible speed, and literally innovations are in our lap every day. So reliance on the latest science is number two. And then number three is an ability to disseminate learnings through the population, from the practitioners to the ecosystems and the systems and processes to the people who are benefiting. So vision, reliance on the latest science, and the ability to align the ecosystem.
So those are the tenets, those are the things that a robust healthcare system needs. What did COVID, Rakesh, teach us about building robust healthcare systems? Because it taught us a lot. Have we learned the lessons?
So the UAE is a fantastic example of learning on the fly, it being nimble, creating a vision, relying on the latest science, and then having the population participate in driving a successful outcome. So COVID taught us so many things, but let me give you a couple of vignettes that might be interesting. So as we were standing in our daily safety huddle in Abu Dhabi, as we do in lining the leaders across the organization, we started to notice little pings on the radar of strange illnesses that were heretofore undefined. So what does that mean? People arriving in Dubai from the Far East, from China and other countries with a strange respiratory illness. So we didn't know what this was. Was it SARS? Was it MERS, Middle Eastern Respiratory Syndrome? Were they bad cases of flu? We simply didn't know, and all the tests were negative. We didn't have the testing to be able to diagnose what the heck this was. So we gathered our leaders together and we crowdsourced our information around the world and derived the code from one of our colleagues in a country I won't mention right now, and devised our own PCR to be able to detect disease. So point number one was we established a vision about what health looks like, health for our patients, protection for our staff, and our communities and our society, and then we relied on the latest science. And then once we figured out that we could diagnose this with PCR, and we couldn't get PCR machines at that point. They were literally sold out and the reagents were out of stock. Then we were able to, once we're able to gather the appropriate supplies and bolster the supply chain, we're able to disseminate PCR across the UAE. And then the third one was we were short of PPE, protective equipment, that we had never before seen in medicine. So again, we needed to really align our ecosystems and protect not only our caregivers, but the population. So what we learned through all of this was the following. We could no longer feel safe in our homes, regardless of where they are around the world, when any member of our global society was at risk. We are only as safe as the least protected member of our global ecosystem. That was a profound realization, because for decades before, we would see the world as first world, second world, third world, and oh, it was a second world problem or it was a third world problem, but it's not going to affect us. That illusion was blown away in the early days of COVID.
So how do we build on that now that we have that knowledge, now that we have that experience of dealing with the pandemic, some more successfully than others? How do we build this robust healthcare system, whether it's in a community, in a country, or in a region?
Many things are different coming out of COVID. From the finances that we're speaking about in many of these meetings, to the disruption in supply chain, to historic resignations, to thinking about what's next. So how do we do things differently? I think that we as communities and as nations and as networks globally need to really think about what's important to us. And if we focus on the health of a population driving the wealth of a nation, I think we're in the right direction. So then we start to ask ourselves, well, what is necessary for the health of a population? Well, first is understanding what the determinants of health and wellness are, and being able to disseminate these through our communities and our nations. That's number one. Number two is we need to be able to advance diagnostics so that we understand where we are in our health journey. Then the next thing we need to do is to be able to reverse any conditions that are reversible, and to be able, or cure them, and then optimize people going forward. And finally, we need to find a way to pay for it all. Because the other thing that has been a part of the economic collapse of nations and sections of the world has been the inability to pay for and sustain.
It all sounded so
care.
doable until you said, and finally, we need to pay for it all.
Yes, that's right.
How do we pay for it all?
We need to go back to the basics. We need to understand which things we're doing in healthcare that drive outcomes, and which things we're doing that drive margin for members of the ecosystem that may not be directing the funds back into that virtuous cycle of improving.
So
an
waste and
outcome for all.
inefficiencies.
Waste, inefficiencies, and members of the ecosystem that are driving margin and taking it out of healthcare and not putting it back into the health of a population or a nation.
That's shocking that that's happening. But we know it's happening.
We do. There are misaligned members of the healthcare ecosystem, and we're not here to blame and shame today, but we're here to stand back, just like any business, and to understand where our costs are, where our revenues are coming from, and the ability to generate margin, and then understanding what we do with that margin. And if we're thinking about healthcare, how we ought to reinvest that margin into improving the health of all.
Let's come back to AI, let's come back to data science, let's come back to technology, the advances in technology, some of the things that you're doing at Fountain Life. Tell us what you're doing. I mean, go on the website, you read it and you think, wow, why isn't this available in every street corner in the world? It isn't, but you're trying to achieve that aim. Tell us about what you're doing and why it's so important. And this seems to be the way that healthcare is heading.
So I'm a practicing heart surgeon, and it really is a means of keeping the fingers on the pulse, literally, of what's going on in our bodies and our healthcare system. For decades, we've seen the sad story repeat itself of a patient coming in with a catastrophic heart attack, only to be then turned into the cath lab, diagnosing severe coronary artery disease. And even if we're able to bypass or stent these conditions, oftentimes the heart is irreversibly damaged. So we can restore blood flow much too late. And this degree of scarring then leads to a suboptimal contraction of the heart that leads to diminished outcomes and the inability to return to normal life. It's a sad reality that we were able to intervene only too late. And the same is true of heart valve surgery. I've spent my career working with teams where we learned how to repair the most sophisticated heart valves. But yet, even though the valve's repaired and the heart's beating normally in terms of its valvular capacity, the heart often suffers from failure and an inability to return to its previous robust level of functioning. These small examples, translated with our experience in hospital leadership, lead us to understand that there's a delay in diagnosis that affects not only communities but nations and whole sections of the globe. We simply don't understand what's going on inside our bodies, and then when we do, we're often too late to restore normal life expectancy. So at Fountain, one of the main reasons that I was humbled to join them is they've set their vision, we've set our vision on bringing advanced diagnostics powered by the latest artificial intelligence and rapidly evolving science into the hands of clinicians and patients now, a decade before it would be available in traditional healthcare systems. Then we take that data and those diagnoses, and most people have a diagnosis that impacts their life immediately, even healthy people. These are healthy, pre-symptomatic individuals, and then we utilize this data to diagnose the condition, to reverse or cure it, and then optimize people moving forward. Now, this isn't all occurring in a data vacuum. It's quite the opposite. We're focused on taking the data, itemizing it into discrete data elements so that we can put it into data lakes and data ponds and be able to utilize advanced analytics and artificial intelligence to derive insights. Then finally, once we have the thesis for diagnosis and optimization proven, we teach, we disseminate, we share these learnings, and then drive it into a self-insured captive insurance platform so that we can take the savings that we derive from early diagnosis, preventing that metastatic cancer from happening, and drive those savings back into a virtuous cycle of paying for the care.
What are those savings?
What are those savings?
Yeah, I mean, give us an idea of how much you're saving, how much the healthcare system is saving by this proactive approach rather than reactive approach.
We think that the savings, of course, it depends on the age and the type of population we're speaking about, but we believe that the savings could be in the range of 20 to 30%. And we all know that with healthcare budgets increasing and being an inordinate amount of those funds being spent in the last years of life when it's too late and people are incapable of being restored to a normal, what we call health span, not only years, but healthy years, when we drive those into patients' lives and our clients' lives early on, we'll restore and maintain that ability to participate fruitfully in their lives and in society, whether it's their jobs, their families.
I think on your website it says, be 100 but feel like a 60-year-old. Is that what it says? That's quite enticing.
Yeah, so as a doctor, I've never fallen into the trap of predicting when a patient will how long they have to live. That's often a question we're asked in medicine, and we often say it's in the hands of the divine, where we just read the signs along the way and do what we can to optimize things. And it's the same in lifespan. I prefer not to focus on the number of absolute years, but the number of healthy years, so that we can really focus on keeping people alive in their preferred state of being for as long as possible. It's funny, when you ask people how long they want to live, who would want to live to 120, I mean, oftentimes in rooms, people don't put up their hands that they want to live to 120. And as a heart surgeon, I've had patients say, I don't want surgery because I'm 100 years old.
Because the quality of life.
But if you could tell them that they would enjoy those extra years of life functioning at their best, that's a very different value proposition. We've never before been able to do that in medicine until now.
And are you confident we can achieve that? Some of these healthcare systems which are ingrained in all these inefficiencies and these ways of doing things that seem to be stuck in decades gone by, are you confident that we are moving in the right direction, especially post-COVID?
Well, I'm confident based on the remarkable people who have come together to make this happen. Our founders, Tony Robbins, Peter Diamandis, and Bill Kapp, amongst other remarkable leaders and team members who have all come together in Fountain, along with our ecosystem that we're partnering with across the globe at the latest academic and longevity institutes, number one. Number two, I've devoted my career to this now. I've voted with my commitment in my career and my ability to work amongst the team.
Just on the partnerships front, and that's important, isn't it?
Partnerships.
Tell us about the importance of partnerships for a sustainable and a robust healthcare system.
So partnerships are critical on all fronts, and what I was going to go to next is we see this as a blue ocean abundant space. So many people in life, whether it's finance or many of the things we're speaking about here at this conference, we think about it being a zero-sum game. We don't see it that way. We see this as jumping outside of the traditional red ocean or marginal improvement ecosystem, getting into blue ocean, where there's really a vision where we can create a new pathway for us as humanity, bringing in the partnerships, whether it's through diagnostics, biotech, health tech, artificial intelligence, etc. So partnering on that front, partnering on the data side to be able to analyze our data real time and get it in the hands of what we call a digital twin, so our physicians and our patients can manage people live from the palm of their hand. And then partnering with insurance. It's actually extraordinarily rare for providers and payers to partner. And where they have in the past, they haven't necessarily driven forth the value proposition. So partnering on the diagnostics, partnering on the data, and partnering on the insurance.
Yeah, we've got a minute or two. Any questions from you, our wonderful audience? Yes, gentlemen, lady there, lady at the front. Was that you? No. Or yeah, do you want to ask a question or? Oh, you were just waving your hand. Gentleman there, so you can keep waving whenever you want. We'll just wait for a microphone so we can all hear you. We're just going to bring you a mic. Thank you, sir. Here we go. Tell us who you are and fire away.
Hi, my name is Lakshmanan. COVID has obviously brought a big divide between the rich and poorer nations further. Do you think with all of this development in this healthcare tech, the costs are going to be pushed up and the poorer nations continue going to be poorer?
So it's a great question, and it's not about money alone, meaning the wealthiest nations, as when you look at GDP, haven't necessarily done the best from the perspective of COVID. And to really go back to what we said about the three things that we derived as important elements to focus on for that pandemic, but forthcoming pandemics. The experts predict that pandemics will, or let me put it this way, infectious diseases that are capable of causing pandemics will continue to come before us. And this is not unusual when we look back at history of medicine and the history of population health. So the question is, are we ready for the next pandemic? And which countries will be capable of navigating it with the greatest degree of success? And success being the health, happiness, and prosperity of communities and nations, right? So let's just set the tone. So then we go to visionary leadership. We have to elect and support leaders that we believe in. How many countries around the world do we look at and we say, you know, I don't trust our leader, and I wouldn't trust that person to be in charge of my health. So how can we set a vision for the nation? So visionary leaders are a mandate. And if there's one thing we can do as individuals is ensure that we have the right leaders leading our communities and our nations. The second is that we need to be a part of this democratization of science. Science is now present on the web in a way that's never before occurred. You don't go to medical textbooks oftentimes to gain the latest insights, you Google it. It's been democratized and made accessible to the world's population, as well as through ecosystems like OpenAI. So leveraging the latest science. And the third is we need to align populations. And when communities become stronger, whether they're families, neighborhoods, parts of countries, or even hemispheric alliances, then we can bond together. So it's we focus less on the have-nots and expand with greater potency the haves to create a meaningful impact on humanity.
I think that's a brilliant way of wrapping this up. I want to say a big thanks to Dr. Rakesh Suri for a fantastic... Sadly, we've got to move on to our next panel, but please do approach Dr. Suri afterwards. Sorry, we've got to move on because I'm the time police. I've been told I have to move everything on. But a big round of applause for Dr. Suri. Thank you very much indeed. Thank you. Great.
Thank you.
Thank you very much indeed. Right, up next we've got another panel, which is Building for India, Eye on the Prize. Okay, Building for India, Eye on the Prize. Thank you for sticking around. It gives me enormous pleasure to welcome to the stage Nana Murugesan, Vice President, Head of International at Coinbase. Please come up, sir. Big round of applause. Great to see you. Thank you for coming. Now, my business partner, I have a little thing on the side besides doing this sort of thing, WhatsApped me and he said, Sam Bankman-Fried's been arrested.
Yeah.
Wow. And I said, oh my God, what a coincidence. I've got a Coinbase man sitting on the stage next. So please excuse me if we just ignore a bit about Building for India and talk a little bit about Sam Bankman-Fried, FTX, if you don't mind, sir. Are we okay to do that? I know you're limited probably to what you can say, but given that I'm a news guy, given that I'm a business journalist, I just can't let this opportunity go to talk about the breaking news story out there. But thank you, Nana, for joining us. I mean, this story, it's incredible, isn't it, how it's unfolded. Bankman-Fried's been arrested in Bahamas. The US has filed a criminal indictment. The House of Representatives today has got a hearing on FTX's collapse, which Sam Bankman-Fried was meant to testify on. how do you respond to all this? I mean, you're in the industry, you're one of the big names in the industry, the trusted names, the listed names. How do you feel about all this?
Well, first of all, I just woke up to that.
Yeah.
Woke up to that news, so that was, but you know, it's getting crazier and crazier.
Yeah.
It feels like every day there's a new story, and just when you thought that this is sort of like the end of it, and then the next day you see something else. And it's as much of a surprise to us and eye-opening to us as it's probably for you. But I guess the one thing I wanted to mention is this is, in some ways, we feel like it's a validation of our strategy. We've kind of taken the hard route of being a publicly listed US company. We have licenses. We are obviously operating out of very respected jurisdictions. And so I think we've seen companies like FTX move so fast, like unbelievably fast. And I think we feel like our strategy of just working with regulators and just doing things in an open and transparent way is sort of like almost validated.
But of course, the whole industry is being affected by this. Yes, you're listed, you abide by rules, you abide by regulations, which we'll see if FTX did or not. You can make your own judgments. We'll let the lawmakers make those assessments. But you are being affected by it because the whole industry is being pointed at and accused of being untrustworthy, accused of being a house of cards, accused of being a pyramid scheme. How does Coinbase try to separate itself from the damage that's done to the entire space?
Yeah, I agree with you, by the way. Right? I think this is certainly not great for the industry, but there's bad news and good news with this, right? And we've seen this time and again, right? During the internet boom, we saw the WorldComs of the world, but at the end of the day, the industry kind of came out of that stronger than ever before. We saw the financial crisis and a lot of things happening like Madoff and other stuff, but we did see that the financial sector came out of it stronger. I believe it's very, very similar to what we've seen in the past. History repeats itself.
Yeah.
And it's going to be very, very painful in the near term. But I think for those who are in the industry for the right reasons, I think are going to come out stronger out of this. And I think the industry will do well.
You're saying, because we've had in crypto a number of cycles, 2013, 2017, and then obviously last year seems to be every 4 years. You say we need this flush out, to flush out the leverage, the speculation, and then we start again and rebuild, and the best projects obviously grow.
Yeah, those who are in the industry for the right reasons and doing the right things, even though they may
It seemed as if Sam Bankman-Fried was in the industry. Would you all agree? I mean, it seemed like Sam Bankman-Fried was in the industry for the right reasons. I mean, he was toppled in, as you say, record quick time. He was the leading light of the industry. Doesn't that make one think, who's the next man or woman who's giving this impression that they're this angel and saving all these crypto companies that are falling by the wayside? I mean, that's the sort of question that people are asking, aren't they?
Yeah, I mean, again, we don't have all the details, but there's a big difference between, all I can say is there's a big difference between what you say and what you do.
Yeah.
You're absolutely right. I think there are amazing narratives that came out of SBF and many others, right? But then you have to differentiate between what people are saying versus what people are doing. And I think we're very focused on doing and building. And I think that's, it's the longer path, the tougher path, but I think that's going to be the right.
What does the regulatory environment look like in the next 1, 2, 3, 4, 5 years, given this? And we know the US is going to clamp down on crypto. You're obviously already, regulated, but do you welcome regulation? What's the sort of regulation that crypto needs to ensure that we're still encouraging entrepreneurial, brilliant people to come into the industry and create problem-solving solutions?
I think from the beginning, we've always said this, which is we consider ourselves regulation first. We welcome regulation. We've invested tremendous amount of resources in security and compliance. And if you look at the jurisdiction that we operate in, United States, a publicly listed company, we have licenses from some of the toughest jurisdictions out there, like Germany and Japan and others. So I think we've taken that path. And to your question, I think regulators are going to be looking at this closely, and that's great, right? I mean, which means that there's going to be a lot of regulatory frameworks that are going to be built. We're very excited about what's happening in UAE, super excited about what's happening in India, as well as some of these. There's almost like an urgency to have these regulatory frameworks in place so that we can have a more open, a more safe, and a more accountable regime for crypto and Web3 companies to operate. And I think it's going to be great for companies that have kind of taken that path. We're excited by that.
Tell us about Coinbase in the UAE and Coinbase in India. Start with the UAE and then move on to India.
Yeah, maybe I'll just zoom out a little bit, talk about Coinbase very quickly, and then international, UAE, India, definitely. So just to zoom out, Coinbase, founded about 10 years back, as a very simple mission in the beginning, right? We have our founders read the Bitcoin white paper, and Brian Armstrong, he was in Argentina, saw a lot of the financial crisis happening over there, and the whole mission was, how do we kind of create a more financially inclusive financial freedom in the world? And Bitcoin was just a great way to do that. So that's what happened like 10 years back, a simple mission to create financial freedom and economic freedom in the world. 10 years passed, so fast forward to today, Coinbase, like I mentioned, is a publicly listed, US publicly listed company. We have more than 100 million verified users in retail. We have nearly 15,000 institutional clients and nearly 250,000 developer partners. And this includes the Googles of the world, the BlackRocks of the world, right? Some of the largest names in the industry. So we're really proud of what we've been able to accomplish in the last 10 years. And international is an existential priority for us, because if you look at our mission statement, it's about increasing economic freedom in the world, right? And so obviously we started in the US, so I think expanding and maximizing our global coverage and kind of providing the value proposition that we've been talking about to people all around the world, to billions of people, and bring them into the Web3 economy is an existential priority. So international, which is what I lead, is a lot of exciting things going on. And specifically, when you think about what's happening in the UAE, lots of interesting developments as Abu Dhabi, Dubai, and others, right? I mean, there's a lot of regulatory frameworks that are developing that's creating a very interesting hub here. And of course, India, when you have a mission of bringing billions of people into the Web3 economy, I mean, India is going to be front and center of that. And so India is a digital powerhouse for so many different reasons. And so we are super happy about India as well. So yeah, that's why we are here. Almost like two birds with this conference. So again, thanks for having us.
Not at all. And let's ask a bit more about India, the considerations you need as an international company to get into India. Let's welcome to the stage Amit Joshi of Morphosis Venture Capital. He's going to join us. And also Aaron Shlomo, CEO of Data Loop, which is a tech company out of Israel. Thank you both. Come and join the party. Amit, good to see you. Aaron, good to see you as well. Amit, what do we need to do to bear in mind when we're building for India? Because this panel it's up there, building for India. So what do we as entrepreneurs, as builders, what do we need to keep in mind when we're building for India?
I think the main thing that's worth thinking about is that India is a very different market. It's big. We all know that. There's 1.3, 1.4 billion people. And it's complex for a variety of reasons, right? Partly because of the huge diversity across the country. So one, it's not a homogeneous market. You think of Europe, not as a homogeneous market. You think of Latin America, not as a homogeneous market. The same sort of thought process needs to be applied to India as well, because every state, every culture, especially when it comes to consumer businesses. It is consumer-focused businesses. Consumers consume very differently in different parts of the country, right? So that's one critical thing to bear in mind. It's not homogeneous. The second thing is on problems to address. So with the right sort of business models and the right apps, if it's a consumer business or any other platform that companies have, there are many problems to attack. So you've got to be careful about which problem you want to attack and with what business model that you want to take into that. And just like any other country, whether it's Indian companies getting out of the country or from any country to any other country, you've got to think about what the business model is for that particular country. Indians would typically buy from Indians, just like any other country would from their own. That said, unless it's a paradigm redefining kind of business, right? Like Facebook and Amazon and Google back in the day. But the vast majority of it is very national unless you think about it in a very localized way as you expand into another country, and that's true for India as well. The other thing that's worth saying about India is that it is it's a mobile heavy market, right? It's not so much tablets, it's not so much desktops and laptops, it's mobile friendly. And you've got consumers through the length and breadth of the country running into nearly 1 billion broadband connections, mobile broadband connections. So that's something that you've got to keep in mind as you sort of take your propositions. And finally, I guess the key thing is that it's a value conscious country. So it's known for frugal innovation. And we've got to keep that in mind as you go from any part of the world into India.
And we're going to ask you and all of you, how do we take that into account? How do we make the most of the innovation that's coming out of India? But Aaron, first, what are the considerations that an international company should have when they're looking to enter India?
I think we're in I would say, remarkable times. India is now experiencing multiple lanes of change happen to it all at the same time. In the beginning, you could see a transformation from becoming IT services driven on the tech to take a more central place. Then you have India moving from more B2C tech to more business, enterprise software, AI, and blockchain. And then on the final part, you would add the global change that now India is becoming the more dominant parts in the Asian hemisphere. Combine all of these together, naturally, the first thing you would encounter is shortage of talent, right? You need talent to power all that. The second thing is I would say, thinking of go-to-market, where the go-to-market usually happens in Europe or the US. Now India has to develop its own go-to-market scheme, which is something that's relatively new. If you combine all of these together, we see an amazing opportunity, because India is in the core of the change of AI. Probably some of you have seen the latest development with the ChatGPT. It's here, right? People are saying disruption is coming, AI will take jobs, all that. Somewhere in the future, self-driving cars are not waiting outside still, but it's 3 to 5 years time frame. It's coming, it's here. And this presents amazing opportunity to the Indian market, but also as becoming the AI automation nation, rather than being the automated nation or being automated. And I think in Data Loop, we are doing it for 5 years, and I believe that this is India decade. And this is what we do.
How does the Coinbase approach when attacking India, trying to break India, how does it differ from other nations, your approach towards other nations? What are the nuances?
I think in India particularly, it's very important to build from the country, for the country. Its localization can be a huge competitive advantage, especially given the diversity in the country, the number of languages in the country, and there's just countries within a country, right? And so I think we are taking this philosophy of, not just in India, we do this all around the world, but particularly in India, we have hundreds of engineers. I think we're the single largest investor in cash terms in Web3. So both through our investments, the startups that we invest in, and also through the engineers we have in the country, so both through an inorganic strategy as well as through an organic strategy, we take this approach of building from the country, for the country. And I think that's going to be a significant source of competitive advantage, especially over the long term, right? And it's very much a long-term play. That's the approach we're taking.
Building from the country, for the country, is that how you look at it, Amit? I mean, how do we make the most from the innovation that's coming out of India? You talk about innovation, every panel, innovation. How do we as business leaders, as entrepreneurs, startups, founders, how do we make the most of that innovation?
So, there's two different parts to that, I guess. So one is, make in India, for India, right? Which is what you talked about. And that's absolutely critical for a company to be successful in India. And then there is that one of the earlier panels was talking about or everybody now talks about made in India for the world. That's the kind of business model we are focused on as investors as well. And some of the things that apply to companies getting into India sort of apply to the companies getting out of India as well. And they are about localization in the markets that they get out to. Now, you'd find some business models, the first panel talked about Southeast Asia, Latin America, parts of the Middle East, potentially even Africa, as obvious markets where some of the problems are similar. And you could make some tweaks to your business models and to your platforms and sort of go in and then do business in those countries, but still need a highly localized ecosystem to be able to do that rather than take an export view. We're going to sit in India, have a small sales team sitting in whichever country we are going into and do it from there. Which is not going to work very well and hasn't worked very well. The companies that have made it successful from India out into the rest of the world have actually created localized models in the rest of the world. And for investors sitting in those parts of the world, for entrepreneurs sitting in those parts of the world, I think there is more and more challenge now coming to those countries, to those entrepreneurs who are creating business models for their respective countries, now getting competition from entrepreneurs in India, from the innovation that's coming out from India. So that's one part of it. But and that sort of just helps the whole ecosystem to take the next step forward. Other than that, the consumers and the B2B customers, depending on what kind of business we are talking about, they benefit a huge deal from this innovation. And a lot of the corporates, the traditional corporates sitting around the world, they are getting disrupted left, right, and center. It's a long process for them while they sort of watch their businesses getting disrupted. But some of them will get there quicker than others in terms of taking some of that innovation, putting it into their systems, maybe making acquisitions to be able to take advantage of that for the benefit of the consumers and the businesses in the country.
How are you taking advantage of it, Aaron, of the innovation coming out of India?
So you could see it everywhere, right? Just a month or two, you will walk in the streets and you see the cranes and you will see the energy is there. I think that the biggest challenge we see now, there is a lot of innovation, a lot of creativity, but it's kind of a cluster forming. Like clusters tend to form. In Israel we have a tech cybersecurity cluster. We believe that data and AI is a cluster now being formed in India. And so the first thing, we need capital, right? So the entire VC needs to fund that innovation, and that VC needs to sustain on returns. That means that you need to build go-to-market, you need to build the efficiency of sales and marketing to justify the continuous invention and expansions. And at the end of the day, at Data Loop, we look for talent. And we work, I would say, with probably very well-known Indian brands, from Infosys to Taskas and more pioneers in our field like Cogito and iMerit. And these teams are now understand that they're in the middle of disruption in the tech ecosystem, but they have hard time finding the talent, right? So we're helping them doing that, but at the end of the day, you could see that innovation, that skill set already on the ground. But I would say what I miss or a place that could boost that is like a more maybe government guidance or central assistance in how you formalize innovation into productivity, business productivity, and this is kind of a gap. And we're doing it in our world, and we're actually connecting markets. So in our market, we solve it to ourselves and, of course, to our partners. But in the global or more general parts, I think this is the leap India is about to take or should be taking. How do I take innovation, potential, and focus it into productivity and returns? At the end of the day, we need returns.
What are the great untapped opportunities for you in India?
Yeah,
What's the low-hanging fruit and the fruit that's a little bit further away?
Yeah, I mean, I think what we're super excited is with each evolution of the internet, India has been like moving up the value stack. So Web 1, India was sort of like a outsourcing hub type of a situation, but then Web 2 kind of became like a tech hub for a lot of companies, from the Facebooks of the world to the Googles of the world. I think with Web 3, I think the real eye on the prize we have is India can really take the leadership role, like you were saying, building for the world, right? I mean, not just building for India, but for the world. And I think India is a great opportunity with almost 50,000 engineers or so in Web3, and just the decentralized nature of India, which opens up all parts of India, not just the few cities that we know as hotspots. So even at Coinbase, we have people in Kashmir and Haridwar and all over India working for us in a decentralized, in a remote-first kind of a setup. So I think unlocking the full power of India across not just tier 1 cities, but all all tiers of cities, and really taking that leadership role with the talent pool that India has, and so that India is really a leader in Web3. I think that's what we are really excited. That's really the big eye on the prize that we have with India.
And what about you, Amit? I mean, you've got this fund, you're investing in early stage tech startups in India. What's exciting you right now? What types of company are you looking at? What does India have that maybe other countries don't?
So we are focused on B2B business models.
Yeah.
I mean, as sort of history has been sort of testament to direct-to-consumer companies, with large number of them, not all, with difficult unit economics. So that's just a generic thing. That's not specific to India. And it's also difficult for consumer-based companies, which are not paradigm-shifting in nature, to become global. So we are focused on B2B-focused companies that sort of get out there. And within that, we are looking at ESG positive business models. Yeah. And that's absolutely critical, partly because, I mean, ESG is a big thing globally, and it's only getting, the war and the temporary issues with that aside, is an important paradigm for the world, in the way the world is shifting. But in India, it's a big part of the government's vision as well, and there's a huge amount of progress that's been made in that. But the companies that we invest in are early stage companies. And these are very sharp, very ambitious people who were, for the good companies who are, building some great products for the right problems. They would take any help that they can get to make sure that they can scale those companies. If you look at the Indian pyramid of companies, of startups over the last 10 years or so, you'd find that on a per capita basis, we often talk about over 100 unicorns, third highest number of unicorns in the world, after the US and China, but on a per capita basis, it could be better. Okay? There is a long way to go, and that's the potential of the promise and with everything. But there is a lot of help that the companies need to be able to scale the businesses and not get into some of the issues that some larger companies have got into in recent times, particularly with the correction. And, governance needs to be strong. Organization development and leadership is absolutely fundamental as you move from 10 customers to 1,000 customers, if you're a B2B company, and move from 50 people to 2,000 people. How do you build those companies and how do you lead those companies is absolutely critical. How do you become global in terms of customer acquisition and retention, talent attraction and retention? So all of those things are absolutely fundamental. So the kind of companies we are looking at are ones where the teams are relatively mature in their thought process. And then we sort of build out around them in terms of helping them as much as we possibly can through some institutional frameworks to expand internationally and grow responsibly.
I want to open it to the floor. This question's for Aaron, because I want him to say a few words. So hands up. Who's going to be brave? Come on, let's have a question from the audience. Otherwise, I'll just point to one of you and, I'll name and shame you. So who wants to ask a question? Come on, be brave. Lady, there you go. Lady in the front. We'll just bring you a microphone. It's good. We like you're brave. Thank you so much. Remind us who you are again. And
okay, for the third time, my name is Shraddha. I'm a market entry specialist. I help companies enter new markets. So this is not a straight-jacketed question to you. So if you don't want to answer, that's fine. But I was in GITEX in Dubai in September, and the Ukrainian digital economy minister was here. And he made a very good use case for crypto, where a lot of crowdfunding has been raised for Ukraine via that. And then the counter was Russia using similar cryptocurrency to evade sanctions. You know, we've had the Canadian truckers protest, we've had China banning cryptocurrency. People are looking at it as an asset class, but it has many more disruptive implications. So when you talk to regulators with your size, when you're talking to governments, is this something that the regulators are concerned with? What are the general themes, and how will it impact you as a company? Because it is a very long-term impact of crypto, blockchain, et cetera, which people are really not thinking about.
No, that's a great question. And thanks again for asking several questions today. So one common theme that we see across different countries is there's a lot of interest in blockchain technology. Like, I think a lot of us hear a lot of great things and the promise of blockchain. There's also a lot of interest in the Web3 economy. So it's almost like a math problem, right? Like there's the blockchain technology, a lot of interest, and then the Web3 economy, which is the output, right? There's an input and there's an output. But there's a missing link that makes that come to life, and that's tokens, right? Tokenization. That's the incentive scheme, because for any technology to work, you need an incentive mechanism. And for blockchain technology to drive the Web3 economy forward, you need that incentive mechanism, which is what the tokens, crypto, that provides. So I think we just need to do a better job, like first of all, explaining this on how governments and regulators who are interested in blockchain and the next generation of the internet, how they can leverage tokens. So I think that's one thing we should do a better job as an industry. The second thing, and we invest a lot of resources here, is even in those tokens, there's a lot of variation in what are those more safer ones and what are those that are not that safe. So we have a lot of investments on like asset listings, how do we think about which tokens to list on our platform, and what do we want to support and what do we not want to support. We say no to so many tokens out there, so many assets out there. So I think these are all things that I think regulators are going to be watching very carefully, because there's a lot of variation here. But it's really important for us to understand that we need an incentive system that's going to come from tokenization, and then we need to figure out what are the right types of safe tokens that we want to put out there, which can vary from country to country, but that's where we need to work very closely with the regulators, with all the different, so I think this is what the process which we are taking. But hopefully we can make progress with this.
Before I let Aaron say the final words, how low is Bitcoin going to go? We've been as low as 15,500.
Yeah.
I think we're about 17,000 or so today. Are we going to 10 and lower or not?
If I had a crystal ball, no, I think it's.
Do you think we're near the lows? We're sort of.
Hopefully,
yeah.
It's been stabilizing here, right?
Yeah.
Time. It's but. I hope it goes back to, fingers crossed. But
69,000.
Like any asset class, it's hard to predict. But I think I can tell you that there is a lot. Bitcoin has been around for a while now.
Yeah.
It's one of the more mature asset classes, and there's a lot of holdings of Bitcoin. So hopefully that'll keep it somewhat stable. So let's see.
Aaron, wrap this up for us. Tie this panel up in a nice bow. We've put it in a box. We've laid it all out. Tie it all up for us.
Yeah, I think at least in our domain, and it's a much broader. I think if you take a look today, building for India, just take a look on the table. What we have on the table. What's the asset India as a nation has? First, India is already in the backbone of processing the world's data, right? Through BPOs, you can call it call centers. Whatever you take a look, a lot of data is already on the land, or at least that's essentially means that the world is trusting India with its data. That's huge. We're in an era where trust is diminished, especially trust with data, and this is a big asset that's on the table. Connected with the rising tech stack and the role data plays on AI, and this is the opportunity you get. Naturally with funding, you need the finance set, everything should kind of connect together, and I think building for India this is the opportunity.
I'm glad you mentioned the rising tech stack, because the next panel is called Globalizing the Indian Stack.
I have a question, just one question.
I think I'm going to be told off if you ask a question. They're going to march me out of the building, and you'll never see me again, which you might like to do. I've got to wrap it up. I'm so sorry, but if you want to approach the three wonderful panelists outside, please do so. Massive thanks to Nana, to Amit, and to Erin. Brilliant panel. Thank you all. And next up, Borderless Ambitions, Globalizing the Indian Stack. Thank you all. And please keep asking the questions. You're wonderful. Thank you very much. Thank you. Thank you. Thank you, Bruce.
We are the only platform in the world that allows a non-technical customer to get software built for them without ever having to write a line of code.
All you need is a great idea, a challenge that you want to solve for your business, and we'll build the software for you.
It's easy, fast, has a fixed price. We're making people's dreams come true.
From an entrepreneur with a genius idea in their head to an enterprise CEO looking to transform their organization to the next level.
Builder will be the platform that they will build upon.
To get going again, I'm delighted to be back. And one of the conversations that we had a lot yesterday was about whether we were seeing the end of globalization, how walls and borders are back, but maybe not so much, or at least not everywhere. Our next guests are masters of borderless ambitions. The first is one of India's original venture capitalists, a true pioneer in India from Accel India. Please welcome Prashant Prakash. We can do better than that. Big round of applause. Come on. Excellent. All right. Also, please welcome, I'm going to sit, where am I going to sit? I'm going to sit here, and Prashant, you could sit here for me. Also a man whose work you may have used even to get here this morning. He helped create Google Map Maker. He's had a stint with Aadhaar, UPI as well, helping to globalize identity through MOSIP. And he helps others create the future as well through the Bharat Innovation Fund. Please welcome Sanjay Jain. Come on down. All right. Fantastic. So, briefly, Prashant, great to see you again. I think I've seen you at every one of these.
Yeah, Bangalore and then
I know.
London and now here.
Exactly. It's like coming home. How many startups have you launched or funded?
So 300.
Okay. How many are unicorns now?
25.
All right. Excellent. All right, Sanjay, you've talked about going from being a doer to an enabler. Talk a little bit about that.
So I've been an engineer most of my life. I helped create Google Map Maker, which was used to build map data for 170 countries, pretty much the entire developing world, including China and India. I was then the chief product officer for the UIDAI, which built Aadhaar. I helped design UPI and many elements of the India stack. And now I've gone to supporting two things. One is taking identity global, as well as supporting young startups through the Bharat Fund.
So we are here to talk about the India Stack, which actually is an incredibly important innovation. We don't have a huge amount of time, so I'd love to hear, first of all, what it is. I'm okay. Once I get to about the third layer of the stack, I get a little bit lost in the third and fourth, but lay it out for us, Sanjay.
So we didn't start with building a stack. We started by building identity because that was a very important need for our people. We felt that 1 in 4, about less than 25% of the country had a good ID way back about a decade ago. That led to only about 17% bank account inclusion in the country. And so we built an identity, but we made it digital. We made it such that you could build on top of it. And with that, we were able to solve problems around KYC, which led to increased banking access. We ran a government program to bring more people into the bank system. 450 million accounts were opened through that scheme. And now we are at about 90% of financial inclusion when measured in terms of banking access.
Incredible.
But then beyond that, the next need was payments. Again, we thought digital payments were going to be very important for a lot of the activities that we do. And so the thesis behind both of these, in some sense, was that if you bring down costs, markets can expand. You can bring people into bank accounts by reducing cost of onboarding, reducing cost of transactions. Same is true with investments, same is true with many other things. And so the whole idea was that if you bring down these costs, we can formalize faster. And so that then led to that happening, as you can see, but that also resulted in more data about us being available everywhere, what we call the data exhaust. And the
I love
sense
that
of-
idea of data exhaust. Like everywhere you go, like a car, you're just leaving a sort of
trail.
trail,
Exactly.
cloud of data.
Yeah, and the thought was if it's your data, you should have control on it. You should be able to use it. And Nandan, who helped build some of these things, he led all our efforts on these, had a phrase where he said that we will become data rich before we become economically rich. And so is there a way by which we can use this data to change our economic future? And that's what led to the data empowerment initiative, where the idea was that we allow people to use their data for their benefit. And that's the third layer. But then once we got this into building these things, a lot of application spaces like commerce, health, drones, and so on opened up, where because once this confidence that we can build these things at nation scale comes in, we start building these things. And so that's really the fourth layer, which is really all these new application spaces coming up, where we are very confidently building for things which we need to do as what we call digital public goods or digital public infrastructure.
So let's talk about the applications. And Prashant, tell me about, just give me an example of an application that's being built. And I'm really interested because it's free. So how do you monetize it?
So I'll give you a good example of a company called JustPay, right? So when you make these transactions on a mobile phone, you have a second factor of authentication, right? Where you get this message
you have to fill in the things.
So that's that layer is enabled by this company called JustPay, and they're doing it for 1 billion transactions.
Okay.
So and the banks and the other folks who use the UPI system to make these transactions need to use them as a service provider to be able to enable these transactions. So they make money from that. Similarly, you have other value-added services now where you can provide insurance products, you can provide all these other products. And
like health insurance?
Health insurance. And PhonePe is a good company that now, because they enable these transactions, they have customers who are sticky on their product. And now they can leverage the customer for providing them various other kinds of services and get hundreds of millions of dollars on top of that. And UPI itself is free and has remained free. So you don't get charged for that. And that's just the beginning. Take something like the health, the digital health network that is being built, right? So whether it is being able to have the patient records now usable across service providers, better, faster processing of insurance and payments, all of that will help maintain not only the health costs more affordable, but will just give a much larger network of service providers being able to digitally offer some of these products and services in health across the ecosystem.
It's pretty exciting. How well do you think what India is doing is actually being understood? I know, Sanjay, you travel the world explaining this. It sounds pretty innovative and quite different to what I experience, especially with regards to my data and how other people have access to it.
It's an interesting concept, very difficult to explain. And so typically, when we have people who have explained it to want to know more, we invite them to come to India and get immersed, go to local markets, see how people are using these products and services. And that's, when they start to get some of that. But it is, I think, an idea which people appreciate around the world. Everywhere we talk about it, people sort of say, why can't we do that for our country? That's a common refrain I keep hearing in a lot of my conversations.
Is there a reason other countries can't do it? Is it because of the digital identity, or did the digital identity just make it easier?
So it's not just a digital identity. Typically, identities sit in silos. And what India did was not just do a digital identity, but they did what we call a foundational ID, where the ID is then used in multiple things. So most places, like when I was in the US, my driver's license was my ID, but it was actually my right to drive. It's not, ID just happens to be an incidental use of it. While in India, I now have an ID system which gives me an ID, and then I use that ID in multiple systems. So it is something which then becomes across the thing. But also what we did was we put an API on it. The moment you put an API on it, it can become a part of other systems. So it is not just the ID, but how it was built. And the same with payments. I think all of these are really, in some senses, designed to be part of other systems. And we've been very open as a country in terms of saying we'll help other people build on top of these. There's no, I mean, if you want to do it yourself, great, you can take the ideas and do it. But on the other hand, if you need our help, we'll be happy to help. I think the government has been very proactive on this, and this G20, that is something which will come up. We've also been a part of what we call the Digital Public Goods Alliance, which was formed after the UN Secretary General's report a couple of years ago. And that's about taking these digital public goods global and also from other places, so that it's sort of a movement out there on how we, change the world with things that are now better and newer.
Yeah. See, the other thing that we could demonstrate is the momentum with which we were able to add these new startups and have them get to scale.
Talk about how that's possible with
this. So with this, so let's take the example of a startup that is lending in the B2B space. So what we are seeing is that this data sharing is not just limited to now any longer just the payment information, right? So there are these new models where you're aggregating all the data for an individual or a business in one location. This could be data across your tax, GST, it could be across your insurance service providers, your health provider. All of that is in one place right now, and with your consent could be shared very easily. So so the pace at which you were transacting payments, now the ability to access information about a business or an individual is also accelerated. So which means that the friction to be able to provide services, whether it is health, insurance, credit, now is also reduced. And similarly, there was this whole area, I mean, I know it's a little bit of a tangent here, but we had one of the most inefficient road networks. And the thing that was a big impediment was the tolling system. Right. So they built this digital tolling system on top of the system that Sanjay they had built, and they were able to roll that out in a country that is otherwise not digitally, with very little digital infrastructure in just a couple of years. And it just improved the ability of the transport network and the logistics networks to become almost 30-40% more efficient in 2 years. Can you imagine? This is without building any new roads.
Yeah.
This is just buying digitally enabling payments for the trucking and ecosystem, right? So, and there are startups now which have benefited from each of these.
Like what?
Like this company called Blackbuck, right? So this Blackbuck is a company that just enables these trucking companies to use this digital network, and it could be to be able to fuel your truck. It could be to provide top up and provide payments to go from point A to point B. So all of this now leads to opportunities for startups. And as the stack gets transported to different parts of the world, these startups now get an opportunity. So just like Visa went from country to country, so now we have Indian startups like JustPay, could be any of these companies that can now become global service providers and global, and take advantage of the global opportunity as these exports. So it's not only enterprise software that will now get built for the rest of the world, but some of these services that get built on the stack will provide opportunities for startups in India now to build for the rest of the world.
Interesting. So what's next? Because it's not completely built yet. Is that right, Sanjay?
Right. I mean, I think we're going through this very interesting phase. Like I said, you've got all of these new ideas coming up. So the digital health mission is on right now, where the government is building basic registries around hospitals, doctors, nurses, labs, all of that, and standards by which parties can talk to each other. And there's this huge health ecosystem that's coming up, which Prashant spoke about. Similarly, we are reimagining e-commerce. E-commerce penetration in India is, we believe, at 2 to 3%. And the open network for digital commerce, it's a new idea. It's just in beta right now. But it's, reimagining the way commerce gets done. And so I think it's a wonderful place to be in India right now. And in terms of going global, building something in India is one thing, but then taking it to the rest of the world is
What's the
another.
biggest challenge when you take it global?
So, you have to rebuild in some senses, right? So we, for example, for ID, we are building something called the modular open source identity platform, which takes from Indian ID and other IDs around the world, ideas which can then be fit well into other countries' ecosystems. So we've launched, we built the software in India, and then we've taken it out globally. Morocco's adopted it, they've gone live. Philippines has gone live. We have 70 million plus people enrolled in these ID systems across these two countries. There's 3 other countries doing pilots right now. And we've got, and there's 6 countries which are experimenting with it and, sort of in the pipeline. I think we built ID for 1 billion Indians in about 5 years. I think we'll build ID for 1 billion people around the world in another 5 years as well. So I think it's an interesting opportunity for us to be, an enabler for many of these countries to see the same growth, the same formalization that we are seeing in India. And we think that's a good place to be.
Yes, and take something like health, right? You said, what are the big challenges? So it's not easy. So payments are slightly isolated. You can just work with like the banks and then make it happen. But when you're talking health, you're talking insurance companies, service providers who are of a very broad spectrum, different expectations on health outcomes. So it just gets a lot more complex. So I would say we are very early days, for example, even in the health stack in India. But if we can crack it, because that's a real big global problem in terms of how do you provide affordable care with enough transparency and enough focus on outcomes.
Is there a brief question from the audience? Otherwise, I will carry on. Yes, just in the front row here. We have a microphone to get to you. Do we have a mic for the front row? Yes, here it comes. Briefly, because we've only got a couple minutes. Thank you so much.
Yes, my name is Naveen Kapoor, and 2 brief questions. One for Prashant. While we take pride in saying that we have 3rd largest numbers in terms of unicorns,
right?
How are they doing? Because in terms of valuation, it's good to get $1 billion, but I believe many of them are bleeding now and they are not making money. I would like you to comment.
All right.
And second question is for Sanjay. Well, the globalization came and we are now, it was there for 20, 30, 40 years. And now countries are talking of anti-globalization move. And if we say that we are talking of globalizing our services, I think we have missed the bus. Indians run the world's biggest companies like Google and all. They have been developed by Indians. But I'm very sad to say that we have not developed any big brand in our own country. I would like you to comment on that.
All right.
Yeah, just 30 seconds on the whole unicorn journey moving forward, right? So I think startups, for one, are very agile. And I have big belief that founders will adapt to the ecosystem. So when there was this period of a lot of capital, they will of course use the capital to accelerate growth the way everybody would want to do it, right? Now when there is maybe a shift, like we said, focus on profitability, we see also startups adapting very fast to that. Now their focus has shifted to profitable growth, and they're okay growing by 30, 40, 50%, but would like to see a path to positive EBITDA, and investors are pushing for that. And I think you will see that there's a new benchmark in India, which is, can you get to $100 to $200 million in actual revenue and do that profitably? So now and there's a name now, Centaurs, right? So how many Centaurs can India produce from the 100 unicorns or the 150 unicorns in the next 12 months? I would say a big chunk of them. And finally, the stock markets are also great teachers of lessons for startups in humility, and I think that has also woken up a lot of these startups. And so I have big confidence that they will move to this regime of more profitable growth.
Yeah, and to, I think, answer your question on brands, etc., I think it's important to realize that things change all the time. And while, there was one wave of globalization that lasted, I would say 50, 60 years. It's been a good, long journey. But I think on the other side, what a lot of the India stack does is actually enables local sovereignty. it actually gives the local government and the people control on their destinies. It's not about an Indian company coming and running an ID system for the government. It is building it so that the government can run their own. And every country around the world is looking at how they can build these infrastructures, because they've seen what India did over the last decade. And we have gone from where we were a decade ago to today, like we just talked about the metrics around bank account inclusion. But I think on many of the development metrics around digitization and formalization, you've seen a really significant jump. And people are saying, why can't we do it for our own countries? And in some sense, it is about saying that as a country, you can improve the lives of your own people. And yes, we are there to help and support. But it's not about us taking over the country, right? So from that sense, I think that trust is there in these systems that will enable the countries to adopt them.
Really interesting. Enabling local sovereignty, inclusion, trust, things that we all think about every day. Thank you, gentlemen, for this. Let's give them a round of applause.
Thank you.
That's all we've got time for, but I'm going to hand over right now to Mark Barton to look at the challenges of building a global company. Be right back.
Thanks, Eddie.
Thank you. Thank you.
Thank you.
Thank you. Right. How are we feeling? Feeling good? Can we have a little scream or a cheer? Yeah. Last one before lunch. Lunch after next. So let's keep the energy up before we embark on lunch. How to crack the global market. First-hand lessons on building a global company. We're going to have a quick one-on-one chat. Me and Sachin for about 5-7 minutes, and we're going to invite the panelists up. So big round of applause, big cheer for Sachin Devdugal, Chief Wizard at Builder.ai. Sachin, thanks for joining us. Good to see you. Right. When was the moment, that bubble, if we were in comic books, where it became apparent to you that, yeah, I want to create this company? When was that eureka moment? Tell me the second when it happened.
The second is always difficult. I don't think you create companies at a particular moment.
Yeah.
I think it's like a wine. It keeps sort of going through the fermentation process. And for me, it started with when we were trying to get an app built and got really rogered, sitting in the mecca of the tech world in San Francisco. I went to Imperial College, did computer science with electrical engineering. I consider myself a good developer or an engineer. And if I struggled to get it done, there's no hope in hell for the little bakery down the road. And I think the second was I have two little dinosaurs, and I don't want them growing up in the world where they have to be the boy or the girl that can code.
Yeah, that's brilliant. I love that. And you've done so much, and you've created this global company. A is local, Z is global. How do we get from A to Z?
You know, it's a journey, Mark. And the journey has many mistakes.
Yeah.
To me, it's I always remember that Batman quote, which is, you know, when he sort of turned to his son and said he'd fallen down the well. It's like, well, why'd you fall down? Just to learn how to get up.
Yeah.
And so, to the extent you don't fall down, you never learn how to get up. And for us, it's been, you know, we started in India, then we went all the way across to the West Coast, then we came to the UK, then we came to the Middle East. And through each of those, and we went to Asia, sort of Singapore. And so each of these iterations, we've really learned what doesn't work and what does. And I think that A to Z is, number one, your customer is always local.
Yeah.
And I'd say that the second thing we learned is the only person that matters is the customer. After the customer is the team, and then it's everyone else. And so you build for the customer. And I think, you know, ultimately you're in a business where you're selling something someone needs to buy. That needs to be the most important maths equation above and beyond anything else. But, you know, typically if you've got a great product but you have no one to help you be successful, you don't have a global business or a local one. So if your customers are local, you have to interact with customers the way they want. You know, we saw, for example, in the Middle East, people wanted to do business on WhatsApp. And that was really tough. It's like, well, how do we do business on WhatsApp? And we realized like $100,000 contracts were being signed as a PDF sent on WhatsApp and sent back to you. And you know, we built this elaborate DocuSign, HelloSign type system. So I think it's very important to be local. I think the second then is culture. And we've made some big mistakes in realizing just how culture works, right? What's the math behind it? What's the biology behind it? 'Cause it's a human phenomena. We had an office in the US where like it imploded because we didn't focus on this enough. And it's not because we had a bad culture. It's just that office had its own culture and the rest of the org had something else. And so it's not just about hiring people. So to me, the hardest lesson has probably been, what is the rate at which you grow? And is there a maximum threshold?
And what's the answer to that?
So I think about the world from a team's perspective or people perspective as three primary shapes. When we're little, you have three shapes. You have a circle, a square, and a triangle. When you are one person or 10 people, the circle is everyone that knows your brand, which is just really the 5 people. The square is your team, and the triangle is the connecting fabric. Like the phone operator that used to connect the dots. And so when you're little, actually each point on those three shapes touch. Sort of makes sense, right? Because you can think of a problem, you come up with a solution, you're involved with the execution. When you get to our size, we're still not that big, 900 people. The circle grows exponentially in that journey because you want as many people to know who you are. The square is made up of lots of little squares, teams, regions, departments. And the square should never grow more than 1.9x. Because the biology of osmosis is culture is just like water, osmosis, right? And so you don't want to go from high concentration to low concentration, and if you do, but you don't want that high concentration to be all the new culture. And then you have the triangle, and this is the most important part that we all miss. These are the culture ambassadors. These are the people that connect the dots. So the square grows, say, 2x, the triangle shrinks by 4x. And for me, what this did is it set up a mathematical equation of, well, just how fast can you grow? And the minute you break these barriers, you're toast.
I love that. I love that. Let's bring in our other panelists. So good. Big round of applause for Satvir Singh Thakral, founder, managing partner of Riverwalk. Big round of applause. Shashank Bijapur, co-founder and CEO of SpotDraft, and Agam Kare, founder and CEO of Absolute Foods. Right, gentlemen, how are we feeling? What's the key to expanding internationally, Agam? What's the key? What's the top 3 things we need to know if we're looking to expand that A to Z journey?
I think the foremost thing is that to know that life is a function of people and capital, whether it's business or life. It's only a function of people and capital. And unless you have your equations for those 2 things sorted, there is no scaling up. You need to have great people and good amount of capital to do whatever you want to do. The second very important thing is to have infinite clarity about any subject that you want to dwell down in. Not good amount of clarity, not great amount of clarity, infinite amount of clarity. With infinite amount of clarity comes infinite power to grow, to scale. And when you're looking to get that infinite clarity, question everything. Why would you do a certain thing? Why would you scale a certain business? Why certain markets? Why certain sort of people? Why this business strategy? How to win against the competitors globally in a certain marketplace. That brings you infinite amount of clarity. What to play, how to win, why will you be ahead of everybody else? And third very important thing is doing the best works of your life. And not doing average work, not doing good work, not doing great work, but doing the best works of your life every single day. And when you do that, and when the entire organization starts doing that, phenomenal magic starts to happen. And when you really go back home and feel every day that today was fantastic, today was gratifying, and we did something which would change the planet for better tomorrow. When those 3 things, when those 3 things fall in place, magic happens. Now, yeah.
Yeah, Shashank, your 3 things.
Yeah, I think for us it was investors first. So if you're building a SaaS company like we are, investors will ask you, hey, when are you going to the US? So that was the first drive. Second was the market took us there, which is we saw, it was the pandemic when we started expanding. We had visitors coming from all over the world visiting our website, trying to pull us in. And the third thing is pure ambition. There are 0 SaaS companies that have been built without capturing US as a core market, and we thought that we had to go and sort of grow there. So that's really, again, people and capital true, but for a lot of companies, it's capital which drives you there, and then you start expanding.
Yeah. Savir, we're gonna look at this through your Riverwalk hat, which obviously is an India-focused fund, but we can talk about portfolio companies and the lessons that they need to learn to go global. What advice would you give?
So I think what we've seen constantly is usually one of three things draw you to global. One, it's the promise of customers, which is always the best. Two, it's the promise of a distribution partnership. Someone says, well, I'll take you there. And three, I think, is ambition, the faith that you can get there. I think the holy grail is usually, at least when you connect two of these, you know, either the people are going to get you there, or the people are going to buy your product when you get there, or some version of that. So we've seen that very often. Global ambition is, of course, a lot more difficult than it sounds, but sometimes very important. Shashank mentioned SaaS companies to the US. Shashank, we've been honored to partner with for many years. We've seen the change that has done both to your revenues and the team itself, right?
Yeah.
I think in some cases, though, it sounds easier than it is. So what we always advise when we talk to portfolio companies is the stepping stone you use to get there. Make sure one of them is very firm, whether that's distributor, whether that's customer, or a matter of both. So.
Can we elaborate more, Sachin, on something you said about the West Coast and culture and the office imploding because you didn't really, you know, you had to deal with it. Maybe you didn't think about that enough prior to that. Let's talk about building a culture in different geographies, managing the workforce. How do you manage that? You know, if we've got founders here, what advice would you give them if they're looking to expand abroad and managing the culture?
Hello?
Yeah.
Sorry. I think it's two things. I think one is around, you know, the grassroots. If you're going to set up in a new location, for it's the US, you have to remember culture is like water. It follows the rules of osmosis. And you need to have a higher concentration of people that already know your culture there, that ultimately will then bring everyone else onto the same page. That is just without negotiation, at least for us now. And we're just opening an office in France, and we're having that same discussion where we're moving people from around our offices that are already a part of the triangle. I think the second thing is do not grow at any cost. Related to that, because growing at any cost, filling seats in, you know, we're a big believer of Prism's law, which is the square root of the people that are contributing towards an output are actually the people creating more than 50% of that output. And so the bigger the company you have, people just assume output will grow linearly, and it doesn't. And I think the second part of this, sort of the B answer, is context. You know, as COVID kicked in, for us, people felt a part of the tribe because of the war, right, of COVID. And so what you find is human beings at time of war fall in line with the masses. And that's your family, your tribe, because there's protection in numbers. So we came out of COVID, so during COVID, we saw a spike in productivity. And then we came out of COVID, we saw the exact opposite. Suddenly everybody became up themselves. And we're like, well, hang on a second, like that's not the equation we understood for the last 1 year, what's changed? And it's just the people's relationship with work and the tribe changed dramatically. And so you research this more, and this is, I think, really important, is all human beings around the world, wherever you hire them, they have 4 chemical reactions that matter. 2 of them are selfish chemicals, dopamine and endorphins. Yeah. 2 of them are belonging chemicals, serotonin and oxytocin. You know, like the feeling you get when you see someone else helping someone else, even though you didn't help them, that actually is like belonging to a tribe. And so actually a big part of growing is how do you get people as fast as possible to have that right balance of those 4 chemicals? What do you do in the office? How do you interact? Because that makes you successful.
How do you do that? How do you get that balance right? Again, the culture in different countries. How do you build that culture, get everyone on board, managing the workforce? It's so important when you're looking to expand globally.
So for us, it's doing fundamental things fundamentally better. And when we say that, the idea is that you look at the workforce that you have today, the workforce that you're going to get for tomorrow, and then looking at what really matters to people. Because when you call it a company, what is a company but a group of people aligned to a purpose? And if every single person in your company is aligned to a certain purpose, and purpose comes prior to everything else, then everybody is driven for that purpose, for nothing else but for that purpose. And once everybody is aligned to that purpose, then you think of, as an organization, you think of what is the most important thing to these people. And then you start solving for those things. I mean, as founders, it's our job, it's our core KPI to ensure that everybody in the organization is served, either professionally, personally, I mean, whatever their interests are, it's our job. And once you start taking care of people in that way, I mean, culture has been taken care of.
How do you go about it?
Yeah, I look at culture as, you have those large Greek boats with long oars, and then people are rowing it, and then there's somebody sitting in front and playing the drums and sets the beat of how quickly you're supposed to row. So the role of a founder is that, and that's what sets culture. And it's incredibly difficult to do, especially when you're born, let's say, as an Indian company, and then suddenly you expand. People are wondering why you have Shah Rukh Khan memes going on Slack, and they're trying to make sense of what is happening. Why does 90% of the company stay in one geography, whereas the rest of them just work through the night? They have no support. I like what Sachin said, and that's what's worked for us as well, which is getting people from your home base, like your HQ, and then putting them in your other satellites where you're trying to grow, and use that as a way to promote culture and then get them a sense of belongingness with the company. A lot of it for us has been, again, it's been a hit and miss, but what's worked for us is having a very thorough interview process where culture takes precedence over everything else. Between skill and will, it's not really skill, it's will, and the ability to work in that cross-cultural manner. So yes, it's tough, and everybody is going to make mistakes, but it's you get it right over a few tries here and there.
Yeah. How do you look at it from a sort of VC perspective?
I think all great suggestions, stuff we've seen, when implemented well, works out. I think a couple of additional thoughts that we've seen work. One is it's very important to have consistent must-haves and must-nots in all the offices when you truly go global. And it should represent, of course, the founder's view, but also leave some cultural, fluidity, right? For example, some offices may have very different rules on work from home versus work from office, and in those locations, understanding what is necessary is when. But we have seen some consistency around, for example, the obvious ones are integrity, honesty, loyalty, but we have seen consistent feedback on, very strict stand across office on smaller, lighter things that do happen, but maybe something like office bullying or office gossip, and culture has some being built around saying, no, we won't have this at all, any of our offices. And I think when you have your must-haves, your must-nots, then some culture may be slightly different as it spreads. Of course, these are conversations of founders who've been very successfully built global teams, but we've seen some who've tried and have struggled. And so culture may form slightly differently in satellite locations, but the core values must be consistent. And I think somewhere between that, you will find what ultimately is company culture.
So we're talking about the lessons which you have to take on board if you want to grow, but should we want to grow globally, given the difficult macroeconomic background? We've got inflation out of control, we've got possibly most of the world heading into recessions, slowdowns, there's the possibility of stagflation, there's a war, Russia, Ukraine. It's a difficult background, maybe, if you're looking to expand globally. Sachin, what would your advice be?
I think it's a matter of context. Firstly is, do you need to?
Yeah.
Are you at 10% of TAM or 0.001% of TAM? Second thing is, I think it's quite fundamental, and for us, COVID was a huge tailwind because of this, is geodiversity is actually very powerful in 3 areas. Revenue, because if one country has a problem, one has an inflation issue, one has a slowdown, it's very rare the whole world has it, except COVID. But then, digital transformation kicked off. I think the second is in sector specific. If you are building an AI, selection bias is our biggest problem. It's the current day #1 problem for most deep tech companies. And so you need to make sure you have a ground set of folks around it. And I think the third is, in this expansion, so you've got revenue, you've got you need to from a selection bias perspective. I think the third is, will you benefit a lot from global creativity? I think you have national creativity, but we have seen prolific results when we get teams together from very different nationalities. So, we have 7 offices, we have 51 nationalities in the company, and we see stupendous results as a result of that.
So mixing
it up, because I think that works really well.
Global creativity. Have you seen that?
Yeah, I would just double click on that. And I mean, very valid point and similar observations. So for instance, we are a company very deep into R&D around everything to do with microbiology to synthetic biology, everything around biology. Now, you don't find, first of all those people in one country. You have to go across the world, and world is home. You're developing for the world, and therefore people from the world have to develop it. So you have to go across and find these people. What we have seen is that when you get people from all across the world, the best of the talent, they do magical stuff together. And our observation has also been that at times you just don't need to really take care of and think of all these cultural problems when you have the real great talent. But one key sort of problem that we face that I would love to share is that there were times when we had to select between a great skill set versus fitment. And at that point in time, we chose great skill set because we were just building up. And I think we did a mistake. Fitment, cultural fitment, tops the priority of everything that you do in the company, everything. And skill set may be built over time, and you have to take a long-term view on people and on anything that you build, but there has to be never a sacrifice that you make to a cultural sort of integrity of the company.
Shashank,
Yeah, so your question was, is this the right time?
Yes.
Right, so I think this is the right time because let's take a step back and see what is the unhealthy advantage that India has as an economy. It's the fact that we can get extremely talented people at a very cost-effective price. So this is the time where you build much faster because your competitors in the US or UK, where they're fully based out of there, are going to be bleeding money. Whereas you can build faster here and set up GTM teams elsewhere and do that experimentation sooner. So you can catch up to your competition and probably even overtake them. And this perhaps is the best time to do it. I feel like it's the time where others are going to be at their weakest, and we can use that to our strength.
Out of a crisis comes an opportunity. Do you want to add to that?
Yeah, well, for some, I think it's important. I mean, this crisis, of course, hit home for many. It's been difficult for startups across the block. And I think just for the broader audience, you may have people building out there, not just for the panel. I think being cautiously optimistic is probably the name of the game right now. I know sometimes it feels that we bottomed out. Things can get worse. But if you have capital, Shashank spoke about the macro factors of India for the world. It's incredible how India is looking and how well India is poised from a tech talent perspective, from the domestic market perspective, from a global perspective. Having an English-speaking population build out for primarily some of the English markets. Now we're seeing the regional languages kick in around India. And I think everything aligns correctly, but it's most important to make sure that you have the capital to do that and capital to possibly last longer than you may want it to. Yeah. And I think at this point, the lessons we've seen across all the recessions is you cannot put an end date on it. So I think only makes sense when you really have reserves to go for it, and then you allocate a certain amount for it. If you can't cover it in that period, then don't stretch, is what I think.
Let's get the audience involved. Gentleman at the front, gentleman second row. We're just going to get you a microphone, and then there's a gentleman at the back as well. Good, 3 good questions. Let's have them all, and then we'll feed you with some food. I think you all need a bit of food. I can see it.
Hi, my name is DJ. I'm the founder of Focus Engineering and Focus Technologies. The answer is congratulations to all of you guys to make it to here and successful. There might be some breakdown moments in your journey. What was your efforts in those journeys to come across those hurdles? Because everyone talks about success, everyone talks about nice things. We want to see that what were the values that you laid down so that you have become more successful companies.
Go down the row. Sachin.
So the net effect of all of our mistakes, because we made so many of them, is we codified culture. So we have a book. It's called The B6 Way of Life. It's a hardbind coffee table book that we ship out now. We'll be shipping the next version. We run 2 rounds of culture interview. They have a veto. We created math equations around how fast a department can grow. And if it grows faster, that the leader has to come present to me and explain how they're going to make sure the triangle fattens. So we've kept a constant vernacular. And I think for us, it's very clear we're building a business to serve our customers. We're not building a business to drive valuation, which is why you'll see we never ever talk about our market cap or our price, our valuation. We don't subscribe to that. That will come. That's the net effect.
What is your market cap?
I'm not going to tell you.
Worth a try.
So my sense is that, there are times when you really need perseverance, and you just have to ensure that you don't give up. And there have been times in, I think, everybody's journey, nobody is devoid of that. And resilience and grit is what keeps you going. And the second thing that is very important in that time is when you're hiring people, definitely have some people who will stand with you whatsoever may come. And you have to scout those people in the company, build that sort of culture in the company, and own that sort of talent, which will stick by the purpose, whatever may come. And purposes at times, what we have felt through our journeys, that purposes are profound. They can do magical things. And people will stand by you, stick by you. I mean, for 6 months, there was a time in our journey when we were not able to pay people, none of them. And they just stood by us and said, we are there. We will stand by it. And then things changed. And that happens. And so just sticking, that resilience, that perseverance is the answer.
I'm going to get the gentleman in the second row to speak, and then we'll finish the row, please.
Yeah. My name is Kamal Puri from Skyline International Group. See, in 48 years, I built up various businesses and taken an exit on that. Let me give you one, then I'll put a question on that. Some of the business, founder cannot sit. It's not allowed. I give you example, education. Founder is not allowed. I don't have an office in my university, by the way. It's not allowed. How do you manage that type of a business where founders are not allowed at all? What I've done in so many years, vision, mission, purpose, goals, objectives. I have put everything on auto. I don't visit any of my businesses. Doing globally, everywhere. I handle through technology. Now, my question to you people is, if founder is not allowed, what you will do?
Shashank.
I get the tough one. I mean, I guess the answer is in the question that you said, which is having technology to probably take your place and keep you updated on what's happening. Thankfully, I don't come from a business where I'm not allowed. I'm a recovering lawyer and I sell to lawyers, so and I go to office every day. But it's a tough one. I would say that it's difficult to keep track of everything. If you get the right sets of technology and people in place that can help you build processes and tools, then that's the right way forward. And then Satvi will give the better answer now.
I mean, I think I'm in a similar situation. I started the journey at Riverwalk and had Jay partner up, and I think if we're both founders, I think if I didn't go, things would be fine. If he didn't, maybe things would probably collapse. But I think it's the rest of the team, to the point raised. But it's interesting you mentioned all the things you said before saying then I wasn't allowed. And so I guess at some point the question is, earlier in your career, if you weren't allowed, what would have happened? And I think startups at some stage probably want to get to the point where they don't have to be there. And at some point later on in their career, they can honestly be a deterrent to growth. But early on, I think founder-led culture, decisions is very critical. And
I've been ordered to wrap, so I want a big round of applause for our wonderful panelists first. Well done, gentlemen. After lunch, which is now, we have Vivek Oberoi, the actor and investor, so that's something to look forward to. That's at 2:15, so be back here at 2:15 or I'll chase after you all out there. You'll hear me. Come back in here. Enjoy lunch. Have a fantastic lunch. See you at 2:15. Thank you all.
Thank you.
I think that went well.
Brilliant. Thank you very much.
Thank you.
Thank you. Thank you very much. Thank you. Well done. Thanks a lot.
What can a bank bring to the world? How can it enable economies and companies to achieve their goals and help people realize their dreams? At Emirates NBD, our origins are in this sand and this sea. Just decades ago, these calm waters were echoing with the voices of pearl divers. Today, from the same land, rise modern marvels. And happy communities have been thriving on this land. Emirates NBD is a financial services company, a regional player contributing to a global ecosystem, because ambition knows no borders. We exist for people, supporting human endeavor. We enable economies as an integral fabric of communities and businesses. We innovate as a means to make lives easier, simpler, more enriching. We invest in the societies we're in to ensure that we share our growth. And we're driven by customer needs and challenges across sectors. Looking beyond, delivering what's next. For us, scale matters. It helps us to deliver synergies and functional expertise to our stakeholders. Technology matters. It places us at the cutting edge of transformation. Strategy matters. It positions us for leadership today and into tomorrow. Ultimately, we're all about people. Our own, our customers, our communities. We believe in creating opportunities for prosperity. We are Emirates NBD.
We are the only platform in the world that allows a non-technical customer to get software built for them without ever having to write a line of code.
All you need is a great idea, a challenge that you want to solve for your business, and we'll build the software for you.
It's easy, fast, has a fixed price. We're making people's dreams come true.
From an entrepreneur with a genius idea in their head to an enterprise CEO looking to transform their organization to the next level.
Builder will be the platform that they will build upon.
When it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
A bond that's steeped in history. A partnership that's strengthened through strategic, economic, and cultural ties, and cemented further by the Comprehensive Economic Partnership Agreement, CEPA. India and the UAE. At Emirates NBD, we're committed to and capitally invested in India, the largest trading partner of the UAE. One of the largest banking groups in MENAT, we offer a unique advantage to Indian companies across the Emirates NBD network. As the bank of choice, we already enjoy fruitful relationships with several Indian majors in diverse sectors. Now, we're expanding our presence to enhance the geographical coverage in India, while also facilitating large volumes of trade and capital flows between India and MENAT region. For us, it's more than the opening of branches. It's the opening up of our vision for India. It's a future that's poised to create history, celebrating 2 new branches in India, celebrating one great bond. Emirates NBD.
Why are more and more businesses choosing Abu Dhabi Global Market as their home? Is it the high business standards the city offers? Or because it's the true financial powerhouse of the UAE? Offering stability, scoring first, and mastering the art of finance for generations, ADGM sits in the heart of the Abu Dhabi economic vision, investing in sandbox environments and a modern infrastructure for digital banking. Step through the gateway into the future. Enjoy a business-friendly culture within a globally connected strategic location. Get on board a fast-moving economy, powered by the leading financial center in the UAE's capital. Abu Dhabi Global Market, your business capital.
What can a bank bring to the world? How can it enable economies and companies to achieve their goals and help people realize their dreams? At Emirates NBD, our origins are in this sand and this sea. Just decades ago, these calm waters were echoing with the voices of pearl divers. Today, from the same land, rise modern marvels. And happy communities have been thriving on this land. Emirates NBD is a financial services company, a regional player contributing to a global ecosystem because ambition knows no borders. We exist for people, supporting human endeavor. We enable economies as an integral fabric of communities and businesses. We innovate as a means to make lives easier, simpler, more enriching. We invest in the societies we're in to ensure that we share our growth. And we're driven by customer needs and challenges across sectors. Looking beyond, delivering what's next. For us, scale matters. It helps us to deliver synergies and functional expertise to our stakeholders. Technology matters. It places us at the cutting edge of transformation. Strategy matters. It positions us for leadership today and into tomorrow. Ultimately, we're all about people. Our own, our customers, our communities. We believe in creating opportunities for prosperity. We are Emirates NBD.
We are the only platform in the world that allows a non-technical customer to get software built for them without ever having to write a line of code.
All you need is a great idea, a challenge that you want to solve for your business, and we'll build the software for you.
It's easy, fast, has a fixed price. We're making people's dreams come true.
From an entrepreneur with a genius idea in their head to an enterprise CEO looking to transform their organization to the next level.
Builder will be the platform that they will build upon.
When it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
A bond that's steeped in history. A partnership that's strengthened through strategic, economic, and cultural ties, and cemented further by the Comprehensive Economic Partnership Agreement, CEPA. India and the UAE. At Emirates NBD, we're committed to and capitally invested in India, the largest trading partner of the UAE. One of the largest banking groups in MENAT, we offer a unique advantage to Indian companies across the Emirates NBD network. As the bank of choice, we already enjoy fruitful relationships with several Indian majors in diverse sectors. Now, we're expanding our presence to enhance the geographical coverage in India, while also facilitating large volumes of trade and capital flows between India and MENAT region. For us, it's more than the opening of branches. It's the opening up of our vision for India. It's a future that's poised to create history, celebrating 2 new branches in India, celebrating one great bond. Emirates NBD.
Why are more and more businesses choosing Abu Dhabi Global Market as their home? Is it the high business standards the city offers? Or because it's the true financial powerhouse of the UAE? Offering stability, scoring first, and mastering the art of finance for generations, ADGM sits in the heart of the Abu Dhabi economic vision, investing in sandbox environments and a modern infrastructure for digital banking. Step through the gateway into the future. Enjoy a business-friendly culture within a globally connected strategic location. Get on board a fast-moving economy, powered by the leading financial center in the UAE's capital. Abu Dhabi Global Market, your business capital.
What can a bank bring to the world? How can it enable economies and companies to achieve their goals and help people realize their dreams? At Emirates NBD, our origins are in this sand and this sea. Just decades ago, these calm waters were echoing with the voices of pearl divers. Today, from the same land, rise modern marvels. And happy communities have been thriving on this land. Emirates NBD is a financial services company, a regional player contributing to a global ecosystem, because ambition knows no borders. We exist for people, supporting human endeavor. We enable economies as an integral fabric of communities and businesses. We innovate as a means to make lives easier, simpler, more enriching. We invest in the societies we're in to ensure that we share our growth. And we're driven by customer needs and challenges across sectors, looking beyond, delivering what's next. For us, scale matters. It helps us to deliver synergies and functional expertise to our stakeholders. Technology matters. It places us at the cutting edge of transformation. Strategy matters. It positions us for leadership today and into tomorrow. Ultimately, we're all about people. Our own, our customers, our communities. We believe in creating opportunities for prosperity. We are Emirates NBD.
We are the only platform in the world that allows a non-technical customer to get software built for them without ever having to write a line of code.
All you need is a great idea, a challenge that you want to solve for your business, and we'll build the software for you.
It's easy, fast, has a fixed price. We're making people's dreams come true.
From an entrepreneur with a genius idea in their head to an enterprise CEO looking to transform their organization to the next level.
Builder will be the platform that they will build upon.
When it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
A bond that's steeped in history. A partnership that's strengthened through strategic, economic, and cultural ties, and cemented further by the Comprehensive Economic Partnership Agreement, CEPA. India and the UAE. At Emirates NBD, we're committed to and capitally invested in India, the largest trading partner of the UAE. One of the largest banking groups in MENAT, we offer a unique advantage to Indian companies across the Emirates NBD network. As the bank of choice, we already enjoy fruitful relationships with several Indian majors in diverse sectors. Now, we're expanding our presence to enhance the geographical coverage in India, while also facilitating large volumes of trade and capital flows between India and MENAT region. For us, it's more than the opening of branches. It's the opening up of our vision for India. It's a future that's poised to create history, celebrating 2 new branches in India, celebrating one great bond. Emirates NBD.
Why are more and more businesses choosing Abu Dhabi Global Market as their home? Is it the high business standards the city offers? Or because it's the true financial powerhouse of the UAE? Offering stability, scoring first, and mastering the art of finance for generations, ADGM sits in the heart of the Abu Dhabi economic vision, investing in sandbox environments and a modern infrastructure for digital banking. Step through the gateway into the future. Enjoy a business-friendly culture within a globally connected strategic location. Get on board a fast-moving economy, powered by the leading financial center in the UAE's capital. Abu Dhabi Global Market, your business capital.
What can a bank bring to the world? How can it enable economies and companies to achieve their goals and help people realize their dreams? At Emirates NBD, our origins are in this sand and this sea. Just decades ago, these calm waters were echoing with the voices of pearl divers. Today, from the same land, rise modern marvels. And happy communities have been thriving on this land. Emirates NBD is a financial services company, a regional player contributing to a global ecosystem because ambition knows no borders. We exist for people, supporting human endeavor. We enable economies as an integral fabric of communities and businesses. We innovate as a means to make lives easier, simpler, more enriching. We invest in the societies we're in to ensure that we share our growth. And we're driven by customer needs and challenges across sectors, looking beyond delivering what's next. For us, scale matters. It helps us to deliver synergies and functional expertise to our stakeholders. Technology matters. It places us at the cutting edge of transformation. Strategy matters. It positions us for leadership today and into tomorrow. Ultimately, we're all about people. Our own, our customers, our communities. We believe in creating opportunities for prosperity. We are Emirates NBD.
We are the only platform in the world that allows a non-technical customer to get software built for them without ever having to write a line of code.
All you need is a great idea, a challenge that you want to solve for your business, and we'll build the software for you.
It's easy, fast, has a fixed price. We're making people's dreams come true.
From an entrepreneur with a genius idea in their head to an enterprise CEO looking to transform their organization to the next level.
Builder will be the platform that they will build upon.
When it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
A bond that's steeped in history. A partnership that's strengthened through strategic, economic, and cultural ties, and cemented further by the Comprehensive Economic Partnership Agreement, CEPA. India and the UAE. At Emirates NBD, we're committed to and capitally invested in India, the largest trading partner of the UAE. One of the largest banking groups in MENAT, we offer a unique advantage to Indian companies across the Emirates NBD network. As the bank of choice, we already enjoy fruitful relationships with several Indian majors in diverse sectors. Now, we're expanding our presence to enhance the geographical coverage in India, while also facilitating large volumes of trade and capital flows between India and MENAT region. For us, it's more than the opening of branches. It's the opening up of our vision for India. It's a future that's poised to create history, celebrating 2 new branches in India, celebrating one great bond. Emirates NBD.
Why are more and more businesses choosing Abu Dhabi Global Market as their home? Is it the high business standards the city offers? Or because it's the true financial powerhouse of the UAE? Offering stability, scoring first, and mastering the art of finance for generations, ADGM sits in the heart of the Abu Dhabi economic vision, investing in sandbox environments and a modern infrastructure for digital banking. Step through the gateway into the future. Enjoy a business-friendly culture within a globally connected strategic location. Get on board a fast-moving economy, powered by the leading financial center in the UAE's capital. Abu Dhabi Global Market, your business capital.
What can a bank bring to the world? How can it enable economies and companies to achieve their goals and help people realize their dreams? At Emirates NBD, our origins are in this sand and this sea. Just decades ago, these calm waters were echoing with the voices of pearl divers. Today, from the same land, rise modern marvels. And happy communities have been thriving on this land. Emirates NBD is a financial services company, a regional player contributing to a global ecosystem because ambition knows no borders. We exist for people, supporting human endeavor. We enable economies as an integral fabric of communities and businesses. We innovate as a means to make lives easier, simpler, more enriching. We invest in the societies we're in to ensure that we share our growth. And we're driven by customer needs and challenges across sectors, looking beyond delivering what's next. For us, scale matters. It helps us to deliver synergies and functional expertise to our stakeholders. Technology matters. It places us at the cutting edge of transformation. Strategy matters. It positions us for leadership today and into tomorrow. Ultimately, we're all about people. Our own, our customers, our communities. We believe in creating opportunities for prosperity. We are Emirates NBD.
We are the only platform in the world that allows a non-technical customer to get software built for them without ever having to write a line of code.
All you need is a great idea, a challenge that you want to solve for your business, and we'll build the software for you.
It's easy, fast, has a fixed price. We're making people's dreams come true.
From an entrepreneur with a genius idea in their head to an enterprise CEO looking to transform their organization to the next level.
Builder will be the platform that they will build upon.
When it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
A bond that's steeped in history. A partnership that's strengthened through strategic, economic, and cultural ties, and cemented further by the Comprehensive Economic Partnership Agreement, CEPA. India and the UAE. At Emirates NBD, we're committed to and capitally invested in India, the largest trading partner of the UAE. One of the largest banking groups in MENAT, we offer a unique advantage to Indian companies across the Emirates NBD network. As the bank of choice, we already enjoy fruitful relationships with several Indian majors in diverse sectors. Now, we're expanding our presence to enhance the geographical coverage in India, while also facilitating large volumes of trade and capital flows between India and MENAT region. For us, it's more than the opening of branches. It's the opening up of our vision for India. It's a future that's poised to create history, celebrating 2 new branches in India.
Back. Thanks so much for coming back. So this is one of our inspiring journeys, and anybody who's been at an India Global Forum will know that we have these chats from time to time. Absolutely delighted to be on stage with you again, Vivek.
It is absolutely mine.
Really great to have you. Now, actor, philanthropist, social impact investor, but we're going to get to all that in a minute. But the last time I was with you on stage, we talked about the fact that you had just been in India's most binge-watched show, Inside Edge.
That is right.
And yet again, we're back here again, most binge-watched show in India, Dharavi Bank.
That's right, Dharavi Bank.
Now, the big question I have is, the last time I spoke, you had a mustache. There's been some manscaping since then. What's behind it?
Oh gosh. I think creative calls. The mustache came off pretty recently.
Okay.
And I had to have the mustache for creating this very strong, very desi, very Indian, macho kind of character look. And then back to being the guy next door.
All right, excellent. Okay, so now you are no newbie to the power of streaming services.
That is right.
We've, I think, got one of your...
Yeah, I think Karan Bedi is in the audience, the CEO of MX Player.
All right, big wave. We've had COVID in between.
That's right.
What do you think has been the biggest change in the film industry in the last 5 years?
I think COVID has had a very interesting effect on viewing patterns. All the OTTs were going through the biggest boom that they've ever seen, especially in India. And India is this market for double-digit growth. And what was fascinating was OTTs were always trying to pitch and compete against theatrical releases. And as long as the theatrical release option was alive, the affordability of content to pitch more than what a theatrical would be able to deliver and get that on an exclusive OTT release was always more difficult. But when COVID happened and theaters shut down and then you had all kinds of rules which are not more than 50% occupancy, the numbers on theatrical drastically dropped. The security levels for being able to know for sure that whether you will be allowed to release or whether there will be a new wave and people will just stop theaters, government will stop theaters again. So people went to OTTs and they saw a flood of content at more reasonable pricing. And I think that exclusivity also changed patterns in viewing behavior. So people went to OTT a lot more because they were spending more time at home, work from home. We all know how that went.
Yeah, I wasn't a fan, were you?
Not really, no. I believe in that physical interaction and engagement. Yeah. But that led to extreme viewership. Like Karan's platform, MX Player, ended up with shows that crossed 1 billion minutes in terms of eyeballs, in terms of viewing.
Extraordinary.
Yeah, it's extraordinary numbers. And that happened mainly because you had this whole, COVID, where people had the kind of time to be able to see more content.
Did it make a difference in how you made films as well?
Well, yes, I think you gear up to an OTT audience. You gear up to building characters that need to last 400 minutes rather than 120 to 150. You create different character arcs, and then you also think about writing a Bible for season 1, 2, and 3.
Right.
So you need to have an ability to create an arc not just for the beginning, middle, and end of a movie, which is finite, but you need to think of it from the beginning and what it would look like as an evolution over the next 3 years. What could be the potential content in the same space coming out? What could be the changes in the viewership patterns and what people want to see? Because 3 years is a long time to sustain a show.
Interesting. All right. Well, let's move along your own personal arc from actor to philanthropy, and then we'll move into the social impact investing. Sure. But why did you start your philanthropy journey? What was the impetus behind that?
I think I can remember it like yesterday. It was interesting because in India, cricket and cinema, it's almost like a deification, right? So you achieve instant superstardom, you achieve this mania, this craze, but the love and the hate, two sides of the same coin, are equally personal. So it's more like we love you or we hate you. The critics build you up, they tear you down. And when you're about 25 years old, it's a lot. It's a lot to take in. The success, your first failure, your first success. You're the blue-eyed boy and suddenly you're being criticized, or lobbies, different powers at play, egos to deal with beyond the creativity. So I went through my own journey pretty early in my career, and it was a difficult one. And I was moping about, why me? And my mom, who I look up to as a personal hero, kind of changed that for me. She said, when you had the success, when you were standing up there receiving all these accolades and awards, did you ask why me? And she said, what are you doing this evening? I said, nothing really. And she said, I want you to come somewhere with me. And she took me to Tata Memorial Hospital, the pediatric cancer wing. And that day I learned two things. The first thing that I learned was, I'm crying about a career issue. I'm upset about a personal problem. And then I see these 7, 8, 9-year-old kids. The hair's fallen out because of chemotherapy. They've got bloodshot red eyes, dealing with leukemia. Their parents are there. Everyone's so worried and anxious. And they're dealing with it okay. They're fighting back. So I realized that my problems were nothing. But the second understanding was even more profound. I didn't have to do anything. I just walked into the room and these kids were smiling. I didn't have to carry toys or gifts or say something nice or do something nice. Just by being there, just walking in, their eyes lit up. They were smiling, from year to year. And I realized I can bring joy. I can leverage this celebrity to actually ease the pain and bring joy. And that started my journey into philanthropy. I started spending time. Then I wanted to go into fundraising. I went into a whole bunch of interesting journeys there. When the tsunami hit Edie, I had this natural impetus to be there within 48 hours of the impact. And the whole world was telling me, from government administrators to friends and fans and families, saying, what are you doing? There could be an epidemic. There could be, a crazy situation there. Where are you going to stay? How are you going to live? What are you going to do there? I didn't know, but I just knew I had to do something. And I landed up without a plan, ground zero, 48 hours later. I saw the devastation with my own eyes. And it was incredible because I was able to leverage that celebrity. And within maybe 2 days of being there, I had 200 plus youth volunteers who were fans who just landed up, pitched a tent on the beach next to mine, and said, we're here to help. And we galvanized that into a movement, and then it became Project Hope. And what started as a pure rescue operation and a relief operation went into actually rebuilding villages from scratch. I had people who were town planners, who were big consultants and architectural firms coming in from Bangalore and saying, service is absolutely free, we want to be a part of what you're doing.
Wow.
And it created a lateral project where there was no ownership, and yet everybody kind of owned it. There was no vertical thought process that I run this, I'm just enabling. And I realized that has tremendous power because everybody was a stakeholder. Everybody pitched in. And before you know it, you had the first 3 smart villages in India rebuilt from scratch within 18 months of the tsunami. And we had managed to house more than 1,000 families and recreate jobs for the village economy. So I thought that was extremely powerful. And that's what kind of led me to, be more actively involved in philanthropy.
Interesting. And so you've moved not just from giving and enabling, but now to investing and starting some companies that have social impact. Tell me why you made that move as well.
I think there's a fatigue associated with giving. There's a fatigue definitely associated with asking. So I do fundraisers, I still do them every year.
Donors fatigue is a real thing.
It's a real thing. And after some time, people just don't want to take your call because they're like, he's going to ask me to give more money. And putting that out there all the time, and the need is so large, I thought there has to be a better way. There has to be a smarter way. There has to be a way to create something that is more sustainable in terms of giving and creating measurable impact. Also, you have accountability, but growth is very limited when you're doing something completely non-profit. Again, it's linked to how much you can raise, what is the raising capability, ethically, how much do you want to spend on that raising? Do you want to do it in a big 5-star hotel? Do you want to have Edie Lush, on the show, helping you auction something? So I realized that all of these things are hurdles in growth. And if you have a social impact for-profit model, you can exponentially scale. So in the last 4.5 years, I've co-founded 4 companies that have all had social impact for-profit as their identity. And we've scaled infinitely. I mean, we've had most of the companies growing between 20 to 30 times. So great for investors, great for impact funds, for legacy funds, people who want to carve out a piece of their portfolio. And some places we're returning more than they get from their conventional returns, and they feel good about it. And the amazing thing about technology today, Edie, is that this impact is actually measurable. There's data that you can present crisp and clear. And it's constantly evolving because you have AI and ML in the back end. So the data is evolving and the measurable impact gets deeper and deeper. You get more data analytics in terms of the actual cause and effect of something that you do. You start with something in mind as an objective, but you realize there's so many more things that are happening simultaneously that you didn't plan, but are serendipitous. And then that adds to deeper data and better understanding, saying that, oh, here's even more impact that you can create.
I love that idea of the data exhaust coming out from and actually having its own value and its own impact.
Absolutely.
Well, let's take a couple of these. Let's start with the education technology business that you've co-founded.
That's right.
Okay, so tell me why you chose education technology and what this one specifically does.
So I started with looking at the finance side. So I think the history to it is I had the opportunity of going with the Prime Minister to Hanover. And it just blew my mind at the Messe to see where technology is going and how the digital revolution is happening, how industrial revolution is happening. And I realized that on the ground, we're far behind as India. We have the brains, but we haven't applied them to what the future could be. So I wanted to bring that into context, and I set up a state-private university, the first of its kind, which was a startup and innovation university. So that was the beginning. I wanted to create a meeting place of educators and minds and create a blend between traditional education, because that's the pressure from the parents, and startups, which can run parallelly. So we were the first university to get a dual degree capability. But then from there, I realized that within education, there was a lot of problems with financing education. Unlike the West, education in India is not as expensive. Even if you're looking at purchasing power parity, it's not as expensive. But what happens is, say I'm a security guard, and I want my child to go to an English medium school, which is only 40,000 rupees, but I make maybe 20,000 a month. And they want me to pay 20,000 up front for the first term. And it is that catch-22 where I'm trying to go out there and raise informal economies, I'm trying to raise money for that I identified as a serious problem. So we started with FinancePeer, and we started giving zero collateral loans. Then we went into zero interest loans, where we played factoring stories. And before we know it, in 4 years, we're partnered with 12,000 schools, colleges, and universities. We have 3 million students. We have a few investors in Finanspeer here. The company's grown exponentially, maybe 30 times in the last 4 years. So that led me to say, what else can I do in education? And that's when I co-founded iScholar.
Okay, and tell me about that.
Well, iScholar ED was, the best way to describe it is, it's a phygital bridge, right? A physical meets digital. Because I realized the focus was only on digital in India.
I love that the rest of the world calls it hybrid, but you've created your own.
I just love phygital.
Okay. Not rather than fidgeting.
So phygital was, the idea was to create a phygital bridge between India and Bharat. I'm very conscious of rural India, and I realized that the growth of India's story is going to be fueled by the rural economy in Bharat. For the rural economy in Bharat, we have to empower kids there. So you have the best teaching quality in the urban centers, which I call India, and you have the most aspirational students in Bharat. So like the American dream, I think the Bharati dream is mera beta engineer banega, meri beti doctor banegi. They either want to be an engineer or a doctor or achieve a government service story. But the access to quality education in the towns of India is lower. Now what I realized is that there was 3 kinds of divide. The one was a geographical divide. Say I'm from the Northeast, I come down to Delhi, I come down to Kota, to the Kota factory to study. I deal with cultural issues, language issues, issues of food, simplest of things like that. And that leads kids to get into depression. They get into fatigue. They just want to quit and go home, even if they have the talent.
Yeah, mental health issues, loneliness, yeah.
And the second thing that we realized as a problem was gender. So the patriarchal mindset in Bharat, very few parents or families, or even if the immediate parents are okay, the grandparents said, well, you can send the son, but the daughter has to be right here in our village, in our town, because otherwise who's going to marry her? We can't send her to the big city. What will they say about her character? So even though she had the ability, she was probably more capable, she was being left behind. She wasn't being able to access really good quality teaching. And the third thing that we realized was language. You could have somebody who's brilliant at mathematics but doesn't know a word of English. And when they go to the big cities, they're taught with 60, 80, 200 students in a classroom, and it's all in English. So where's the vernacular? And they get left behind, they get disappointed, and they drop out even after making it this far of cracking of these exams. You even have people who crack IIT and then drop out from there. So we wanted to address all these 3. So what we did was studio style on a proprietary based technology, created live 2-way interactive classes with teachers in the cities and physical centers in Bharat connected digitally, having kids attend in a 2-way interactive session.
How many kids per?
A max of 30.
Max of 30.
Because our data told us that beyond 30, the actual doubt clearing, the actual being able to feel like a part of a classroom, connecting with a teacher was very difficult. And then we looped that up back with a fantastic tech backend that gave 24/7, doubt clearing mechanisms. Kids study in the middle of the night and they have a doubt, they want to refer back to it. So they get, taken back to the exact same video of the lecture in the repository, and sometimes specifically to the aspect in the video.
Okay.
And then we have a lot of measurable impact in terms of when a topic is taught. There's an objective question session, so you fill that up, and that questionnaire then gives immediate feedback to not only the students and parents, but also the teachers. Out of 30 kids in a class, if 22 fail to grasp a concept, then there's something wrong with the way the teacher is teaching it.
Right.
And every teacher has to be multilingual. They have to be able to speak in English and Hindi, or English and Kannada. That ended up creating a fantastic net result for us.
And the lectures are in different languages as well. That must have been important.
Yes, the ability to be able to converse in a language that a student can grasp and understand the concepts is exceptionally important. English ends up alienating a lot of really bright minds.
So you mentioned that you can measure the impact. So what has the impact been?
Oh, it's
so
been
far?
exceptional. I mean, we've had a much higher success rate than many of the larger organizations that we hear of as unicorns, etc. So the net impact has been exceptional in terms of number of students clearing NEET or IIT JEE, so much so that we were fortunate enough to close a partnership deal with MIT. And tasked with propagating the MIT course curriculum at a substantial discount for Indian students across our entire network. So I think they saw what we were doing, they saw that we were quality focused, and they chose us over many more, much more established companies, because they realized that we do it in a more focused way. And when you sit in a classroom, there's an automatic sense of focus to it. So the idea was to kind of really give the best platform to the students of Bharat and build that human capital out.
Interesting. Running out of time, I do want to get you to give me 40 seconds. If I'm an apple farmer now in India, I understand you have an agricultural technology platform. It might be interesting to me too.
Yes, well, we co-founded a company called AgriBid. And everybody's been aware of what's happened with the farm protests in India and the issues with the middlemen. So this whole legacy of the British Raj, of license Raj, of cartelization in APMCs and farmer markets has really depleted farmer income instead of increasing it. Farmers have been exploited, both in terms of delayed payments, then in terms of no transparency in terms of what price their goods were actually sold. They just write it on a piece of paper and said, this is the price. Farmers end up paying 5 to 6% to the market itself, another 5-6% brokerage, another 5-6% in terms of cartage, logistics, and this is not counting the labor to harvest. So they're 20% down by the time they reach the market, and that's when they're exploited. So we built the first system of its kind to source from farms directly, consolidate the farmers into FPOs, and give them access to a global market across trading houses, multinationals, SMEs that use food as their raw material, food security programs internationally, within India, public distribution systems. So we built that bridge out with AI. It's been a huge success story because it's very simple. It's 3 clicks for a farmer to figure it out. The fact that we've achieved 4 million farmers on the platform, and within the next 6 months are on track to achieve 10 million farmers on the platform is an endorsement in itself. And we've also managed to achieve in just a year and a half a partnership with the World Bank. And we've achieved, this is what we're exceptionally proud of, increasing farmer income net to the farmers at 28.5%. Because the intent was never to earn anything from the farmer. We charge them nothing for onboarding them, we charge them no transaction fees, and yet we're a profitable agri-tech company.
Fantastic. All right, we've sadly run out of the time. I've got to ask you 3 very quick questions.
All right.
Do you prefer playing the good guy or the bad guy?
Well, I'm told I'm the good bad guy.
I feel like that's right in the middle. Okay, do you prefer filming in Delhi or Dubai?
Ooh.
Remember the
That's
audience.
a tough one. I can't even say what time of the year, because they're pretty similar in terms of the climate at the same times of the year. Well, thank you. I think Dubai is a lot easier in terms of filming. I remember filming in Delhi ED, and we were shooting next to the Qutub Minar, and we had these cops come up to us and said, they hit their big stick to the camera, and I was like, that's a $500,000 camera, dude. And they're like, you can't film here. So we have permission. No, you have permission to shoot the Qutub Minar from this angle, but you don't have permission from this angle. So you have to pay us extra for it. So yeah, unfortunately, that was Delhi.
All right, final question for you. Cricket World Cup or Football World Cup?
Oh, Cricket World Cup.
All right. That'll be good news to my, my co-host, Mark Barton. I think he's a cricket fan. So thank you so much, Vivek, for joining. Ladies and gentlemen, let's give him a huge round of applause.
Thank you. Always a pleasure. Thank you so much.
When it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
Now, do we have any, because Edie brought up sport, it's got me thinking, do we have any Croatia or Argentina fans in here? Croatia, hands up. Who wants Croatia to win today? 1, 2, 3, 4, 5. Okay. Argentina? Well, okay, interesting. So it's fairly equal. What about Morocco against France? Well, France hands first. My wife's French, so I guess my kids are half, oh God, they're actually half French, yeah. So I better, anyway. And Morocco? Yeah, I think we want Morocco to win. I think we want a Croatia-Morocco final. And how about Morocco winning? Would that be fun? Yeah, exactly. I mean, that'd be the best thing, but it's going to be tough for Morocco, but they're doing incredible. Well done, Morocco. Okay, let's get it on. Let's talk about trend spotting. Have we reached a saturation point with fintech? Big round of applause while I welcome the guests to the stage. Ganesh Rangaswamy, Managing Partner at Quona Capital. Upasana Taku, Chairperson, Co-Founder and CEO of MobileQuick. And Raja Al-Mizruhi, Executive Vice President, DIFC FinTech Hive. Thank you all for joining us today. Don't you love the titles of these panelists? I know you do. It's quite sort of contentious. Have we reached a saturation point? And it engenders good debate. So to my left, pass the parcel. Have we reached a saturation point with fintech? Answer the question. Ganesh.
Yeah, as we discussed off stage, I think it's a very leading question.
Yeah.
And I think it couldn't be farther away from the truth in terms of where we are in the fintech cycle. So as I said off stage, I think we can say fintech is dead, but long live fintech, because we have a long way to go and it's going to be rewritten in a big way in the coming decades.
Fintech is dead. I'm writing this down for my second t-shirt after my other one earlier.
Why are you saying that fintech is dead? It will be all over the headlines. What will we fintech founders do?
I think, do we have the time to go into this? What I actually mean is, I think it's going to get rewritten in a much bigger way than what we have seen in the past. So forget saturation, we're just getting started, which I think you would agree with.
What do you think, Upasana? I know you feel strongly about what's the saturation point? What does it mean?
So I don't think there is a saturation point, and I can say that from experience. So I started my career as a product person in fintech in the US. And even in that developed market or Europe, I think that the way fintech is set up will get overhauled. That's why, while there was a PayPal, in the last few years you've seen a Stripe and a Square and a Marqeta and all these companies come up, right? So the old technology gets depleted and new stuff comes about. In newer markets or emerging markets like India, where we've been building MobiQuick for the last 10 years, despite all that has happened in the last 5 to 10 years, there's been a lot of innovation disruption. But even today, out of a population of 1.3 billion in India, only 300 million Indians are transacting digitally. Less than 70 million Indians have access to credit. And less than 30 million Indians have insurance or have ever invested. So you tell me, I mean, if all the numbers are 5%, 10% of the population, I mean, just in India, it's a huge, huge opportunity. But I do believe that in larger markets or evolved markets also, the technology is getting disrupted very rapidly because, the old is no longer convenient, is no longer fast, and it will be changed. And I think that is one area where financial technology is something that India is doing really well at. And now, Indian founders are trying to bring it to global markets as well.
Raja, how do you see things?
I totally agree. I mean, we're just getting started with fintech, and it's the tip of the iceberg. And fintech is really redefining the whole financial services sector as we know it, because digital and technology has redefined everything from the beginning and reset. I've worked with regulators, and they're all learning technology to understand how to regulate these services over technology. I believe there are a lot of work that's happening in fintech, but adoption is taking longer because the financial institutions' ability to work with this fast-moving development is taking longer than expected. I tried to apply for a bank account myself for my company, and I thought I could call someone and get it done, but let me go through the process. It's painful, and you have no idea. No matter how much these institutions invest and work with fintech startups, they're not able to integrate that technology.
Why not? Why aren't they able to integrate it, Raj?
I think it's the mindset, really, and then also the technology and the value that the technology is bringing is not really communicated at everyone's level. Probably you have an executive sponsor who's pushing this agenda, but it's not cascaded properly within the organization. I resubmitted my documents 5 different times because one edge was missing or whatever. And then the fact that sometimes you have to go and take your ID every time for every transaction just makes you wonder, this saturation point will take a very long time to get to.
Yeah. Ganesh, tell me about the opportunities. I mean, you're a VC company. You've got 50 more portfolio companies. You're present in Latin America, Africa, MENA, South and Southeast Asia. Where are the great opportunities right now in fintech?
Yeah, I think, excuse me, I think it's a long discussion, but I'll probably keep it to 3 broad areas that we are excited about. And the first one I already referred to in financial infrastructure.
Yeah.
And I think Raja and Upasana both referred to the fact that there's so much friction because our systems across the world are legacy in most countries. They're changing at different cadence in different countries, but essentially we're going to see a rewrite over the next decade, I would say. So broadly in financial infrastructure across every single possible use case, whether it's payments, lending, broader banking, insurance, wealth tech, so on and so forth. That's one broad area, and we're going to see a lot of things come out of that. The second broad area, I would say, is just the nature of finance, financial innovation and finance itself is changing. Again, as I was saying backstage, we look at fintech or financial innovation as the oil that greases the economic engine. It's not a be-all and end-all. It has impact across the economy, which means with open data, open commerce, open finance systems, we are going to see a lot more contextual and embedded financial solutions. So commerce and financial solutions, financial innovation, supply chain and finance, food tech and finance, health tech and finance, so on and so forth. So we are going to see a lot more embedded solutions and applications which are built on top of this infrastructure. Infrastructural revolution we're going to see in finance itself. So between those 2 broad areas, I think we are going to see tremendous amount of innovation and rewriting of finance.
We have one solution sitting next to you, one of the biggest fintech platforms in India, one of the largest mobile wallets, one of the largest buy now, pay later players. How quickly are you having to evolve and keep with the times when we talk about disruption and competition and opportunities as well, Upasana?
So I think it's nothing if you cannot be a successful fintech player if you're not continuously looking at what's next. So if you've started with one product, you try to get scale in that product. Now you have consumers, the consumers have problems. For us, we started as a mobile wallet for your daily life payments. So if you're trying to order a cab, order food, pay your bills, we are in all of those checkouts, and we want to make that experience very simple for the user. And then we realized, okay, while users are doing that, sometimes they want a refund, but our banks don't have such simplified processes to make that happen. So then what I'm trying to say is that either there are operational issues or there are consumer-facing, front-facing issues. And in all cases, you have to be ahead of innovation. So when we started MobiKwik, India did not have a wallet regulation. The regulation got written a couple of years later. In 2018, when we launched our Buy Now Pay Later Zip product, nobody in India was doing Buy Now Pay Later. And then, last year, because Square purchased Afterpay, all of a sudden we had like 1,000 companies doing Buy Now Pay Later. But it pays to be ahead of time. If you are ahead of time, then you have the time to experiment, to try different things, and then you know what is the right product market fit and how to scale that. The other thing I wanted to say is with regard to what she was saying, especially in a market like India where we operate, fintech is very regulated. So for everything you need a license. For payments you need a license, for investments, for credit. So it's the DNA, the product and tech DNA that most fintechs have, which differentiates them from the large financial institutions. That is very important. Innovation is very important. However, it cannot really create value if it is not done in tandem with regulation. So the fintechs that have to succeed even globally, I think they have to have a little bit of that banking DNA and a lot of the tech innovation DNA, and just the marriage of that is what helps you bring something to scale.
Is that right, Raja? Banking DNA mixed with tech DNA, and it sounds like sort of Jurassic Park. You mix it all together and out pops a dinosaur.
It's not that bad.
Mostly, but I would like to share an example that really enlightened my view on this. If you look at some of the successful digital banks, and I'm talking about the region, not only the region, globally, it is banks that set up tech companies to build their digital platforms, and those digital platforms were connected to the banks. And there are the tech companies that build financial products but did not have the bankers in there. You need a balance, you need both. It can't be one or the other, because if you don't understand the regulation, if you don't understand the process, you won't be able to launch. And we've seen a lot of them fail because they lack that. So the balance of knowledge and experience in both areas. But also innovation is very important at this point, because you're trying to do things differently. You're eliminating the middleman, you're making the processes more efficient, you're enabling the customers to have access to those services very quickly, anytime, anywhere. And to do that, it's an ecosystem. It's not just the technology, not just the banker, not just the telecom provider, not just the infrastructure. It's an ecosystem. And for you to push one product or an idea out, you'll have to lobby the whole ecosystem to support you to get there.
Yeah. Can we talk about India specifically? And you were saying we're basically we've barely scratched the surface. What's underserved when it comes to fintech in India? What hasn't been done? What is it? What's being seen to be difficult to achieve? What are the harder areas to crack when it comes to fintech?
I think it's a complex question. It's and Upasana, I think, somewhat touched upon it. I guess it's not just about the product and tech. It's about the fact that the society, the landscape of the society, fabric of society, digitization, everything's changing. In that context, the way financial services are experienced or will be experienced as you move forward, that's changing. The public infrastructure is sort of probably unparalleled compared to most places in the world. That's creating newer opportunities, but that's also disrupting what's already been done. So it's a very complex sort of juxtaposition of a lot of different things. In that, so in one sense, you can say, hey, payments is solved or lending is solved or something like that, but not really, because as we see cycles of innovation, we'll see step changes in adoption, and we'll go through sort of an unbundling and rebundling cycle of services. So it's very hard to put my finger on sort of one particular thing and say it's not been done. In a way, we are going through a massive rewrite of the whole ecosystem, and we are probably at in some ways ground zero or level one of that, I would say.
Do you agree with that? What hasn't been done, and why aren't you doing it?
I am doing it. In the last few years, we have scaled to 130 million users, 4 million merchants. That's fairly sizable. However, out of the entire population of 1 billion plus, 800 million Indians have a bank account. But even so, only 300 million are digitally active. So there's a 500 million that's banked, but banking for them means going to the ATM and withdrawing cash. So first I need to get them onto a smartphone. Once they are on a smartphone, they'll start consuming
How do you get them onto a smartphone?
Well, I'm not getting them onto a smartphone, but there are companies that are getting them onto, because the macro in India is like that. You can buy a smartphone for less than $100. Data cost in India is the cheapest in the world. So anyone who gets a smartphone has unlimited data for the entire month. Those are the kind of plans. Once they start consuming news and content, quickly they come to their first transaction. And that's where I get the user. Then I educate the user that, oh, if you start transacting digitally, now I have a history. Now I can give you credit. I can also give you products where you can invest your money. All of this is yet to happen at the mass level. The banks in India are very good, very strong, about 90 banks, 10, 15 private banks, the remaining are government owned. They've been building the branch-led model. So you set up a nice fancy branch, you walk in. If you have a branch-led model, your operating cost is so high that you can only serve the rich Indians. What I say, the top 100 million, maybe 150 million. So the only way financial products are going to reach the large and upwardly mobile middle classes of India, the young millennials who want everything very conveniently, is going to be on their phone. The smartphone is going to be their key to receiving the financial products which their own bank is not willing to offer.
How long before bank branches are out with the dinosaurs?
Sorry?
How long before bank branches are extinct, like the dinosaurs, coming back to Jurassic Park? When are we done with bank branches? All of you.
So we've seen a lot of branches disappear in the UAE, and I think within the next 2 to 3 years.
Is that it?
Yeah, that's
2 to 3 years.
Yes.
Wow.
Yeah, I would say we are going to always have branches, but the nature of the relationship is going to completely change, and we'll have lot lesser number of branches than we ever had for different purposes. It's more for business development and sort of you need a presence to give comfort to customers. But yeah, they're largely going to disappear, functioning.
But do you actually? I mean, I haven't used a bank branch.
I haven't been to a branch in 10 years.
In 25 years,
yeah.
Since the mid-1990s. Does it give me comfort? More comfort is if you want to speak to them on the phone, which you don't either. Comfort is just knowing your money's there and easy access. You should know.
No, so I think branches will remain in India. I'll tell you why. Because you probably live in a more developed market.
Yeah.
But a country as large as India, and there are areas where there's no branch for 500 kilometers. So you do need branches. If you want to do complicated transactions, like if I want to give the property papers for my land and get a loan against that, then I do probably need to visit and get things done. So you will have branches, but what Ganesh and I were trying to say that for a country as large as India, where the ARPU, the average revenue per user, or the spend per user is so low, so 95% of India earns, less than $500 per month. So if we are going to cater to that user, then most of your regular daily life financial services needs to be completely digitized, no human OPEX associated. So the branches will become maybe smaller, less luxurious, because they are just going to do more of the complicated transactions, maybe even SME focused larger
Less
transactions.
luxurious. Are they luxurious now?
In the cities they are. It's a huge expense. This is a rental value is a huge line item in the bank's P&L.
Yeah. Roger, what do you think?
Again, it really depends on each region and each infrastructure that you're talking about. With regards to the branches, we'll see less. They'll never disappear because there are certain transactions that needs to happen there. But I'm like you, I mean, not 25 years, but in the last few years, I think I've been to the branch twice. But I'm not happy. I always complain, and I post on Twitter, and then they call me. And yes.
Did they apologize then?
They call me because they don't want me to post more. So now, power of social media, because if you're banking with a certain bank and they keep you on the call center call for more than 20 minutes,
You then post on social media.
Where's digital banking? Where is fintech? Where's innovation? Where are these budgets going through? So you need to keep the pressure also on the industry.
But you see the difference. She's actually been to a branch a couple of times in recent years, and so she thinks they'll go away. I've not been to a branch in 10 years, and I think branches will be true. So it's kind of paradoxical.
I bumped into Rowan at lunch. Where is he? Rowan? What's your question? Can we bring a microphone to Rowan? He had a good point which he wanted to make, and he did make to me very eloquently at lunch. And I said, you need to make that point in our next panel discussion. So could we get a microphone to Rowan? Oh, you've got one? There you go. please, and ask a question at the end.
Thank you, Mark. Mark and I were having a great discussion on systemics, from the meta through to where the rubber hits the road at the micro. I think as I've been, my name is Rowan, I play in systemic innovation, and for my blessings and sins, I was previously an ex-director, including in India for Standard Chartered Bank. I think as I've listened to these wonderful sessions over the last few days, one of the things that I'm curious about is how we lose the system in the silo. And that's both literally in these siloed meetings, which are necessarily siloed, but to what extent, for example, using a question I know Elon Musk had referred to, which is what if the most common mistake of a really good engineer, is to deploy convergence thinking, convergence logic, to optimize the thing that should simply not exist.
Ganesh?
What is the question?
To what extent are you consciously or unconsciously deploying your attention and your resources to optimize the thing that should not exist?
How is your success contributing to the failure of this system? If you think this system is a failed system.
Yes, no, that's a good question, and obviously it's way beyond the scope of whatever time we have. I think in general, look, we operate in emerging markets, we work very closely with regulators, and having sort of been an entrepreneur investor in the Valley and in now emerging markets, I at least say very consciously that you have to work within the system to change the system and bring the system along. We definitely have a DNA challenge in the kind of entrepreneurs we back, which is not to say banks will become extinct, which are the kind of things we hear in some of the very developed markets. But in our markets, we have to work very closely with the system. Systemic change will happen, but it takes time. And one thing we have learned is without working with the regulators closely and with the existing system, I don't think it's possible. So I don't see that contradiction, but the path to getting there is complicated. It's not straightforward, and that's something we struggle with every day. I'm sure we all struggle with every day. But I don't see a contradiction in what we do.
So I don't think that we are trying to destroy something or optimize something that doesn't need to be optimized. I think in my equation, the banks, the insurance companies, the non-banking credit companies are all OEMs. They manufacture the products. It's unfortunate that they manufacture the products, at least in a large market like India, which can only reach a very small percentage of the population. So the role of the fintech is not to kill the bank or these financial institutions. The role of the fintech is to partner with them. So they are my supply chain partners. I leverage their product portfolio, their balance sheet. I curate the right products, but I know what they don't know. I know how to create an app which will attract millions of users and keep bringing those users back to the app. And then I offer them the same products, very simplified, very nicely curated, so that an average person who never had access to those products will be able to appreciate them and use them. So I think we are not trying to optimize something that didn't need optimizing. I do believe that this evolution is bound to happen.
Raja, final words before we wrap?
Absolutely agree. I mean, fintech has taken financial services from financial institutions to technology, and it enabled wider access and adoption. And I think that's the problem that these companies are trying to solve. They're not solving the banking problem, they're solving the individuals' problems. And I think that's key to their success and scale and expansion all over the world.
Raja, Upasana and Ganesh, massive round of applause. Thank you very, very much. You are allowed to waltz off the stage. Next up, Edie's back, Metaverse and Web 3.0, opportunities or a fool's errand. Love the titles of these panels. That's up next. Thank you.
All right, I'm back. Session on Metaverse. I'm going to have my panel come up and join me. Always cherish the journey in real life. That is incredibly good advice. But what about our journey into the metaverse? Is it for real or just way too much hype? Because one company decided to rename itself. And of course, that's Meta, doubling down on the metaverse and the future. So we are here to sort it out. I'm going to bring my panel up on stage. Come on down, guys. We're going to start with Nikhil, who I've decided to make my co-host. Come on up, Nikhil Kamath. He is, of course, wears many hats, but Zerodia is one of them. We'll bring the rest of you up on stage as well. Come on down. We have got from 5ire, absolutely delighted to see you, Dr. Pratik. Thanks very much for coming. We've got at the end Nikita Sachdev from Luna Media, and of course Jayanti Kanani from Polygon. Thanks very much.
Thank you.
Right. So let's kick off. We've got 23 minutes to sort out the metaverse. Loads of time. First of all, Nikhil, thanks for joining us. Talking about the metaverse, I'm always reminded by the futurologist Roy Amara, who said that we tend to overestimate the value of a technology in the short run, but underestimate it in the effect in the long run. I wonder if that sounds like something familiar to you. Do you think that applies to the metaverse?
Well, honestly, Edie, I do not know for sure. Like you, I would like to learn from them. I would say the metaverse is probably easier to understand for me. I find Web3 a bit more complicated in terms of how does one understand the use cases of it, and what will be the first point of adoption going forward.
Okay, so we're laying out some questions for you guys. What about you? Let's see, Pratik, what do you think? Do you think that we are underestimating the effect of it in the long term, but maybe overestimating where it should be already?
Yeah, I'll agree with most of what you said there, because there is definitely this bubble that's been created where we are like, yeah, the metaverse is here and it's there right now, and everything's about the metaverse. But having said that, I was just talking to you before. I was reading an article from, I think, New York Times in 1995, and they were saying that there's a new fad around in the world. It's called the internet.
Right.
And that's pretty much where we are, I think, with metaverse. Similarly with the cloud. I mean, 10, 15 years ago when we started talking about the cloud, everyone looked up in the air in the sky like, what is the cloud? But now we have so many applications. We have in data analytics, the internet speeds are faster, the storage is cheaper and easier. So now we've basically come to a point where it's there in pretty much every single big industry. I think that's what it is. Right now, once the bubble settles down and the entire space comes of age, it is here to stay, because it's once we understand the definition of what it is, we'll all similarly realize, and we're all like millennials or more. I don't see any 12-year-olds here, because sometimes when there's 12 years old in the room, I don't have to explain them if metaverse is going to be there or not, because they're already living in the metaverse pretty much.
All right, and tell us what you're doing, what 5ire is doing, and particularly relating to sustainability.
Thank you. Well, we are a layer 1 blockchain, and we are pretty much the world's first sustainable consensus. Consensus is what runs the blockchain. I think Jayanti will explain that much better than me. And we have built a mathematical model to incentivize sustainability based on ESG and SDG goals. So in very simple terms, there's validators in a blockchain network. And in our network, if there's 2 validators, it's less like you and me, and you're using, for instance, hydropower, and I'm using carbon, then technically you end up making more money and earning more rewards. So that moves the entire world slowly but surely towards more sustainable practices for benefit, as we say it, instead of for profit, where you make money while you do good.
So, Jayanti, we're setting you up for a question here, but I was looking a moment ago at Polygon, and it's already here. The effect of what you're doing is already here. It's already being accepted and, in fact, used by a number of countries. I'm looking at Instagram launching NFTs. I'm looking at Stripe launching global payments. I'm looking at Adidas and Prada launching NFTs with Polygon. So give us a sense of how fast you think things are moving for you in this field?
Yeah, so mostly from for your first question, the innovation cycle always reduces one after another. For example, TV, if you take an example of internet or TV, like maybe a few years it took for TV to come to your home.
Yeah.
Same example I will give, for example, Facebook users growth. Maybe they acquire like few millions of users in over the few years, but TikTok did it in 1 year, right? So same happen with every new technologies, like the innovation cycle always reduces when you go in the future. And same happened with NFT, for example, right? NFT took like maybe 3 years to reach to Instagram, Starbucks. Everyone is kind of creating this small kind of a metaverses in their applications on Polygon. I think what is happening is that everyone has their own definition of like, okay, what Web3 metaverse would look like, and they are translating their understanding into the product for themselves, and that's where like Polygon is basically helping them to bring them their NFTs, metaverse world on blockchain, right? And by the way, like if you don't know like what Polygon does is we make blockchain transaction faster. So for example, if you mint an NFTs or if you transfer NFTs on Ethereum blockchain or main blockchain, it maybe takes some time, like few minutes, and you have to spend like a lot of money on that. But if you use Polygon, it will be like few seconds or maybe 2-3 seconds, and it's much cheaper than other blockchains, right? So in general, like what kind of our definition of the whole Web3 is kind of it's basically just translating your digital world into the open network on the blockchain. And that's what we are kind of aiming to do that, yeah.
Fascinating. And you're based here in the UAE,
so
not just for transport reasons.
So we are kind of a decentralized company, you would say. We don't have a kind of one headquarter any country. We started out of India, for example. We are founders were born and brought up in India. So we started out of there. But quickly, like our main clients are everywhere. For example, Instagram, Stripe, they are our customers. Like they are building their NFTs and everything. So, and we have like employees every corner of the world. We have US, South America as well, Canada, this side, Vietnam, everywhere. So we are kind of a decentralized company, but it's kind of few people are near to India are based in Dubai. It's easy travel to India, easy travel to US, good food. So why not? Yeah.
Nice weather. So let's move now to Nikita. First of all, tell us what you do.
Sure. So I run a company called Luna PR. We've been in the space since 2017, nothing to do with Luna Terra. We are a PR marketing and advisory focused on Web 3.0. We're quite big in the media, so we own Cointelegraph Middle East. Cointelegraph is a leading publication globally for crypto Web3 news. We've been producing a show on CNBC Arabia that I was hosting, focused on Web3 as well.
And tell us why you think the UAE's metaverse strategy is important. Why do they need one? Why is it important?
So I think the UAE and the Middle East, not even I think, it's a fact that they've been the fastest growing region for implementing Web3. So that just does not just include the metaverse. It includes blockchain, cryptocurrencies, digital assets, AI. It's basically the future of technology. Why it is important is because just like looking at the title of this panel, A Fool's Errand, it is like saying, was internet a fool's errand? Saying Web 3.0 is a fool's errand is comparing it to the internet being useless. It is the future, it is important, and I think the region recognizes that, and they've been very forthcoming in, they want to be pioneers and they want to set the stage, set an example. 50 years ago, this place was a desert, so that's something that they're used to. This region wants to be the first, the biggest, the fastest, and implementing the metaverse, implementing Web3 is one step ahead of the game. So the Metaverse Assembly was not, I think one of the important points that they discussed in the Metaverse Assembly was to start incorporating the metaverse a little bit more, to start, for example, measuring aspects of the GDP in the metaverse. I don't know how that's exactly going to work, but like I mentioned, they're going to set the stage. So I guess we'll see what the UAE does, and then probably other nations will follow suit.
That's interesting. So Nikhil, I'm going to bring you in here as my co-host for this panel. You've got some questions about the metaverse, about blockchain. What would you like to ask these guys?
Well, if I had to simplify everything, okay, in the little bit of research I've done about Web3, each time I ask people a question, they digress and talk about 5 different things, but they do not truly tell me what will be the first case of Web3 and how we get there in a very pragmatic manner. So let me ask each of you, maybe in 30 seconds, explain what is Web3 and what will be the first use for Web3 in your mind. Maybe you can start.
Sure. Web3 for me is just about ownership. So Web 1 was read. You could just read the information out there, the old classic internet. Web 2 was write, Facebooks of the world, social media, you could write your information, people can see it. Web 3 is own, which means that you will own most of your assets, data, everything, and that's where it ends. The first real application for me actually is the metaverse itself, because think of a metaverse as first of all, right now what we have is different universes.
Can I ask a question there? Let's say Web3 decentralizes data in a manner where the blockchain owns it and not a corporation. Doesn't it become simpler for people to scrape your personal data off this blockchain versus one particular corporation?
Not always, depends on the permissions that are set. So for instance, we're coming up with the concept where there's something called encrypted search algorithm, wherein the person who has the data will be able to see the data on the block, but everybody else would not be able to see it. So it's with you, it's on the blockchain, verifiable, but it's not with a corporation. So it's.
But if the data is only accessible to you, what is the point of the blockchain?
Because it's decentralized, it's not there with one certain authority. It's about ownership.
Okay.
So, yeah.
Maybe Jayanti?
Jayanti.
Yeah, so to your question, right, the problem is that everyone has the different answer, and it means that there is no definition of Web3. Everyone is kind of now translating their own definition to what Web3 would be, similar metaverse and similar maybe AI as well, because there is no, you can say, okay, AI has a definition, but how you use it or how you define kind of not get the end result is very different for everyone, right?
You see the dichotomy in that, right?
Yeah.
We cannot talk about Web3 and build it up to be this massive thing which will change the world, but say it means a different thing to each of you. Yeah. Because Web3 is not spirituality or
definitely.
It's a very definite thing.
So I'll come to your point, right? So Web3 for me, and maybe just come back to like Bitcoin, right? Simple Bitcoin definition where it says, okay, this is my payment system, okay, not owned by any government, not owned by anyone in the world, and still you can verify your payment, you can send the payment, you hold your keys, and that's it.
So
simple, right?
Are we all getting at Web3 is decentralization in one way or another?
So it could be like, maybe there is a one way to achieve trustlessness is a one way is decentralization, but the end goal is a trustlessness. I don't have to trust anyone to make my transfer in this world. For example, if I am sending you money, I don't want other people to verify for me. There should be some payment kind of the platform which does this automatically. I don't want anyone to verify or hold my payment or hold the whole trust in between. That's what kind of the whole Web3 came from, right? So I would believe that would be the good definition for everyone. Now people have translated that payment system to art, digital art, metaverse, and DeFi, fintech, everything, right? But it actually at the end translates to, okay, whatever I'm doing, whatever I'm, for example, payment or loan or whatever on the payment system or non-payment system should be I shouldn't trust anyone to do that. And that's why I think roughly translate in my mind to Web3 or next internet thing. Yeah.
One more question leading up from this one. What do you think are the pros and the cons when you don't have an intermediary, or if you don't have a clearinghouse of sorts? Let's stick to the payment transaction. When you don't have someone vetting and guaranteeing your transaction, and you're maybe transacting on the blockchain, maybe it's peer-to-peer, what are the pros and what are the cons?
Yeah, so pros are obviously like, you have your own control over the things you can do. For example, you can make a transfer of USDC on blockchain on Sunday. You cannot do on banks, first of all. This is a simple pro I'm just talking about.
Maybe not get into one particular asset class, but transactions in general.
Yeah, transactions in general. I'm just giving examples so people can understand. Okay. Now cons is, if you send a transaction to wrong address, it's irreversible. Now you cannot get the, you cannot call the banks and, okay, I've made a mistake, just give me my money back, right? So that's a normal scenario problem for any normal people, right? And that's where I feel like, people will build something on top of that, which will be centralized, but in the end, they will use something similar on the decentralized manner, where you have some control, but the company cannot kind of ban your transactions or give away or move just money over the night from account to another account, right? So all those kind of things can be done, but I would say this is the pros and cons in a normal
I'd like to add something to that. Just because there isn't, because there isn't a person or an authority looking over a certain transaction, doesn't mean that it's not looked over or verified. The blockchain, the consensus itself verifies everything, and I would actually strongly believe that that's a much better way than an office temp verifying your transaction.
Nikita, what would you add? Any other pros or cons?
I mean, we're talking just about cryptocurrency here, right? I mean, but Web3 is so much more than cryptocurrency. But
so give us your definition of Web3.
I think Web3 is a world of decentralization and creativity, immersiveness.
So give us a good example.
For example, to what Nikhil was saying, I think Web 3.0 will make the world better significantly. And I think that will mostly be through the implementation of blockchain technology. I think that through cryptocurrencies, people will have more freedom with their money. They will be able to own their own funds. And we're seeing that in a lot of emerging markets today, where people are struggling. In Lebanon, and banks are allowing withdrawals of no more than $400 a month. In Turkey and Venezuela, inflation rates are so high, people have completely lost their monetary values. That's one example. In the Middle East, a lot of women don't even hold rights to their own identities. When they get married, they have to give their passports to their families. Through blockchain, your identity is going to be you. It's going to be your scan. I mean, think about it. How backward is it today? We have cars that are self-driving themselves, but we're still using a paper booklet to get through the airport. Blockchain is going to change that. Our identities are going to be ourselves, and people are going to own rights to their own identities. Birth certificates. My dad couldn't get Singapore residency because he was born in a poor hospital somewhere in India that didn't exist anymore. So his birth certificate didn't exist, and then he couldn't get residency. That's also backward to me. Blockchain is going to change all of that. Supply chain in China, half the rice that they're selling is plastic. Right? Where does that get tampered? From the farmer all the way down to the store, where does rice get tampered with? Blockchain will be able to identify that. So blockchain is going to change every single industry today, and blockchain is part of Web3.
Okay, good argument. Nikhil, as somebody who I know you care very deeply about financial inclusion, how does that sit with you?
Well, it's one of those glass half full, half empty. I think it depends on where you're looking at the problem from. But let me ask you this, to what you were saying earlier. Let's take the most relevant example of decentralization, let's say Bitcoin. If a currency which is based on, say, proof of work, will never be able to facilitate transactions at a cost which is cheaper than traditional money transfers, take UPI's example in India, for instance, what do you think is the use case for Bitcoin as such, being very specific about that currency? And why do you think any of what you guys spoke about Bitcoin will be able to resolve, considering how much it costs to transact on Bitcoins right now?
Yeah. So obviously, Bitcoin came in the picture in 2009 or 10. So world has kind of changed since then significantly, right? So currently, people just using Bitcoin for the value storage and everything, like similar to gold. But there are many other innovation came into picture. For example, zero knowledge proofs, right? Which basically.
Would you say, for the purpose of what we were talking about, like what she was saying or what he was saying, Bitcoin doesn't make sense from that standpoint?
Yeah.
Not Bitcoin in particular.
Now, like for example, talk about identity, right? She talked about identity. How do we create the identity, right? So we have a solution where, for example, where you can say, okay, you are 18 plus age, but you don't want to reveal your actual passport or KYC or anything, right? You can prove that without revealing anything else, right, on the blockchain. So that is possible right now, and I think that is kind of a use cases we evolve slowly in the future, and then come out of something out of there.
Right.
I think it's like apples and oranges. Like Bitcoin has, the only association Bitcoin has with all of this is that it's built on the technology, it's built on blockchain. So Bitcoin, thankfully, just shed more light on blockchain, but it's two different things.
Can I make a counter argument to what you said? If a sovereign, a country, like you were saying, they can control money flow, they can control how much money you can take out from a bank. As long as nation states exist in the manner that they do today, even if you have Bitcoins and they control vendors in a way such that they do not accept Bitcoins, all of those use cases kind of don't work. And that is a risk with how sovereign nations are governed today. And under one government, if the government does not want a certain currency or a certain asset class to work, they're still in control in that sense of the.
They still work. They don't work as well, but they still work. Like you have decentralized exchanges. Like China banned cryptocurrencies a long time ago, but still, like some of the largest users of cryptocurrencies come out of China. There's VPNs. People have multiple IDs and passports. So even if they want to use a centralized exchange, they can. And if they don't want to use a centralized exchange, then use the DEX, a decentralized exchange. So there are still ways around it. And cryptocurrency is, like Bitcoin is, I wouldn't say like it's more so to make everyday transactions. I think the space is still new. So I don't think really that is the, I mean, of course it's a store of value, I would say.
Okay, so we're running out of time. I do want to offer you a last chance to have your word in. I'd love to hear one thought for a rule, a regulation, or an agreement that you'd like to see that would make Web 3.0 a more valuable, a more impactful place for the world.
Well, I think as Nikhil was saying, as you know, if governments stop people from transacting in a certain currency, and I think that's where a little bit of a disconnect is. I don't think that we as a space want to do that. I think governments should work with us and leverage the power of technology so this can sort of work together. So I would think that the Dubai model, the UAE model is something that people should look at. We've had an amazing time with the government helping us out, adopting more and more Web3 in the country. So that's a regulatory model that I will totally back.
Okay, one rule, regulation, Jayanti?
I think obviously we need a regulation in crypto industry. People are always talking about, as you can see in the crypto world. So, but you know, the thing is that if you want to hate something, you will find something bad out of that. And if you want to find want to like something, you will eventually find something good out of that. And I would say like government or every regulator should find something meaningful out of the crypto world or technology or something, and maybe try to regulate it.
Okay.
Yeah.
All right, Nikita?
I think I would like to see governments start opening up and understanding how to implement cryptocurrencies and digital assets a little bit more. Like India's had a love-hate relationship with crypto for a while, so I think it would be great to see a friendly government like we have here in the UAE. I feel like that would really drive a lot of mass adoption.
Okay. Thank you for being my co-host, Nikhil. We can take this show on the road. Next stop, Bengaluru, maybe. We're going to be back at 4. We're going to be looking at social media, asking, is it dead? Social media is dead. Long live social media. So see you back here at 4. And a big thanks to my panel.
Thank you.
Thank you.
A bond that's steeped in history. A partnership that's strengthened through strategic, economic, and cultural ties, and cemented further by the Comprehensive Economic Partnership Agreement, CEPA. India and the UAE. At Emirates NBD, we're committed to and capitally invested in India, the largest trading partner of the UAE. One of the largest banking groups in MENAT, we offer a unique advantage to Indian companies across the Emirates NBD network. As the bank of choice, we already enjoy fruitful relationships with several Indian majors in diverse sectors. Now, we're expanding our presence to enhance the geographical coverage in India, while also facilitating large volumes of trade and capital flows between India and MENAT region. For us, it's more than the opening of branches. It's the opening up of our vision for India. It's a future that's poised to create history, celebrating 2 new branches in India, celebrating one great bond. Emirates NBD.
What can a bank bring to the world? how can it enable economies and companies to achieve their goals and help people realize their dreams? At Emirates NBD, our origins are in this sand and this sea. Just decades ago, these calm waters were echoing with the voices of pearl divers. Today, from the same land, rise modern marvels. And happy communities have been thriving on this land. Emirates NBD is a financial services company, a regional player contributing to a global ecosystem, because ambition knows no borders. We exist for people, supporting human endeavor. We enable economies as an integral fabric of communities and businesses. We innovate as a means to make lives easier, simpler, more enriching. We invest in the societies we're in to ensure that we share our growth. And we're driven by customer needs and challenges across sectors. Looking beyond, delivering what's next. For us, scale matters. It helps us to deliver synergies and functional expertise to our stakeholders. Technology matters. It places us at the cutting edge of transformation. Strategy matters. It positions us for leadership today and into tomorrow. Ultimately, we're all about people. Our own, our customers, our communities. We believe in creating opportunities for prosperity. We are Emirates NBD.
We are the only platform in the world that allows a non-technical customer to get software built for them without ever having to write a line of code.
All you need is a great idea, a challenge that you want to solve for your business, and we'll build the software for you.
It's easy, fast, has a fixed price. We're making people's dreams come true.
From an entrepreneur with a genius idea in their head to an enterprise CEO looking to transform their organization to the next level.
Builder will be the platform that they will build upon.
When it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
A bond that's steeped in history. A partnership that's strengthened through strategic, economic, and cultural ties, and cemented further by the Comprehensive Economic Partnership Agreement, CEPA. India and the UAE. At Emirates NBD, we're committed to and capitally invested in India, the largest trading partner of the UAE. One of the largest banking groups in MENAT, we offer a unique advantage to Indian companies across the Emirates NBD network. As the bank of choice, we already enjoy fruitful relationships with several Indian majors in diverse sectors. Now, we're expanding our presence to enhance the geographical coverage in India, while also facilitating large volumes of trade and capital flows between India and MENAT region. For us, it's more than the opening of branches. It's the opening up of our vision for India. It's a future that's poised to create history, celebrating 2 new branches in India, celebrating one great bond. Emirates NBD.
Why are more and more businesses choosing Abu Dhabi Global Market as their home? Is it the high business standards the city offers? Or because it's the true financial powerhouse of the UAE? Offering stability, scoring first, and mastering the art of finance for generations, ADGM sits in the heart of the Abu Dhabi economic vision, investing in sandbox environments and a modern infrastructure for digital banking. Step through the gateway into the future. Enjoy a business-friendly culture within a globally connected strategic location. Get on board a fast-moving economy, powered by the leading financial center in the UAE's capital. Abu Dhabi Global Market, your business capital.
What can a bank bring to the world? How can it enable economies and companies to achieve their goals and help people realize their dreams? At Emirates NBD, our origins are in this sand and this sea. Just decades ago, these calm waters were echoing with the voices of pearl divers. Today, from the same land, rise modern marvels. And happy communities have been thriving on this land. Emirates NBD is a financial services company, a regional player contributing to a global ecosystem because ambition knows no borders. We exist for people, supporting human endeavor. We enable economies as an integral fabric of communities and businesses. We innovate as a means to make lives easier, simpler, more enriching. We invest in the societies we're in to ensure that we share our growth. And we're driven by customer needs and challenges across sectors, looking beyond, delivering what's next. For us, scale matters. It helps us to deliver synergies and functional expertise to our stakeholders. Technology matters. It places us at the cutting edge of transformation. Strategy matters. It positions us for leadership today and into tomorrow. Ultimately, we're all about people. Our own, our customers, our communities. We believe in creating opportunities for prosperity. We are Emirates NBD.
We are the only platform in the world that allows a non-technical customer to get software built for them without ever having to write a line of code.
All you need is a great idea, a challenge that you want to solve for your business, and we'll build the software for you.
It's easy, fast, has a fixed price. We're making people's dreams come true.
From an entrepreneur with a genius idea in their head to an enterprise CEO looking to transform their organization to the next level.
Builder will be the platform that they will build upon.
When it comes to venturing into unfamiliar territories, at Standard Chartered, we understand the journey you're making. Our network of experts are on the ground already, promoting dialogue, driving innovation, and building the sustainable economies of the future. Because your success is our business, and opening doors is what we do. We are Standard Chartered, here for good.
A bond that's steeped in history. A partnership that's strengthened through strategic, economic, and cultural ties, and cemented further by the Comprehensive Economic Partnership Agreement, CEPA. India and the UAE. At Emirates NBD, we're committed to and capitally invested in India, the largest trading partner of the UAE. One of the largest banking groups in MENAT, we offer a unique advantage to Indian companies across the Emirates NBD network. As the bank of choice, we already enjoy fruitful relationships with several Indian majors in diverse sectors. Now, we're expanding our presence to enhance the geographical coverage in India, while also facilitating large volumes of trade and capital flows between India and MENAT region. For us, it's more than the opening of branches. It's the opening up of our vision for India. It's a future that's poised to create history, celebrating 2 new branches in India, celebrating one great bond. Emirates NBD.
Hello, 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 hello. There you go. The voice works. I thought it had disappeared on me. Right, let's get everyone out. Hello, everyone outside. You're welcome to come in. Otherwise, you're going to miss this wonderful chat. On social media, everyone loves social media. Love it or hate it. That's what we're going to discuss. Come in. Oh, leave the doors open. Let's get them in. Bring them in. Yeah, leave that door open. Come on, everyone. Come inside. Don't be shy for our next discussion. Our Premier Radhakrishna, co-founder and CEO of Ku India, the largest Hindi micro-blogging site, is with us, and I love the titles.
Yep.
Don't you love it? It's very contentious. Social media is dead. Long live social media. Do you concur? Is social media dead? Is it dying? Is it on its last gasp? How would you characterize social media right now?
Yeah, I think social media as we know it from the past, like the past 15 years, there's been Facebook, Twitter, Instagram, LinkedIn, all of these. And the novelty of social media actually pulled it through 15 years.
Yeah.
The creators and users were just very happy getting followers and reactions and, real-time information for users and, all of that. But I think in these 15 years, it's also become so prevalent that there have been challenges. The challenges are questions being asked around whether social media can be transparent, can they be consistent in their behavior, can they be truly neutral and unbiased. So all of these have now started emerging as a problem, right? And can these platforms actually be truly inclusive? Right? So is thoughts and opinions, for example.
And what's the answer to all those? Transparency, inclusivity? Can social media be everything to everyone?
Yeah, so if the platforms fail to define themselves as a transparent, unbiased, consistent platform, then they will be dead. The age is for long live social media, the other part of the title.
Yeah.
Long live social media which can actually prove that they are transparent, consistent, and unbiased in the way they deal with it.
Is that what Ku's doing?
Yeah, absolutely. So the number one thing we do is try and be more inclusive. So if you look around the world, most of the headlines and narratives that are built are by the topmost folks who speak English, who are well connected, who have access to the internet, and they've always been talking. But can you be more inclusive in terms of language? That is what we are doing.
Yeah.
Because of language, you're also bringing in culture, right? Second, each country's definition of freedom of speech is very different. What India thinks is freedom of speech is very different from what US thinks, is slightly different from, UK things or, Saudi Arabia things.
Yes.
So can you actually be customizing to these little nuances that are around across the world? So that's the second thing. And the third thing is the creators who were initially happy with followers and reactions are now saying, you're making so much money. Where's all that money?
Where's our money?
Why aren't you sharing it with me?
Yeah.
Right? So
how do you deal with that problem?
Yeah, so one, we're still a startup and hence we're not yet monetized.
You don't have to worry about that yet.
Yeah, but our whole framework is around how do we help creators and users who are extremely good for the platform monetize on the platform. If we're monetizing because of a creator, we want to share.
And how do you do that? How will you do that?
So for example,
it's different to another social media platform.
Yeah, so one example is a concept of super likes that we're introducing, right? So liking is one thing, but super liking, let's say I really love a creator and what they've said, I want a super like. So if I pay, $1 for that super like, right? Half of it will go to the creator if they create exclusive content for the super liker. So there'll be a bunch of super likers who will auto subscribe to all exclusive content because they super liked. So they get a share if they become exclusive to them, right? So this is one form of sharing revenue. And for users as well, for the first time in the world, we are thinking of sharing any money that we earn with the user as well. If you just consume content, you are a user who actually sees hundreds of pieces of content on the platform, you're spending a lot of time, you're engaging with ads on the platform, we want to reward you. A loyalty program for heavy usage of the platform is the future, right? So all of this is something that we firmly believe in, and we.
So you're just starting to scratch the surface.
Yes. Yeah.
Give me a 5-year, 10-year view of what Ku's going to look like, because you were launched in March 2020. You're barely a couple of years old.
Yeah. So in the last 2.5 years, we've actually now hit 50 million plus downloads. The two main countries that use us, India and Brazil. So
how many users in India?
So India has 50 million.
50 million.
Brazil took off in the last 2-3 weeks.
Yeah.
And we already have 3 million downloads from there.
Right.
All word of mouth. And the president of Brazil has joined.
All word of mouth, no advertising?
No advertising.
Right.
So we've not spent a single penny on growing that community.
How did you achieve that? Literally word of mouth?
So there is a deep need for an alternative to Twitter.
Yeah.
Across the world. And if you look at it, there are people who are looking for an alternative because they don't want to pay the $8. Yeah. There are people who are looking for an alternative because of the ownership change. Yeah. There are people who are not happy with what Twitter may or may not become. Will it remain a free expression platform?
Do you think it will? That seems to be the big sort of topical issue.
Well, Elon Musk is reintroducing his $8 scheme, right? Like the blue tick that he's giving out. So if you can buy yourself a blue tick and hence more influence for your voice on the platform, it becomes more exclusive than inclusive. So it removes, any incentive that a normal person, who doesn't have an influence otherwise or doesn't have the money to be using Twitter. He'd rather use Ku where his voice really matters and not the amount of money he pays.
How would you fix Twitter? Let's say I gave you Twitter.
Yeah.
How would you fix it in the extent it needs fixing?
Well, I think one big thing is how do you maintain the neutral stand?
Yeah.
Before Elon Musk, Twitter was claimed to be left-leaning, and now post Elon Musk, it's right. Now, for a successful social media platform, the platform itself can't have an opinion. Right? An opinion platform. The platform itself can't have either a left or a right opinion. It is there to host both sides and good, healthy discussions. So being neutral, making sure that you really deal with hate speech, misinformation, all of the things that make this platform very negative in nature, right? The culture on Twitter is to troll, is to be negative. If you post the same thing across multiple social media apps, on Facebook you'll get a lot of love because it's your family and friends. On Instagram, it's lifestyle, again, a closed network.
Yeah.
On Twitter, you actually get more hate than anywhere else.
My cousin was in Qatar, and he watched the England. Was it the England-Wales game? And afterwards, he was interviewed by a football news channel. Hey, what did you think of England's performance? And he put the video online. The abuse. He was just saying, oh, England were poor. It was when we played the USA.
Yeah.
We drew, and it was a terrible game. England were awful.
Yeah.
My cousin said, oh, the manager's terrible. And the abuse he got just for that, you're right. It's a hotbed of abuse, isn't it?
So, just like a space that you create, a company you create, the community you create on a social media platform also has a culture, and it can't be changed overnight. So you have to restart it in the right way. And
can he fix it? Must?
Yes, financially, yes. I'm sure he'll find out a way to make it a profitable entity which gives returns to all his investors, and he pays back his debt and all those things.
But what it represents, who knows?
Yeah, so the softer side, making a car is black and white, making a rocket is black and white, Starlink, everything is black and white. Social media is gray. Every person on it adds to it, every person not on it takes away from it, right? So navigating hundreds of millions of emotions every day is a very challenging job, and a person with as less opinion and a platform with as less opinion of its own is the one that will succeed.
Which of the big social media giants, platforms will exist in 10 years and which won't? Let's put your neck on the line. Or at least admit which ones are going to find it challenging if they continue on the current path. And given how quickly things change, I know some of the giants have been around.
Yeah. No, any social media platform which stays true to why their users use it.
Yeah.
So for example, Instagram, they're made for lifestyle. Users use it for lifestyle. And as long as they can remain lifestyle,
it'll be fine. What about Facebook? People keep saying Facebook is dead, it's only for the oldies. Is that true? I'm not on it, but I'm old.
So Facebook has a problem because we all joined Facebook for a family and friends network.
Right.
It has stopped being that. We don't go there for that anymore. It's a bunch of random videos thrown at us.
So
hence it's gone downhill.
Yeah.
So
could it die?
It could if people. So the valuable users will leave. The large amounts of users who are
people who just stay
just
logged in.
If they like random videos thrown at them, they will stay.
Yeah.
So there is some value there, but it won't be as valuable as it was before.
Who loves Facebook here? Put your hands up. Who hates Facebook here? Put your hands up. Who sort of doesn't care and stop asking stupid questions, Mark? Oh, thanks a lot. Who likes Instagram? Put your hands up. Yeah, you're right. Who doesn't like Instagram? Put your hands up. The back there, yeah. TikTok? Who loves TikTok? I mean, TikTok seems to have caught fire, doesn't it?
Yeah, so
what do we learn from TikTok?
Yeah, so the way I describe TikTok is micro Bollywood, right?
Micro Bollywood, yeah.
So a 3-hour Shah Rukh Khan movie, you'll watch. But a 30-second nobody entertaining you, you will only watch for 30 seconds.
That's not what I hear, and I'm not on it. I gather that once you watch, you can't stop watching. Is that true?
But it's micro bits, right? Like 30-second Bollywood entertainment snippets is the way you should look at it. If the same person made a 3-hour movie, you wouldn't watch it.
No, it's true.
Yeah. So
are you on TikTok?
It's banned in India, so I'm not.
Oh, okay. There you go. But there's equivalents, aren't there?
Yeah, so there's, of course, Instagram Reels.
Yeah.
And, of course, there's Josh and Moj and all of these guys.
Yeah. Interesting. Questions? Come on, let's have a really tricky question for Apramaya on social media. Sir, shout out your question.
When we have Reels or
We're going to bring you a mic. We're going to bring you a microphone, just so everyone, just down here, a microphone here, just down there, yeah, to that gentleman at the front. There you go. Yeah, give it to that gentleman there, yeah, brilliant. If you ask your question.
Hi, this is Fasi Ilahi from Abu Dhabi. We are having like the reels on Facebook now, and we do a lot of, we see a lot of things happening there. I'm also on Facebook, so it's a matter of time that, you know, we spend like, of course, get birthday wishes there, and a lot of things get done there. Still, we are using it, and the same benefit is coming now. TikTok is not there in India, very well said, but not only the youngsters are on these reels, basically the other Moj and other applications you said. We, the 30 plus, still are on the Facebook and other apps, basically. So I think what you said about it might die in terms of Facebook, I think they are innovating now. They have these reels going on. So they are capturing both the generations. Still the birthday wishes that we get are mostly on Facebook itself. So I don't think so, you know, like they are still innovating, but I don't see a platform now, because when they once tie up with Instagram, they got the lease for life, basically. So once we post to Facebook, it goes also on Instagram. Now they have a tie-up with Twitter also. It goes to Twitter as well. So I don't know what's going to happen and how Musk will sell it on $12 or $8. It's quite ridiculous, and I made a post about it, and it was really funny.
What's your question, sir? Let's have the question.
So will it survive? Which one? This Facebook, just Facebook. If it is by itself.
So as I said, Facebook for its initial purpose has already died. That's why they've shoved in a lot of videos and, you know, reels from Instagram, and so they have a huge base of users which they can still monetize by making them spend time.
So Meta now.
Yeah, so Meta is a different, like, it's a different story altogether, right?
Meta's a money-losing machine.
Yeah, so as in there's enough questions around it, and it's not yet even come into existence in a proper way. So, but Facebook, so I think Meta as a company has a bright future because of Instagram, WhatsApp, and not because of Facebook.
Facebook's dead, it seems. Sorry, we've got to move on. Thank you so much. Brilliant. Is social media dead? Hands up if you think social media is dead. Hands down. If you think social media is still alive, hands up. Okay.
Very much.
Okay.
Yeah.
Prameya, you were brilliant. Thank you very much indeed. Big round of applause. I wish we had more time. So much fun. Thank you very much. I'm going to move chairs because we've got to... Right. Are we back? I think so. We are. We certainly are. Right. Welcome back. From social media to media tech, which is going to be fun. Trend spotting media tech, looking at the world through a new lens. Big round of applause from Kabir Kochar and Umang Bedi. Come to the stage, please. Good to see you. Hi. Is social media dead?
Not at all.
No? Favorite social media platform?
The
one you use the most, which might not necessarily be your favorite.
You know, a founder of mine had this thing that he would download and delete the apps on Monday and re-download them on Friday. So I started doing that for the last couple of weeks, and it's working out really well.
Yeah.
Except for today, because I can't do anything about it.
So which one? What's your preferred social media?
I think
guilt trip.
I'm a visual person, so Instagram, and then reels from that. And I'm just following the path of pretty much every human being, and I'm in it for the dopamine hit, I guess. I'm trying not to, but
yeah.
You know.
Well, I have a recency bias on this one. I used to run Facebook, Instagram, Messenger, and WhatsApp as the CEO in India.
Yeah.
And so I had none of those. My favorite app still remains WhatsApp. Fundamentally because it's the highest DAU to MAU ratio, which is daily active users to monthly active users. But other than that, it's my own app, Josh, which is a short video platform for the next billion users.
Yeah. Tell us about it.
So
For those who don't know.
So, a lot of the questions or observations in the last session, and Upper May as a dear friend from Bangalore, were on a bias around what the world looks like around us. And that bias is driven by language, and a large amount of that bias comes from the English-speaking world. When you think about 8 billion people on planet Earth, and if I just extrapolate it to 1.5 billion people in India, only 200 million speak and understand and communicate in English. Over 1.2 billion speak in over 2,000 languages, right? And so if you were to go to Instagram, and I'll give you 2 fun anecdotes, which are very interesting to understand human psyche. How many of you have flown in India before? Show of hands, right? How many of you have flown Indigo Airlines before, right? If you notice before the flight starts, the leading lady states that the people in this flight can speak, 5, 6 languages. Why do you think they say that? Shout out. They do in Emirates also. Why do you think they do that? To make it more inclusive. No, so it's not really true. It's commerce. In Indigo, it's a low-cost airline like Southwest. They sell food and beverage. 70% of the sales happen in local languages, right? An interesting insight, my young chauffeur who left actually to come to Dubai sent me a request on a social media platform, and he's 25, and it was LinkedIn. And I was like, dude, what's wrong with you? Why don't you send it to me on Instagram? The whole youngsters are there. And his question to me was, how much do you earn in a month? And I was like, I earn enough, I'm okay. So he said, okay, let's make the assumption you earn $1,000 a month. And I drove you to this hotel to attend a party where there were 100 people, and everyone here earned $1 million a month. How would you feel? And I said, I would feel a little intimidated. I would feel this is not my environment. And he said, that's how I feel on Instagram. Because it's all about fancy food, fancy cars, fancy fashion, fancy travel. There's not enough local content around local context, around local fashion, around local food. And so when we look at the world from that prism, the first lens that we see is there is 1 billion people in India, and when I extrapolate that, to the world, there are over 5 billion people that fall into that bucket, right? And I think there is a need for a medium of expression, both on the creativity side and also on the consumption side. And that is the singular reason why TikTok is kicking Facebook's ass. Fundamentally because it's built on a content graph and not a social graph. I don't know how many of you remember, but the first time you went onto your favorite social media platform, you registered. And then, what it made you do is it said, hey, let me find you some friends. And you know what you did as naive individuals? You shared your phone book. You just gave them your entire data for them to make human connections and give you recommendations. Whereas what TikTok did was nothing. All you did was select a language or not even that. You came into feed and bases your behavior, implied or unimplied, on how you were consuming content, it started driving personalization in terms of recommendations to you, right? And that's why it's so addictive. And I disagree with a couple of comments made in the room prior to this, because when you look at usage of TikTok versus usage of Facebook or Reels, even Reels, it's chalk and cheese, right? It's Instagram is nowhere in the world where TikTok is, both from a user scale and from a revenue scale perspective, right? So those are a couple of my opening observations.
Thank you. Let's define media tech. I think that's a good place to start, because it means many things to many people. I even went on Google, what's media tech? I mean, I couldn't find an answer. You literally cannot find an answer. So both of you define it and tell us, define the landscape as it is right now. Define the trends, what's happening in the media tech landscape.
So in my capacity as an investor, I look at commerce, right? And when we look at media tech, we see which are the ways you can monetize these things, right? So one is through entertainment, whether that's subscription, so on and so forth, you buy a movie ticket. And the second one is through advertising, which is the underlying layer which powers pretty much most of the current social media platforms. To us, what that means as investors, right? When I look at, so I run a cross-border Indo-US fund, in the media tech space. And when we look at India as a consumption, India and the rest of Asia also as a consumption market, we're talking about the creator economy, which is massive. And to talk about the creator economy very briefly, right? At the end of the day, Aparmeya said something about, you would not consume that person's 3 hours, but no one's asking you to do that. But it's democratizing the access to potential fame and scaling up. If you look at how much time someone spends on social media, a lot of the time is actually look at those influencers, and it's become a new medium of consumption overall. So that's the creator economy. Second is gaming, whether it's social gaming or whatnot. I mean, gaming as an industry is larger than Hollywood. It's larger than audio. So it's massive. And third is content monetization, scalable content platforms, the hardest thing to build. I have so much respect for Ku and for what he's doing with Josh because it's very, very difficult to build. So obviously we have a very large consumption audience in India. Of course, the rates monetizable way through advertising is a little bit low, but there are other ways to find ways to get to the wallet and expanding the base. The second thing, which we look at media tech, is B2B. Well, and when we look at B2B, we look at companies in Asia scaling up for the world. And this is a common thing you're hearing, right? SaaS companies, India scaling up globally, trying to take advantage of the cost arbitrage and so on and so forth. But there are industries like ad tech, martech, the underlying nuts and bolts on which media runs. And a lot of people have not looked at that carefully with a magnifying lens for a very long time. So there's so many opportunity. And then there's this whole thing about information asymmetry, right? Like, because of my background in media technology and our team and other people, there is a certain amount of information asymmetry which you can use and scale up. So for instance, if a company has, on an Indian cost base, has an enterprise client paying, 10, let's say, $1 million rupees, now that could translate into maybe, $1 million also if when they do the same thing in the US, if provided they know how to sell and monetize in the US. And that's what our job is, to help them do that.
Yeah, I'll kind of dumb it down. I like to do these things. So media tech is just I think it's Manoj's framing. The way I look at it is traditional media and digital media. Traditional media is being disintermediated very, very quickly. You're seeing that moreover in the West. Newspapers are changing their revenue models because print circulation is down. Costs are up, EBITDAs are hurt. And television all around the world is kind of moving to cord cutting, and we kind of know that, right? Now, the hard part is when you bring in the tech part of the whole piece is it's moving online onto some platform. That platform was, till 10 years ago, a desktop. Then it moved to a laptop. At this end of the world, it moved to mobile, right? Because it kind of became the lowest common denominator in terms of where content consumption was driven. And then the hardest part on that platform, and you can talk to all traditional businesses that have tried to pivot in that business, is how do you find the money, right? Because if you want to be a New York Times and you want to build a subscription business, it needs a complete differentiation in the newsroom. Your newsroom needs to move from news to analysis to very deep insight. That's when people will pay for that content. Otherwise, news is just a commodity, right? And so very few companies around the world have been able to make that shift, which is why it is still not a great business model today in terms of subscription. So that's one model. The second model is advertising. But when you think about advertising around the world, of the $500 billion spent on ads, today digital is dominant and Google and Facebook are dominant within it, right? And so I don't want to go there, but if there's any startup in this room, they know the tax that they need to pay on digital colonization, if I could use that word, around growth, which is, I don't want to get into the details, but for several reasons, everything about what you're doing is tracked, whether it's on maps, whether it's on APIs, whether it's on apps that are sharing information with each other. And then comes the third model, which is, okay, so if I can't do ads and I can't do subscription, then what do I do, right? And that's the new buzzword is commerce. And so I can tell you that content companies around the world take the platforms like ours. We're talking about commerce, and commerce platforms are talking about content. No one's got it right? But I think the one piece that we're beginning to see, to the point that Kabir made, is this whole piece around the creator economy. We're seeing around the world, in India alone, it's over $1 billion market. And when I think about how big it is globally, there are influencers that have built billion-dollar companies, right? With over $1 billion in revenue, forget valuation, right? So I think that is really real, and it's beginning to play out. Now, these tiers of influencers will be very, very different. And there's going to be a proliferation in my mind of 3 or 4 technology elements that are going to drive overall disruption in consumption. The first, I think, is going to be 5G. 5G, I don't know how many of you, right now, if you open up the internet connectivity that you are on, I'm assuming this hotel Wi-Fi, and do a speed test, you'll probably get to 100 Mbps speed. 5G would go up to about a gig, right? 800 Mbps to a gig. So it's way faster, super low latency. It's already used by 1 billion people in the world. By 2027, 3/4 of the planet will be on 5G. And that's going to really disrupt how consumption of any kind, whether it's on devices, whether it's on IoT, whether it's healthcare, whether it's education, whether it's entertainment, it's all going to change, right? The second element that I think is going to be a big driver is AI. And I think AI, I could go on, I don't want to steal the whole time.
We've talked a lot about it today, so yeah, that's fine.
So AI is a big driver. And the third one, which I'm a believer on, is how the metaverse is going to transform consumption experiences, right? The problem today is it's not democratized. It requires an AR headset, which is extremely expensive, cumbersome, bulky to use. But imagine a world where you could be literally sitting in this audience in a full 3D experience on a browser of your mobile device. And I think for that to happen, the compute needs to move to the back end. Everything is going to triple and quadruple in terms of compute and speed. But I think it's going to disrupt the way we consume and connect with experiences, right? And I think the last piece, if I could add, is commerce. I think commerce is going to pivot in a very big way to video-based experiences and social-based experiences. So today, in the next 3 to 4 years, almost 25% of all commerce that we see happening electronically will be socially driven and will be influencer-led. And so those are the 4 or 5 things that I think.
Can you add to those?
Well, I know I'm doing something right because everything that he said I agree with. No, but to add to that, I think, look, people want to communicate with each other at the base of it, right? And these are tools which will enable that to happen. So for instance, 5G and the metaverse will enable people to live their best versions of themselves. And if you poll Gen Z audiences, a lot of people prefer living in that environment, which is what they perceive to be the best version of themselves in the virtual world. So what is happening, right? And then gaming is the gateway to that metaverse. So essentially what you're doing is you're just enabling them to communicate, and eventually, commerce also comes in there, and that's the overall evolution. The other thing which he spoke about is AI, right? I know people talk about AI as well as data, right? That's been a big theme over the course of the day today. But if you really look at it deeply, data itself, like the duopoly of Facebook and Google, is breaking because other than the larger government regulations, what's happened is that fissure has allowed a lot of niches to form. If I can, I'm rather at the risk of being a little esoteric, if I can find a way of increasing a conversion of a business through marketing technologies from 1% conversion, someone opens an email at 1% and then I buy something, versus 2%, it changes the business's outcome. And if you can, I don't know how many people are up to date, have been following ChatGPT, you can try to automate that process in as human a way possible to then eventually lead to better outcomes and monetization for that business. And we love businesses which make other people money, right? Yeah. It's as simple as that. So we try to break it down to the most basic elements.
Let's have a quick question from the audience. Gentleman at the back, I can just see a hand. It's probably going to be the only one, but make it a goodie, no pressure.
As far as media tech is concerned, any one of you can answer it. What do you think it means for the tradition, what was thought to be traditional media like newspapers and magazines?
Yeah, I think I'll take a stab at it. So I think it is a journey of transformation. I'm a big believer that television is not dead. I know a lot of my friends love to say that, and it sounds really cool. But at least when I look at the country that I come from, we're 1.5 billion people, 180 million television sets, 50% of which Mark has never seen in probably a long time, cathode ray tubes, right? And so when you think about it, television is always going to be an aspirational item in a developing country, right? However, the mechanism of broadcast is going to get totally disrupted, and we are seeing that happening. So, satellite-based broadcast is dead, will die eventually, if not dead today, and it will move to IP-based systems. It will move to connectionless experiences across devices. And I think for a television company, whether you're in news, entertainment, or sport, you've got to be able to adapt to that new world. But I'm a firm believer that TV is here to stay. So that's personal. And I think that's at least in developing markets. If it's print, I'm not that hopeful because I think print is getting far more disrupted much more quickly. To go online and build your own ad tech platform and monetize the way we do is really hard because content companies are traditional and their strength is content. Their strength is not technology. So I always tell my friends in that part of the world that play on your strengths, which is content, and start thinking about how you create differentiated experiences that people will pay for, whether you're again in entertainment or sports or in news, which means far deeper opinion and analysis rather than just breaking news, which is a commodity. So I think those are the two areas that I see as opportunities for traditional business.
50-50. Like some people will thrive, some people will die out because, at the end of the day, we may shout from the top of our voices, and I've spoken to large media owners, people have legacy issues. If you're making money from a certain source, and it's like the frog boiling in water, right? And that's what happens. And just the other thing is media tech is so vast that these guys pick up a narrow niche of that also, and they can truly build it into something which will eventually disrupt their existing business. But it takes kahunas to do that, basically. So yeah.
One small example is the city that we're living in. I don't know how many of you are aware, but billboards in this end of the world are really big. They're almost, in terms of market size, if I look at the size of TV or digital in India versus billboards is not even 2% of that market, right, combined. Whereas in UAE, in Dubai, it's over 10% when I just look at the ADEX. And so what I've seen when I talk to guys here, what they're doing really well is traditional billboards have moved to programmatic buying where displays are often being changed. And that's an example of an offline business that's actually driving transformation quite nicely for a decent share of revenue in this country, right? So just an example.
Gentlemen, you were brilliant. Big round of applause. Thank you very much.
Thank you very much.
Thanks a lot.
It's an honor.
Thank you. Thanks a lot, Mike.
Thank you. Right, stay there. Don't move, everyone. Here we go. Welcome back. 2023 investment outlook, light at the end of the tunnel. Let's get them on stage. Big round of applause. Karan Mola, partner B Capital. Rajan Anandan, MD Sequoia India and Southeast Asia. Gautam Shroff from Nuvama and Saroja Yaramilla, founder and CEO of Melora. Thank you all. Thanks for joining us. Okay, let's have some fun. Sum up 2022 in a word, one word. Sum up this year in one word from your perspective. One word.
I'll go first. The easy one. Volatile. Volatile.
Volatile. We're going to come back. Volatile.
Slow.
Slow. I like it.
India outperformance.
The best growth we've ever seen.
Okay, elaborate on all your points.
So I think volatility is the easy one. We started the year with, being at the top of the wave, and we're ending with a lot of questions in people's minds, I think, which are all valid, and a lot of, truisms which people took for granted at the beginning of the year are now, for the right reasons, being questioned. And I think, at least from my perspective, we've sort of come back to the way we were possibly doing business and interacting back in 2020 or 2019. So let's see where we go from here, but it's definitely volatile and interesting. That was the other word I was going to use.
Yeah.
No, it's been a slow is good.
Slow is
fast is bad most of the time. So I think it's been a year of slow for startups because they've been slowly but very quickly towards the end of the year focused on quality. It's been a slow year for most investment firms because they have had more time to invest. They've taken their time to do diligence. They've taken their time to make sure that these are high quality businesses. And I think in general, for the world, it's been a slow year compared to 2021 and the second half of 2020 on just about every dimension, except maybe on the dimension of defense, which has been very fast.
Slow is good.
I think the way India outperformance is showing now, India has come to the limelight. So I agree with Rajan that probably the first half there was Russia-Ukraine war. But post June, July, I think the second half has been really good. And the way India has come back, the retail...
Why has it come back? Why is it outperforming now?
Retail money, one word to answer. All institutions, all the tourist money, all with suitcases disappeared. There was huge FI outflow, and it was only retailers who actually became stabilizers. So just if I have to answer that in one word, it's retail money.
Yeah.
Yep. So I think I'm a minority on this group because I'm a startup founder. I'm an entrepreneur. And from our perspective, we've seen the best year of growth, and not just for us, but in our entire sector. I think if you see consumption story in India is extremely strong right now. And if you keep aside the discussion on funding, rounds, valuations, down rounds, all of that, and you focus on the business fundamentals, which is what we entrepreneurs should be doing all the time, then it's never been a better time to be an entrepreneur in India across sectors. So it's fantastic right now from a demand perspective.
And as investors, is that how you view it? Has it never been a better time to be an investor right now? How do you look at the investment landscape in 2023? Let's look forward another 12 months.
Yeah, I think it differs a little bit by what stage you're investing in.
Yeah.
I think primarily being early stage, and same as Rajan, I actually don't think there's been a better time. I think, I forget the exact words in one of your morning sessions, but it was vanity, sanity, reality.
Yeah.
And I think those really echo what a lot of us feel today. I think Saroj's point is very valid. The best founders actually find their footing in these kinds of markets. Think about building businesses the right way. The right sort of investment partners also come out and hopefully encourage that sort of behavior. So given the amount of capital that was raised and the amount of dry powder, I actually think there are very few places in the world and very few stages as now to invest in. And so I actually go into 2023 feeling quite positive, but I think still being realistic. I think just having that measured approach is very important.
Positive, realistic, measured?
Yeah, look, I agree. It's a fantastic time to build because it's less competitive, talent's more reasonable, markets are not hyperbole, customers who buy will buy only if your product is real. It adds significant value. So it's a great time to build. It's also a great time to invest because, you can take your time. It's not hyper competitive the way it was, let's say, in 2021. You can, pretty much get reasonable prices because, again, given the market environments. And the founders who are building today are really, and especially the ones that will make it through 2023 and possibly even 2024, are going to be very resilient and they're going to build very high quality businesses. So I would say great time to build, great time to invest, and the most important term going into 2023 is quality. It is time for very high quality. If you've got an average quality business in 2023, you are toast.
Right. What
will
is
not be-
quality? Define quality.
Quality is, you've got a viable economic engine. If your business if you lose money on every order, if you lose money on every transaction, if you lose money on every sale, that is a very low quality business. So at the end of the day, look, quality means either you've got a path to profitability or you're profitable, but in a few years out, not immediately, but let's say 3, 4, 5 years out, you've got to be able to generate significant amounts of cash. And the only exception is if you're in a deep IP business, semiconductors, you're trying to come up with the next big breakthrough in life sciences, it's okay to take 4 or 5 years before you're going to launch a product. But for everything else, you've got to have clear line of sight to having what we call an extraordinary economic engine. If you don't have an economic engine, you're toast. And unfortunately, look, the reality is across the world, not just India, China, US, Latin America, GCC, Africa, Europe. Over the last several years, you've had a bunch of businesses that unfortunately really have no sign of having an economic engine. So if you can't build a very strong economic engine, 2023 is going to look a lot worse than 2022.
Do you have an economic engine? Quality, Saroja?
I think so,
Are you super quality or just quality?
It's a very high quality business.
High quality.
Very high quality.
Yeah.
2023 is about very high
India's
quality.
fastest growing jewelry brand.
No, I think, entrepreneurs that distracted themselves from the fundamentals of the business. And I have to be honest, over the last 7 years of being an entrepreneur, there have been times that we've gotten carried away with the amount of capital that was coming our way and wooing us. And we have all made those mistakes, and I think this is a fantastic time for entrepreneurs to learn very fundamental lessons about building a long-term, profitable, sustainable business. And I hope that actually this gloomy times last a bit longer, because I fear, the biggest fear I have for the entrepreneurial ecosystem in India is that greed overtakes fear faster than fear overtakes greed. And money will come right back. And when it does, entrepreneurs will forget the lessons that they've learned. So it's very, very important that the entrepreneurs in India or globally do not forget the lessons of building a strong, economically viable business in the future after money starts coming back.
So I echo Rajan's and Saroja's thought. I think it's a fantastic time to invest for a simple reason that the greed of the promoter and the greed of the market is there's a reset that has happened. So you'll get the assets at the right price. You were making investment where all the fancy valuations are gone because we've seen what has happened when you just sit with the greed. So I, as a banker, always tell the companies that we take public that, leave 20-25% on the table. Then the capital market checkbook is always there for you. And now I'm actually seeing that. So given our own firm's example, we're sitting on 4 deals, ain't happening for last 6 months. In the last 1 month, all 4 went through because everybody was willing to come at a new valuation. So there's a reset, and that is a reality. So I think it's a fantastic time. You're getting assets at a real price.
How much more do prices have to come down? Do valuations have to come down?
I think everything's in the price already. A lot is built in already.
Private and public?
Yeah, I think, look, basically the reality today is if you have a poor quality business, you got a mediocre business, you're just not going to raise at any price.
Right.
We're in a market where basically quality trumps everything. You're just not going to be able to raise. I mean, we're not interested in investing in mediocre quality businesses. Actually, he probably won't even take it for free. No, seriously. Because the reality is if you've got an average quality business, you've got a mediocre quality business, you're just not going to be around. That's the market we're in. So valuations have clearly corrected. We saw that in the public markets. Beginning of the year, it happened in growth stage, probably sort of end of Q1, Q2. Private markets all the way through seed, we've seen it correct. And, it's really about quality now.
Yeah.
And if you have a quality business, by the way, you'll be reasonably valued. You're not going to get, extraordinary or exuberant valuations that you might have been able to, command in, let's say, 2021. So, things are fairly priced. But I think this notion that it's not just about price. Today, the reality is if you don't have a very high quality business, you will just not raise at any price.
Yeah.
Biggest worry of 2023? What's your number one worry? It could be geopolitical, macro, whatever, micro. What's your number one worry of next year and why?
I think for me, it's much more macro and geopolitical because they're sort of intricately related. Because that has repercussions at least in the short term. Even though there is dry powder, most of what we do is so much built on just the right sentiment and the right environment. And I don't disagree with what Rajan's saying at all. I think quality trumps everything, but in an uncertain environment, you kick the can down the road just to take that decision. A lot of that did happen this year. It happened in 2020 in the early part when we didn't know what was happening with COVID. And given where things are right now, those things kind of just playing out the right way and hopefully settling down by the mid part of 2023, which is, I think, best case at this point. At least then, keeps the outlook for the second half of 2023 into 2024 much better, because most people are taking more of a 9 to 12 month view as opposed to immediate 3-month view. So that, I think, sitting here where we are right now in December, that's probably my number one concern.
Number one?
I think just making sure that all of us collectively, founders, investors, we just have to be very, very realistic that this is not going to turn around the corner come 90 days from now, right? We're in it for the long haul. There's lots of uncertainty. Will interest rate hikes tap out? We don't know. What's going to happen in Ukraine? We don't know. What is China going to do? We don't know. Like, there's so many uncertainties here, right? So I think we just have to be very realistic and say, in business, it's always good. You plan for the worst and then you outperform.
Is there one of those uncertainties, China, Ukraine, interest rates, that worries you more than any of the others?
Actually, I don't worry about, because none of those things we can control.
Yeah.
Right? What we worry about is, are we partnering with the best founders? Are we making sure that we help them build high quality businesses? Those are the things we can control, right? As our partnership, unfortunately, we can't control the outcome of Russia, China. Russia, Ukraine, we can't really control what the Chinese president does or doesn't do. And we certainly can't control the interest rates in the US. But we know what we can control. So we really focus on things that we can control. And that's what we worry about. We wake up every morning saying, we've absolutely got to find the absolute best founders on the planet. We've got to partner with them. And then how do we make sure we're going to make them successful? So it's not something that, we try to, as a firm, we try to focus on things we can absolutely control.
Number one worry?
I think there are 4 big important themes for 23. Inflation, recession, China reopening, and the Fed pivot. So I think 23 will be a year of 2 halves. The first half we'll be addressing inflation and recession. I want to believe recession will be short-lived. And the second half will be all about Fed pivot. So nobody knows, will it be a soft landing, will it be a hard landing, markets will react differently, will it just be a pause? Even if Fed pauses, markets could cheer. So it's all about, I think inflation we are done with, rate cycle is behind us. Recession, it's almost there, it's predicted, but I think it will be short-lived. And China reopening, you never know how China reopens. It could be open, shut, open, pause. You don't know how China reopens, and the real consumption and for the industrial commodities will come from China. So these are the 4 big themes that I'm focusing on for 23.
Saroja, what's your number one worry?
The worry is that all of us have become very short-term focused, and we're only talking about 2023. And if you think about the future of India, and at least speaking about India and the consumption story and the demographic dividend that will play out, this actually is the right time to invest. But neither founders nor investors are, given the uncertainty, are able to focus on building for India for the long term. And that's very unfortunate that it is happening at a time like this for many factors which are not really in India's control. And as a founder, I just really feel terrible that we are not able to invest for growth, which we should be doing at a time like this. So it's very short term, our mindset.
I disagree with that completely.
Yeah.
I mean, as venture capitalists, we invest with a 10-year horizon.
Yeah.
We're not investing for, to exit in 2 quarters, right? I think, I don't know, but I think as venture capitalists, we are absolutely investing for the long term. We are very, very focused on investing right now. I mean, we've probably made 10 investments in the last 3-4 months as a firm in India. But I think what we're saying is, you have to build a very high quality business. Right? So if you don't have a high quality business, it doesn't matter. Yeah. You're not going to raise. So I just wanted to clarify, I think at least, Karan should add to this, but I think from a...
No, I wasn't actually debating what Rajan was saying. You have to have a high quality business always. Yeah. Through good times and bad times, a founder should ever build. When is it a good time to build a bad business? Never, in my opinion, right? So you should always build a high quality business. Having said that, I think the uncertainty, whether it is for founders about raising capital or whether it is for investors, for everybody, I mean, of course, Rajan is right. You should always have a high quality business, but we should always, think a little bit more long term than we are doing right now, especially if you're building in a country like India. And we are making some short term decisions, I would say, as an ecosystem. And that's what I'm a little bit concerned about.
I give you all £1 million, dollars, whatever. We'll do dollars, the global currency, some might say. Invest it for 10 years for me. Where'd you put it? Where'd you put it? Where'd you put it? Probably into your own business. Let's say 10 million. Let's have fun. 10 million, I hand it to you right now, invest it for 10 years. Where'd you put it?
So, I think that's an easy one because we do invest with a 10-year view. So today, our focus is pretty equally between businesses building from India for the world. So I'm talking about what I'm doing as part of B Capital, which could be a combination of SaaS and consumer-led businesses as one. I think the second would be healthcare and digital health businesses because that is something which is so underexposed to the capital markets, private and public, that at some point the inflection point has to happen. I'd like to believe it's in the next 10 years. And the third would be around climate and sustainability. I don't need to go into why. I think that's a very obvious one. And I think there is another sector where India will play and have a very meaningful role over the next 10 years. And the sort of innovation that we're seeing now, in light of everything that's happening, makes me believe that is a business opportunity as well as having all the right elements around impact, etc. So those would be three areas that I would, and I'm putting your money where my mouth is, because that's where we're investing. So that was an easy one.
Yeah. New battery chemistries.
All 10 million?
No, yeah, all of it. Yeah, because basically, look, we got to have new battery chemistries so that countries like India, we are not dependent on minerals from places maybe where we won't be able to get the minerals. So, we'd love to meet a company that's got, and by the way, there are a few that are emerging out of India now, because we're seeing a lot of very interesting IP come out of India. And that's really what we're looking for. We want to find a new battery chemistry that is not lithium-ion.
What sort of return might you receive in 10 years if you were to invest in that?
Yeah, if it works, it'd be bigger than Tesla.
It's uncapped.
Yeah, that's
bigger than Tesla.
Yeah.
And by the way, we will build companies in India that are bigger than Tesla. So it may take us a little longer than 10 years, but we'll get there.
This audience is on fire. A lot of clapping going on. Good.
It's good we have an audience.
Yeah.
Also very good.
10 million, where's it going?
Needless to say, I have to outperform, right? I'm taking care of your money. So my broad theme would be ESG.
Yeah.
Probably anything to do with green, because we've seen COP 26, 27, 28. Everything's only spoken. Implementation, application on the ground, everything is yet to happen. So I would go and identify companies which are helping them achieve those goals. So anything to do with green energy, green hydrogen, that would be my top focus.
I think battery chemistry, now we have 10 plus 10. We have 20 million going to our battery chemistry company.
And you have a third from me.
Saroji, you can't invest in your own company. So what do you do with my 10 million?
Grow the business, knowing fully well the profitability will be around the corner.
Yeah.
Be confident about that. Yeah. So, but obviously I'll have to sit this one out. I'll invest in consumption story of India any day. It's not just in my sector, but I'm long on India and long on Indian consumerism. So.
Let's get a question from the audience. There you go. Lady there. Let's have a microphone. Remind us who you are.
Again, yes.
We like you. We like you.
My name is Shraddha. I help companies enter and diversify in a new market. So we've seen a spate of sort of unicorns and IPOs in India. So from your perspective, 3 companies that have that growth engine that you've been talking about, they'll be India leaders, global leaders, and 3 companies who made it big despite having that economic engine and who you think are overestimated.
Wow.
Indian companies.
Sorry, what's the question?
Who's going to be brave? Sorry.
Yeah.
So 3 companies in India who you think have made it really big and have that growth engine that you're talking about. They can be India leaders and global leaders. And 3 companies who have made it big but do not have that economic engine and you feel they're not going to do anything about it now?
Yeah, I think the second question, the three companies, I think we shall not answer that.
Come on, be brave.
Come on, we're not going to be brave today.
No, I think that one specifically, I think the capital markets kind of show you which ones are valued and which ones are not valued correctly. I think the capital markets are probably smarter than private investors. So you'll get enough examples from that.
Yeah, I think in terms of companies that are very interesting, look, the two most profitable companies in India are basically Zerodha and startups, right? The way we define startups, I mean, one's really been around for a long time, are Zerodha and Zoho, right? So they both generate over 2,000 crores of net profit per year. And if you were to ask me a third company, that would be Infosys. They've generated 1,000 crores of net the last year, right? So these are three very, very strong economic engines. In fact, if you look at the top 500 startups in India, over 50 of them are already profitable, and our estimates is that by 2024 end, it's very likely that fully a third of them will be cash flow positive. So I know there's concern right now about Indian startups not being profitable, etc. But the reality is, environments like this, they really get founders very, very focused.
Yeah.
Laser focus on one thing, which is break even and get to cash flow positive.
They were all bootstrapped.
No. Infosys was funded, right? Went public. Yeah. No, there are lots of other companies that
I'll just add maybe to that. I think three companies which are maybe not on everyone's radar, but I think will hit the public markets in the next 24 months. One is a company called FirstCry, and they would have gone public already. They're cash flow positive. The other is a company called Lenskart, very similar. And I'm biased since I invested in both of them, but they will hit the public market. And to be fair, the third one is a company called Off Business, which is again cash flow positive. It's a tremendous story about how they built manufacturing from India, connecting businesses together. There's probably another 15 companies like that, 20 companies like that, which are cash flow positive, generating north of $500 million in revenue. So these are large, sustainable businesses, which when they do hit the public markets, and Gautam will know this much better, will actually create that sort of demand from investors, both retail as well as institutional.
Okay, the time police is in my ear. Big round of applause for our wonderful panelists. Thank you very much. Edie is chomping at the bit. She's waiting in the wings. Well, she'll be with you in just a second with the final panel of the day.
All right, we have something incredibly special for you right now. We all think and even worry about the future. But in this session, we're going to be speaking with two government ministers who have the job of getting us there. We call this session Partners in Disruption and Innovation. Now, disruption, you can come right on up if you like. Disruption does not seem to need very much help. You can sit just there. There you go, and just that one, and I'll sit here. The trick is to work together to invent and execute the innovations that will get us successfully to the other side. So, delighted to have two men with us doing the hard work. We have the Minister of State for AI, Digital Economy and Remote Work Applications, here, host from the UAE. Thank you so much for being with us, His Excellency Omar Sultan Al Lama. Delighted also to have with us India's Minister for Digital Economy and Entrepreneurship, Honorable Rajiv Chandrasekhar. Thanks very much. Fantastic. Oh, we can do better than that. Come on, huge round of applause for both of them. Right. That's what we like. So let's get us started. Your Excellency, you have said before that you see India's digital fingerprints all around you. Tell us what you mean.
I think I'll be known for this quote for the rest of my life. Actually, just to make a correction, I did not say digital, I said fingerprint.
Okay.
And the reason for that is because if you look at any company, any tech company, any solution that people use today, and if you dig deep, you'll find an Indian there doing some of the hard work. And that is just testament to how robust, how incredible the talent is, regardless of where they are. So if you look at Europe, you'll find Indian talent building the tech ecosystem in Europe. If you look at the Middle East, if you look at the US, if you look at Latin America, if you look at Asia. And in my humble opinion, I think that what we're seeing right now in terms of the Indian tech scene booming and the digital scene booming is just the beginning. So we've seen Indian talent around the world build the digital landscape. I think at this point of time, they're going to go back to India and make India the capital of technology globally.
I can see you nodding. I know you're with His Excellency. You know, I'm from California, which for many years we set the rules on automobile emissions by being tougher and smarter than other states. And in the West, there are many people who think that Europe has emerged as this role of setting the rules for big technology companies. But in my conversations over the last couple of days, I think that we're missing a trick, and it feels to me like India could well be setting the stage as the big giant there. What do you think?
I won't disagree with you to start with. I think, I mean, I look at it a little differently. I don't think we are in a race with Europe or any other country for that matter. We see the technology opportunity very differently, I think. We see the need to protect our consumers' rights to data as one clear obligation that we have. But we don't see that as a binary or at the expense of excluding or, in a sense, slowing down the innovation ecosystem that is underway in India and in partnerships with other nations that work with India. So I think we have evolved a framework, and I think you're alluding to the digital personal data protection law, and there was this narrative that the European GDPR was the gold standard. And I have said, when a question was posed to me recently about that, I said, look, we respectfully beg to disagree. We think we will chart our own course. We are, as you know, 820 million Indians online. We are the largest presence on the global internet. And so we deserve an opportunity to shape our own destiny and lay out the rules and laws that should govern the future of the internet on our own. So I think that is where we come from. We see this opportunity as something very important for our young Indians. And we have framed this framework of rules and laws that will, like I said, address what seemed to be a binary of consumer protection versus innovation. We've managed to do both.
Interesting. So I'm going to get some big questions out here at the beginning, but I am going to turn to the audience. So have a think about what you would like to be asking them. I wonder, Your Excellency, what's the message from the FTX debacle that you take home? Do you think the world needs stronger regulation of cryptocurrency to protect the potential benefits? And who should those regulators be? And I think it's really interesting because the folks that I've spoken to here about metaverse, Web3, crypto, blockchain, have a very different reaction than when I speak to people in the US about what's happened.
So first, Sam Bankman-Fried was arrested today. So for those of you who really care about the issue, I think justice is going to be served soon, right after he is able to disclose why he did what he did. I am pro-regulation for a number of reasons. First, if you look at what the UAE did, our Virtual Asset Regulation Authority went and issued FTX a MVP license. What an MVP license is, it's a license not to allow these companies to operate, but tell them, come and open your books. Show us how you operate. Show us the actual inner workings of your company in a way that is trusted from both parties. And I can confidently say that they were not able to present that, right? So that is why FTX did not get a full license. And many other companies as well did not get a full license. One of the reasons that I think regulation is needed, especially when you talk about a new technology, it starts off as a wild, wild west. It starts off with people who say the right things, but might not necessarily be doing the right things. And if you allow for it to continue to grow without any regulations being introduced, without any opinion from the government, then you see the most amount of pain. But when the government comes in, gets involved, and says, look, we're willing to work with you, but try to show us what you're doing and how that works out, and also tell us how you're protecting people, then the chances for error are going to be lower. Think about it this way. In the early 90s, we had the internet becoming mainstream. We had a lot of companies come out. We also saw some of the debacles like pets.com being sold for I don't know how many million, and it turned out to be not worth that much. When the dot-com bubble crashed, people thought that the internet was over, and that's it. Do you know what happened in the same time period? The UAE doubled down and announced a full city for the internet, called the Dubai Internet City, and said, it's not Dubai Microsoft City, it's not Dubai Pets.com City, it's the Dubai Internet City. We believe in the underlying technology. It's the same with blockchain. It's the same with the talent that is in the crypto space. We believe in the talent for those who are doing something genuine, that are doing something good. We believe that blockchain has great applications, and we are going to continuously work towards that. Anyone who's investing in this space, and I say this not to the people in the room, but anyone and everyone that I meet, it is a risky industry. You don't go into a casino looking to make guaranteed returns. Right? You might make returns, but today it is an unproven sector. You should not go into it without being aware of the challenges that might come out there. Again, our job as a government is to try to decipher what's happening, remove ambiguity, and then celebrate those who really do a good job on this front.
Interesting. Minister, did you want to come in as well?
Yeah, no, I don't disagree with His Excellency. I will add to that the following, which is that I do believe that governments around the world have lagged behind innovators. And for a number of years and indeed decades, there was almost a free pass to those who came onto the internet. And as long as you said you were doing something innovative, regulators backed off, and there was almost an argument that you don't get governments involved. I think the governments around the world are now catching up to the fact that the internet represents good, internet represents innovation, but the internet also represents user harm, it represents criminality, it represents FTX, it represents all kinds of players. And so therefore there has to be this framework of rules and no-go areas for all platforms. We in India are building that framework, which is not to say that we will strongly regulate. I don't like the use of the word strong regulation with the internet and innovation. These are, in a sense, opposites and contradictions. So we will lay out these boundary conditions of openness, safety and trust and accountability, which we believe will allow the innovators and the true innovators to flourish, and those who want to, do an FTX not to.
So, well, let's talk about one of the innovations that India is continuing to build. We had a whole session today on looking at India's stack, which is absolutely fascinating and still being built, in fact. Really on the cutting edge, India is, of electronic payments. It has been a universe dominated until relatively recently by technology companies from the US and China, but I'd love you to explain, Honorable Minister, the significance of what India is building.
So I think if you go back to the genesis of the India stack and the problem that it was trying to solve, and the problem was that India as this large democracy had for decades been stuck with this narrative that government payments and government subsidies did not really reach the beneficiaries without corruption, without delay, without leakage. And that was famously captured almost as if it was a fate and destiny by a prime minister in the 80s, saying that 100 rupees that left Delhi, only 15 rupees reached the citizens. Right. He almost said that as if it was something that we were fated to endure for the rest of our lives. And then when Prime Minister Narendra Modi came in 2014, he really said we will deploy technology. We will deploy technology to create identities and do identity authentication and then create a layer on top of that which would be payment. So it solved a government problem. It solved a problem of trust between government and citizen, but has spawned a tremendously innovative and tremendously fast-growing ecosystem around what has now become the India stack. The India stack today represents an opportunity for the global south, countries that have in a sense been left behind or have not been able to afford the digitization that other advanced nations have been able to invest in. It affords them an opportunity, it gives them an opportunity to rapidly climb up that ladder of digitalization that many other countries have embarked on and successfully achieved. So I think that is what the India stack represents. It represents for the first time, in a sense, the ability for small countries, large countries, big countries who have, in a sense, been kept away from the technology digitalization opportunity to rapidly climb up that ladder and deliver to their citizens, deliver to their governments the benefits of technology. And so we are very excited by it, and me and the Excellency here have been talking about how we can take the India stack, cooperate, and making sure that's available to more and more countries around the world.
Interesting. So, Excellency, why don't you talk us through what you're thinking? How could the UAE use the India stack?
So, I just want to add on to what His Excellency said. What the India stack provides is honestly a no excuse, unfortunately, mandate for countries that say it can't be done. Whether you are small or big, a country the size of India was able to implement something that is that cutting edge within less than a decade. It is, I cannot state how incredible that is. And it was not imported. The reality of this, what makes it even 10 times more impressive for me as an individual, and I think for a lot of people, is the fact that it was not an imported solution. It's easy for you to plug and play something that's imported.
Right.
To build it from scratch and to scale it to 1 billion people in less than 10 years, you can't do that even if you're a private business in Silicon Valley. So we go back to the first point I made when I talked about the Indian fingerprint. It just is clear that what we are seeing right now is a snowball that is moving much faster, getting much bigger, from India dominating the sphere globally. And the India tech stack is a great example of that. The thing I would like to say is, look at the diversity of the Indian population internally from the different provinces. If you're able to let everyone agree that this is the right solution and use it in a way where they believe that this is going to be a way for them to empower themselves and make their lives better, and as well have a higher trust within government as well and have less friction, you're able to do it across continents. And that's our belief here, and that's why we're talking with the minister to see what we can do. I don't think that there's a reason why the African continent can't use this stack within itself, as well as in certain countries amongst themselves. Now, maybe there is going to be some requirement for lobbying, maybe there is going to be some requirement for explaining what happens and what doesn't happen on this front. One thing we're doing is we're looking at lessons learned from the India tech stack and seeing how we can move aggressively in the UAE to have a similar solution. I think we are going to take this to other countries that are willing, and the Indian government has been gracious enough to say that we're willing to open it to other countries. So there's a lot to be done. Hopefully both of us are going to be able to do it.
Give me an example of what you have been able to do. I mean, I think about I'm a US taxpayer and a voter. I received my check from President Trump, I think months after it had been written, all the way in the UK. And I believe that when you sent payments to Indian citizens, they arrived within instantly.
Yeah.
And it took 2 weeks to figure out who needed to get what, and then the payments were actually done in 24 hours, right?
Right.
Any other example you'd give me about what's possible with this?
No, look, I'll tell you my personal experience on this, and I travel quite a bit around the country. I had the opportunity recently to go to a part of India where no minister has visited since independence. And so it was a remote part of the northeast of India, and I reached there, and the next morning there were 500 community members in a room like this, and they obviously were very happy to see a minister and all of that. And I asked them, look, how many of you have this direct benefit transfer, which is the digital, and every one of them put up their hand. And how many of you have been receiving this money instantaneously in your bank account? So this remote location of India, which otherwise would not have seen the presence of the government of India, or would have seen it in very, very exceptional and rare circumstances, was now dealing with the government of India on a real-time basis every day, on regular intervals, and getting all of what was due to them, pensions, subsidies. And during the entire COVID pandemic, there were people who were receiving benefits and payments into their account directly and keeping them safe during the pandemic. So
How did that make you feel?
No, look, we've all been evangelists of technology, but this is some real transformation, real impact on people's lives who otherwise would have been helpless, would have been left to fend for themselves. So I think, in my opinion, the real narrative about India's stack, at least from our point of view, is that it is really mainstreamed. Every Indian who otherwise would have stayed out of the system or would have been at the edges and the periphery of the system and would have had to deal with all of the problems on their own. Now they have been mainstream, they feel empowered, they feel connected, and they feel like they are talking to the government of India at moments of trouble and crisis. So I think that is my experience, and after being 3 decades in technology, I mean, I can tell you this, I mean, I've seen chips being launched and technologies being launched, but to see the people who've been otherwise left out of governance being mainstreamed and connected in this kind of a way through the power of technology is extremely satisfying.
Excellency.
So, I just want to say 2 things. The only way that you can combat bureaucracy is through digitization, because there are certain levels of scale that you cannot achieve with conventional thinking of I'll throw people at the problem and I'll throw conventional infrastructure at the problem. But with digital, you can access people with the speed of light, distance becomes irrelevant, and you're able to get to them 24 hours of the day. So I think the approach that India had was really wise, and I think it was the right approach. One thing that you alluded to a previous question to His Excellency is the fact that is India part of the race? And I think one important lesson learned, and this is how we approach things in the UAE as well, is if you look at physics, if you're in a race and you start behind someone, you need to be X percentage faster than they are to be able to catch up and then exceed them. If you don't start in the race altogether and go into another race, it's up to them to follow you. I think that's what India did. India did not emulate anyone. They went and they created their own path that today others are emulating. And I think with the UAE as well, when it comes to looking at the India stack, what we want to do internally is take the learnings from India, because we have these joint meetings at all times, and then see how we can carve out our own path that is relevant for a country of our size, that's relevant for a country of our position as well.
What are the kinds of things that you're interested in exploring with the stack technology?
Well, look at, I think the government applications are proven, right? The ID, internet access, banking, etc. What's really interesting to me personally, because I lead also the digital economy side, is how you're able to open up that infrastructure to create companies out of them. Today, we are blessed in the UAE to have a lot of incredible companies coming out of the UAE, becoming truly global and being successful. But they are doing it because government is not getting involved in their business. How can government provide them the infrastructure necessary to be able to 10x their outcomes, right? Maybe our infrastructure is different to India's infrastructure. If you look at our global infrastructure when it comes to port operations, right? DP World operates 78 ports around the world. 10% of global trade goes through the UAE, right? How are you able to open this up to create the next logistics unicorn globally? With Emirates Airlines and Etihad, how are you able to open up the aviation data to create the next $1 billion or decacorn in the aviation industry, services, etc. So I think what we need to do right now is customize this approach that India has endeavored on to what our strengths are, and then work with India to ensure that there's a win-win situation. Win for the UAE and win for India. And that's what the SEPA agreement is all about.
Interesting. All right. Well, I want to get to the SEPA agreement. I want to make sure we allow the audience to ask a question. Have we got a question for our honorable ministers? Otherwise, I get to keep asking. Any questions? All right. So you mentioned there the SEPA agreement. So, one of the goals of having you both on stage here together is to highlight the importance of partnership. And the SEPA, it's a bilateral trade agreement. It's in the background. So talk me through some of the areas where you think this partnership will flourish.
No, I think there is tremendous opportunity, and I don't want to really build any sort of boundaries around where we can cooperate and where we shouldn't. But the broader idea through SEPA and these conversations is that we would create these corridors of innovation and trust for technology and innovation of the coming years between entrepreneurs and startups and enterprises in the UAE and the startups and entrepreneurs in India. So I think the broader framework in our mind is that we have what we have. We will continue to expand the opportunity and make it more diverse in terms of technology and innovation in India, move from the consumer tech to semiconductors and electronics and AI and blockchain, but also have these really enduring partnerships between UAE and India and other countries, which are built around these corridors where data can flow, innovation can flow, ideas and products and devices can come out of those partnerships. So I think there's tremendous opportunity in the coming years in terms of what we can do together. And SEPA is just an enabling framework, but I think the minds and the bright minds in India and the UAE will really, hopefully, shape the future of technology.
Do you want to add to that, Excellency?
I think that was a great answer. I also think that there are certain variables of strength that both countries have that can build on each other. And I spoke about this previously. If we think about, first, I have a question to the audience. How far back do you guys think that the UAE-India relationship goes?
Yeah.
Raise your hand if you think it's 100 years. 200 years? 500 years? So not forever. So the oldest dated artifact that proves that there was joint trade and cultural interaction between the UAE and India is in a location here in the UAE called Saruq al-Hadid, which proves that there was interactions between both cultures, the Indian culture and the people that lived here 4,000 years ago. So 4 millennia. I think naturally we've always tended to gravitate towards each other because we are close in culture, the people are friendly to each other, and the advantages, the geographical advantages that we both have, whether it's India, the sheer size of India, and the UAE, the way that it becomes a hub and access to the rest of the world, as well as an attractor of people from around the world to come to it, ensures that something like the SEPA agreement is bound to succeed. We will bring, I think, the diversity of talent. We will bring the access of markets. I think India is going to bring the sheer ingenuity of the talent, the robustness of the infrastructure that exists there, the incredible solutions that India is providing internally that they can take to the rest of the world, as well as us bringing the world, if necessary, to India whenever India needs it. So there's a lot that can happen on that front.
Second question for the audience. All right, we do have a brave soul. We're going to bring you the microphone. Introduce yourself and make sure it's a question rather than a statement.
Good evening, gentlemen. This is Krishna Raj. I run impact-driven edtech out of India. Happen to be from the same college as His Excellency also. The question for both the ministers and especially the comment Your Excellency made that we would like to take the India stack and see how UAE can become a harnessing hub for moving into other territories like Africa. So I understand this discussion is happening at a G2G level, but how as entrepreneurs and startups we can get engaged so that instead of we walking alone, how we can collaborate with the government and reach our common missions together?
Great question. Let's look at historical examples, good historical examples of joint progress and improvement. So whether it's US-China is a great example of how much the US was able to do. It was mostly driven by the private sector. The government did very little. So the government agreed with the other government in terms of bilaterals on, and this was in the 80s, right? They agreed on certain principles, and then it was private sector to private sector, people to people, right? Our job is to lay the red carpet and welcome you guys in, whether it's here in the UAE or in India. Our job as well is to have understanding that entrepreneurs are going to be protected in both countries. And our job is also to ensure that there is frictionless flow of talent, of business from countries. Now, when it comes to the India tech stack, when you go and you promote yourself, when you come and say, oh, I have a good solution, people tend to take it with either a grain of salt or tend to feel like, okay, this is not for me. But when you have a third party, another country that actually is friendly to that country, coming and saying, look, this works, we've seen it, and if you'd like, we can actually open the doors. It becomes a lot more smooth for the countries to work together. The next step is, after these solutions are embraced by countries, is to see how we can ensure that there is flow of business from India to the countries that embrace the India tech stack, as well as flow of business from the countries that embrace it towards India, whether it's entrepreneurs. And then as well, integration of financial systems, integration of IDs between both countries to ensure that people are able to either get residencies and things like that. I don't think it's going to be a one-size-fits-all. It will always be a negotiation between both countries to see what each one feels comfortable, but we will facilitate for sure as the UAE.
Interesting. Something to add?
Yeah, I won't add too much to that, excepting to say that the private sector and entrepreneurs are obviously central to proliferating the India stack and or customizing it to the demands of the customer country, as the case may be. But what we intend to do, and we've been having this discussion with His Excellency, that we will have a session, a kind of a workshop that we will host in India, where we will invite all potential SIs and other application layer developers and introduce them to our pitch on the India stack, so that you are much more part of that effort of evangelizing the India stack, and it's not just governments doing it. So we will certainly reach out to all of those who are interested and, in a sense, create an ecosystem of private entrepreneurs and startups who can support those countries who seek to adopt the stack.
Excellent. Any other question? Yeah, there's one back there. Keep your hand up. Yeah.
My name is Lakshmanan. This question is to Honorable Minister from India, Rajiv Chandrasekhar. With India assuming its presidency of G20, how is India looking at leveraging the India stack to the G20? And I know India has invited UAE part of the G20, and UAE has very successfully done the Coders initiative, which has developed that. How is India looking at combining forces with UAE and taking this across to the world? Thank you.
I think the previous answer and the previous responses were in part answers to your question. I think we are going to work together, which is the point that both of us have mentioned. The Prime Minister of India, Narendra Modi ji, has already said publicly that India stack is something that India will offer and work with other partners to ensure that that offering is available to the global south, countries of the global south, and those who don't have their own technology and they want to progress on this path of digitalization. So that is our avowed goal, our stated intention. We will work with partners as we've discussed, and we will of course involve the private sector and entrepreneurs and startups to make that happen. That is the long and short of what I can say at this point. But as this unfolds, and as in these various engagements, more and more countries show an interest in engaging with the India stack, we will progressively modulate our strategy and evolve the partnerships for that.
Interesting. I've got a question. A big priority for India is to enhance its place globally in semiconductor electronics manufacturing. How can the partnership between India and the UAE help this objective?
Look, Eddie, I actually think that, like I said earlier, I don't think there are any limits to this partnership. And to simply assume that this is about the internet only, or this is only about consumer tech, or it's only about the India stack, is a misreading of the real potential that exists between India and UAE, and really the design that has been put into place around this corridor of innovation and technology that we are trying to build. I think semiconductor design, microelectronics, innovation around AI, innovation around blockchain, high performance computing, all of these areas are of deep interest to us, and I suspect deep interest to the startups and entrepreneurial ecosystem in the UAE. And I am here, and we are working very closely together with His Excellency to see if these can be co-development models, because the time of the past where there were some countries who sort of built technologies and then sort of hung on to them and hung on to them is, in my opinion, a dated model. The model of the future is where partners co-develop technologies for the future, entrepreneurs under the enabling framework of governments that trust each other, develop these innovations for the future. And that, in my opinion, by saying that, I say that it automatically does not limit us to only A or B. And I have had already conversations with His Excellency about semiconductors and electronics, and we will explore that as we go forward.
Okay, interesting. So our time is up, but last word to Your Excellency. Thanks very much for hosting us here in the UAE. What's your message to the folks who are here, founders, funders, we've got entrepreneurs and investors. What's your message in terms of partnership and the next year?
So the next year, that's a loaded question.
20 days.
Yeah. Well,
next 365 days.
Okay, so my hunch is this. We hear the rhetoric globally about looming recession, about startups getting affected, about many different things being said, whether it's on the crypto space with FTX and other fronts as well. I think it's time that we don't start seeing ourselves in the lens of other geographies. We are just getting started. And I think that today this is our time. This is our time as a region. This is our time as countries. This is our time as investors, as entrepreneurs, as solution providers. And it is still greenfield because there's a lot that needs to happen that has not happened yet. So my ask for all of you is don't let the noise affect your planning. Yes, we might see some turbulence, but the turbulence should just make us more excited about how fast we can go and how far we can go. Another thing is, I think what is heartwarming and what really makes me optimistic is in a global rhetoric where people are talking about polarization, isolationism, the end of globalization. We have countries like the United Arab Emirates and India that are talking about more collaboration, more cooperation, more co-creation, and talking about a future that is a future of many rather than the future of few. So I'm very optimistic. I think that pessimism has never motivated people. It's always been optimism. And I think that it's our leaders today, the leaders of India and the UAE, that are rallying people to create a better future, and it's on us to do it. Thank you.
Fantastic final words. Well, thank you very much, both of you gentlemen. Let's give them a round of applause from India Global Forum. Thank you very, very much. Really appreciate it. Thank you. Thank you. Take care. Thank you. Thanks very much. Up to you. Well, I'm going to bring my co-host, Mark Barton, back up on stage. Mark, what a day.
Yeah. What a good day.
What a good day. What's your takeaway?
I mean, despite the economic, geopolitical backdrop, the optimism was infectious, cautious optimism, whether talking about India, opportunities for both founders and funders. I was quite surprised. I think in our bubble in London, because London is a bit gloomy, both on a weather front and on a political front and on an economic front. We had GDP data today which showed a contraction. You can be in that gloomy mindset. Clearly, there is a difficult backdrop. We just had US inflation, by the way, which came in slightly lower than expected. Year on year, it was just above 7%, but we're still at 7% inflation. But despite that, the funders and the founders were animated, were confident, said that this is an opportunity, quality, partnerships, collaboration. I was cheered.
Yeah, no,
it was
me
wonderful.
too.
It gives you a real lift, doesn't it?
It does. I would like to note there that you can take the man out of Bloomberg, but you can't take Bloomberg out of the man.
You can't.
Still following those inflation
I know the day. I'm so sad, aren't I? Following inflation. I mean, who else follows US CPI? I'm a true nerd. Yeah.
But I do want to say that point about optimism, I think I got in my session in both investors and the founders as well. Actually, this is a moment that you can dig deep, you can motivate your team, you
Yes.
get less attrition, you can get more team buy-in. It's a time to build something great.
Yes, build.
Build. So what have you got up tomorrow?
Tomorrow's big day.
Big day,
Big
IGF
day.
Studio back here in the forum.
Studio's behind here. We're in here. We've got 4 panels and then a whole load of 1-hour shows behind there. So you can flitter between the two of them.
Exactly,
Yeah.
exactly. Looking forward to it. Leadership, future of women. We've got
Yeah.
climate. We've got future finance. Well, it's been a delight for me to be here with you today.
Yeah,
Thank you,
ditto.
Mark.
Look forward to tomorrow. See you nice and early. We kick off at 10?
Kick off at 10.
Yeah. Have a good day, everyone.
then.
Have a good
Well
night.
done.
See you all tomorrow. Good.
All right, good.
Nice.
Welcome to India Global Forum, where India meets the world and the world meets India. Hear from the most dynamic business leaders and technology disruptors as they share their insights and secrets of success. Meet and network with the most influential, most innovative, and the most enterprising. India Global Forum is the agenda-setting platform. Visit www.indiaglobalforum.com.